Everyone, good evening to all of you. आज है 6th of January 2025. Welcome once again to this live analysis. स्टार्ट करते हैं आज का ये सेशन. फटाफट से एक बार मार्केट को देख लेते हैं. क्रूड ऑयल को देखोगे, परसों के लेवल हैं, फ्राइडे के माफ़ करना. मार्केट न्यूट्रली बना हुआ है. एक थोड़ा बहुत रेजिस्टेंस एरिया से नीचे आ गया था. यहाँ से वापस सेल कर सकते हैं. बीच में एक एफईजी था, वहाँ से थोड़ी बहुत बाइंग आई है. जो बाइंग में है वो लोग बुक करना. यहाँ पर एक थोड़ा सा सेलिंग का प्लान रख सकते हो. ओवरऑल व्यू बुलिश ही है, बट एक रेजिस्टेंस है तो एक्सपेक्ट करेंगे थोड़ी बहुत मार्केट यहाँ पर सेलिंग दे हमें. तो ये छोटा सा रेजिस्टेंस है. बाकी अगर ब्रेकआउट रीटेस्ट हुआ एसएल जाता है तो फिर वापस बाइंग का प्लान उसके ऊपर करेंगे. नीचे एक सपोर्ट अच्छा है हमारे पास, अराउंड 6283 उस लेवल पे आएगा तो वहाँ पर एक बाइंग का प्लान रहेगा. बाकी बीच में ये आपका एक एफईजी जोन है. ओके. सिल्वर को देखोगे, सिल्वर में भी परसों का ही लेवल है. नीचे एक सपोर्ट एरिया था, मार्केट एग्जैक्टली उस सपोर्ट पे आया था आज 29.50. वहाँ से एक सपोर्ट लिया था. ये जो ऊपर अभी जिस लेवल पर रुक रहा है 29.80, ये एक रीटेस्ट लेवल है. बहुत बार रीटेस्ट कर चुका है. यहाँ पर एक ब्रेकडाउन हुआ, एक बार रीटेस्ट, 2 3 4 और ये पांचवी बार रीटेस्ट कर रहा है. थोड़ा सा संभल के, ठीक है. अगर यहाँ पर सेल कर रहे हो, मेरे अकॉर्डिंग थोड़ा सा और ऊपर आके गिरे तो बेटर है. ऊपर एक और लेवल है, वहाँ पर एक ही बार रीटेस्ट हुआ है तो यहाँ पर एक बार और रीटेस्ट प्लान कर सकते हैं 30.12. फिर उसके बाद एक मेजर रेजिस्टेंस 30.40 के अराउंड है. नीचे सपोर्ट भी देखो, डीप लेवल से सपोर्ट लेके गया है तो दैट इज अ सपोर्ट 29.50, थोड़ा सा वीक कह सकते हैं. एंड उसके नीचे फिर एक $29 पे एग्जैक्टली एक ब्रेकआउट हुआ था, रीटेस्ट किया ही नहीं है तो वहाँ पर एक रीटेस्ट प्लान करेंगे. एंड डेटा की अगर बात करें, इफ यू लुक एट द डेटा फॉर टुडे, 6:30 न्यूयॉर्क सेशन की ओपनिंग, 8 PM यूएस मार्केट ओपनिंग, 8:15 सर्विस पीएमआई का डेटा है जो गोल्ड और सिल्वर को इम्पैक्ट करेगा. इसके अलावा आज और कोई डेटा नहीं है. मंडे है, थोड़ा सा मार्केट वॉलेटाइल भी रहता है तो ध्यान रखना, ठीक है. नेचुरल गैस में मंडे वाले लेवल है, कुछ चेंज नहीं हुआ है. सॉरी, जो फ्राइडे के लेवल थे सपोर्ट पे था, वहां से मार्केट में बाइंग आई, गैप अप हुआ था. फॉरेक्स में बाइंग आई, एक अच्छा मोमेंटम हो रहा है. देख लेते हैं रेजिस्टेंस कहाँ पर मिल सकता है. बाकी लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया है.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest from Washington, D.C., where Congress is set to meet on a snowy Capitol Hill today to certify President-elect Donald Trump's win in November. President Biden invited a group of new Democratic lawmakers to the White House last night and urged them to commit to a peaceful transfer of power.
Now it's your duty to tell the truth, to remember what happened, and not let January 6th be rewritten or even erased.
But the riot at the Capitol on January 6th 4 years ago has turned into a political flashpoint, and President-elect Trump is widely expected to grant swift clemency to the 1,000-plus people convicted over the events of that day. We get that story from Bloomberg's Doug Krisner.
The president-elect has downplayed the severity of the attack and denounced its prosecutions. And he's expected to fulfill his promises of swift clemency for the 1,000-plus people convicted and the hundreds more with pending cases. The question is how such a move would impact democracy and the rule of law. Mass pardons would also set the tone for how Trump might wield the presidency to reward loyalists and, critics fear, punish opponents. This year's January 6th election certification has, for the first time, been designated a national special security event. In New York, I'm Doug Krisner, Bloomberg Radio.
All right, Doug, thank you. Looking to our neighbors to the north, Canada's Prime Minister Justin Trudeau is said to be preparing to announce his resignation. The Globe and Mail newspaper says the announcement could come as early as today. It would trigger a race for the party leadership, with the winner becoming PM. Trudeau has been under pressure from lawmakers in his party to quit for months. Scrutiny grew last month after his finance minister, Chrystia Freeland, quit.
Oh, it's like at politics around the globe, Karen. South Korea's corruption watchdog has asked a court in Seoul to extend a warrant to arrest President Yoon Suk-yeol. The move comes after their first attempt last week ended in failure following an hours-long standoff with Yoon's security team. Secretary of State Antony Blinken is in Seoul. He expressed confidence in South Korea's acting leader.
We got serious concerns about some of the actions that President Yoon took. We communicated those directly to the government. At the same time, we have tremendous confidence in the resilience of South Korea's democracy.
And while Secretary of State Antony Blinken's in Seoul, North Korea fired an intermediate-range ballistic missile toward its eastern waters.
Well, Nathan, back here in the U.S., it's the first full workday with the New York City congestion pricing program in effect. And we get this story with Bloomberg's John Tucker. And, John, it's something of a first.
Yeah, in fact, this is the first such program in the United States, Karen. Yolanda Morales lives north of New York, and she's the main caregiver for her aging father who lives in Lower Manhattan. And her reaction is typical among drivers. She calls the toll an abuse of the working class.
To try and to make more payments just to do that, I think it's hard for a middle-class person.
Jenno Lieber, the head of the MTA, would rather focus on the benefits.
The good news for the core function of fire and EMS is one of the principal goals is to make response times faster, and that's especially important for EMS.
1,400 cameras and easy pass detectors were switched on Sunday to catch every vehicle traveling south of 60th Street and to hit them with a new $9 toll during peak travel times. This is all part of the plan to bring $15 billion to the MTA to upgrade subways and mass transit. The goal is to coax more people to use mass transit and encourage trucks to make deliveries overnight. One hurdle is that some residents don't feel safe on the subways. The fatal burning last month of a woman sitting in a subway car at Coney Island shocked the city, and there have been several stabbings and incidents of people pushing riders onto train tracks. And looming large over congestion pricing is the change of administration in Washington. President-elect Trump opposes it. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. All issues that are expected to come up when we speak live later this morning with MTA Chief Executive Officer Jenno Lieber. That's coming up on Bloomberg Surveillance at 8:40 a.m. Wall Street time, right here on Bloomberg Radio.
Well, we turn to the markets now, Nathan, and futures are higher as we kick off the first full trading week of the new year. This morning, the yield on the 30-year Treasury climbed to its highest level since November of 2023. Right now, futures, again, higher. S&P futures up 0.4%. Dow futures up 0.1%. NASDAQ futures up 0.7%. And the 30-year yield, 4.83%.
And this first full trading week of the year, Karen, is going to feature a jobs report, Fed minutes, and a smattering of earnings news. Let's get a preview from Bloomberg's Charlie Pellet.
Magnificent 7 profit growth this year is projected to slow to 17.9%, while earnings increases for the rest of the S&P 500 accelerate to 10.9%. Emily Rowland is co-chief investment strategist at JH Investments.
In order for earnings to see these double-digit estimates that are being baked in right now, you probably need to see bond yields come down a bit here. You probably need to see that cost of borrowing again sort of become a little bit more mitigated here.
This week we hear from Constellation Brands, Delta, and Samsung in New York. Charlie Pellet, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The NFL regular season is over. It ended in Detroit last night. The Lions and Vikings both came in 14-2. A lot at stake for the winner, a first-round bye, then home field advantage. The loser having to hit the road. It figured to be a close game. It was not. All Detroit. Lions won going away 31-9. Patriots beat the Bills.
नेचुरल गैस के लेवल वही है, परसों वाली ही है. ठीक है, जो परसों बनाए थे मार्केट सपोर्ट पे था, वहां से बाइंग आई, ऊपर रेजिस्टेंस के सीधा ऊपर ही गैप अप हुआ था ओपन, तो दैट बिकम वो रेजिस्टेंस बिकम सपोर्ट, वहां से एक सीधा बाइंग आई. अभी रेजिस्टेंस पे वहां से सेलिंग चल रही है. परसों फ्राइडे के ही लेवल है, कोई चेंज नहीं हुआ है. लेवल दिख रहे होंगे, नहीं दिख रहे क्या स्क्रीन? अरे यार एक सेकेंड, आई थिंक चार्ट ही गायब हो गया. वेयर इज द चार्ट? ओके, आप दिख रहा होगा ना, एक गोल्ड का चार्ट है आई थिंक. 1 सेकेंड. हाँ, ये नेचुरल गैस का चार्ट है ना. हाँ ठीक है, नेचुरल गैस में वही परसों याद होगा आपको, सपोर्ट एरिया था 288, वहाँ पर एक बाइंग का प्लान किया था. मार्केट में थोड़ी बहुत बाइंग आई, फिर वहीं पर क्लोज हो गया था. फॉरेक्स में ऊपर गया था मार्केट, उसी रेजिस्टेंस एरिया के ऊपर, एक्चुअली आज की मैं बात कर रहा हूँ, उसी रेजिस्टेंस एरिया के ऊपर ओपन हुआ था. तो जो रेजिस्टेंस था जहाँ पर हम वापस सेलिंग का प्लान कर रहे थे, दैट गिव्स द डायरेक्ट ब्रेकआउट ऑन फर्स्ट 15 मिनट कैंडल, एंड देन मार्केट डायरेक्टली गोज अप. ऊपर एक रेजिस्टेंस एरिया था, वहाँ से एक बार यहाँ पर सेलिंग आई है, फिर ये दूसरी बार सेलिंग आई है. मार्केट थोड़ा सा बुलिश हो रखा है न्यूज़ की वजह से. अपर सर्किट एक ऑलरेडी लग चुका है, दूसरा भी लग सकता है. छोटा सा रेजिस्टेंस है, एक बार ऑलरेडी सेलिंग आ गई है, दूसरी बार है। लेट्स सी क्या करता है प्राइस। नीचे देखोगे तो प्राइस के पास ये रेजिस्टेंस दो बार टेस्ट हो चुका है मान के चलो अब, क्योंकि ये लेवल ऑलरेडी टेस्टेड है एक बार। ठीक है, नीचे आता है प्राइस, दो जगह दो सिनेरियो हो सकते हैं अब यहाँ पर, या तो ये ब्रेकआउट कर दे 316 के ऊपर, ब्रेकआउट रीटेस्ट करेगा तो फिर से इसमें एक बाइंग का प्लान कर सकते हैं ऊपर। बाकी इसमें सेलिंग अभी चल रही है रेजिस्टेंस एरिया से, सेकेंड टाइम सेलिंग है ध्यान रखना। यहाँ पर ये जो विक बना रखा है ना, ये ऑलरेडी एक बार सेलिंग यहाँ से आ गई थी इसमें, फिर से दोबारा आ रही है यहाँ पर, वापस ऊपर गया है, इट मींस सेलर्स इतने स्ट्रांग थे नहीं। तो दो केस हो सकते हैं, या तो ये ब्रेकआउट करेगा 316 के ऊपर तो ब्रेकआउट रीटेस्ट पे एक बाइंग का प्लान वापस रख सकते हो, या फिर ये नीचे आता है तो फिर हमारे पास ये जो रीटेस्ट है परसों मतलब जो परसों का रेजिस्टेंस था, यहाँ पर ये रीटेस्ट पेंडिंग है फिर से। इन दोनों में से किसी भी लेवल पे अगर सपोर्ट लेता है तो फिर वहां से बाइंग कर सकते हैं, दोनों ही लेवल रीटेस्ट के हैं। सपोर्ट तो एग्जैक्टली नीचे था, तो सपोर्ट अभी यहाँ पर कोई नया बना ही नहीं है, कोई नया सपोर्ट बनेगा तो देखेंगे। इसको रीटेस्ट लिख लेते हैं, कंफ्यूज मत करना, ये सपोर्ट नहीं है, रेजिस्टेंस थे, ब्रेकआउट हो गया तो। बाकी ओवरऑल न्यूज़ की वजह से तो बुलिश ही है मार्केट, नो डाउट अबाउट इट। बाकी सपोर्ट अच्छा था, मैं परसों भी बोल रहा था यहाँ पर बाइंग आएगी जरूर। बट इतनी आ जाएगी मुझे ही पता नहीं था डायरेक्टली। 26 पॉइंट, एटलीस्ट 12 पॉइंट एक्सपेक्टेड थे, उतने तो आ ही गए। कोई नया सपोर्ट रेजिस्टेंस बनेगा तो देखेंगे। बीच में और कोई लेवल है नहीं अभी। इसको रीटेस्ट से हटा दो, नहीं रीटेस्ट से हटा। क्रूड में ध्यान रखना, क्रूड भी रेजिस्टेंस पर ही है, वहां पर एक सेलिंग का ट्रेड प्लान है। वैसे देखा जाए तो क्रूड भी बुलिश ही है, बट रेजिस्टेंस है तो सेलिंग का एक प्लान कर सकते हैं डेफिनेटली। बायर्स बाकी एग्जिट कर लेना। डेटा कोई है नहीं तो फिर न्यूयॉर्क सेशन और लंदन सेशन पर ही देखेंगे। बाकी नीचे अगर एफईजी ब्रेक हुआ तो अच्छा मूव आ जाएगा यहाँ से, एफईजी ब्रेक नहीं हुआ तो फिर ज़्यादा कुछ पॉइंट मिलेंगे नहीं। बाकी अगर ये ब्रेकआउट करता है क्रूड ऑयल तो फिर ऊपर कोई लेवल है नहीं, एक छोटा सा लेवल बना हुआ है 15 मिनट में, बट दैट इज़ नॉट दैट मच एक्यूरेट, तो थोड़ा सा वहाँ पर ध्यान रखना पड़ेगा लेवल किस तरह से डिज़ाइन होते हैं। नीचे तक आ जाए नेचुरल गैस बेस्ट ही है, रीटेस्ट लेवल पे अच्छा रीटेस्ट हो जाएगा। लाइक भी करते रहो गाइस। बाकी देखो नेचुरल गैस में सेलिंग आनी है, थोड़ी फास्ट आनी चाहिए अब, क्योंकि ऑलरेडी एक बार सेलर्स यहाँ से सेल करके नीचे ले जा चुके हैं प्राइस को, उसके बाद भी बायर्स नीचे लेके नहीं आ रहे हैं, यहीं से वापस ऊपर लेके चले गए, फिर से बाइंग आ रही है। अगर ये लोअर लो नहीं बनता है, फर्स्ट टाइम की जो सेलिंग है यहाँ तक है, अगर ये लोअर लो नहीं बनता है इसके नीचे और फिर से यहाँ जाता है तो ये पैटर्न बन जाएगा, ध्यान रखना यहाँ पर एक बहुत ही अच्छा सा कुछ इस तरह का। उस केस में फिर डायरेक्टली ब्रेकआउट होने के चांसेस बढ़ जाते हैं, क्योंकि ये एग्जॉस्ट हो जाएगा आपका रेजिस्टेंस इन दैट केस। काफ़ी ज़्यादा इम्पोर्टेंट है कि एटलीस्ट के नीचे तो प्राइस एक स्विंग बनाए, नहीं तो ऊपर का रेजिस्टेंस वीक होता चला जाना चाहिए।
Level since 2023, up a single basis point to 483. Going into a major week ahead with tons of economic data, concluding with payrolls on Friday. Before we get to payrolls on Friday, though, we need to talk about some debt auctions in America. Carrying just a little bit of weight this week, $119 billion of debt sales, a 3-year today, Bramo a 10-year tomorrow, and a 30-year on Wednesday.
Yeah, brought forward because of Thursday, the holiday in terms, or the day off for Jimmy Carter's funeral. A real question here about what the signal from the yield rise is. Is it the anticipation of $119 billion of debt sales? Is it the anticipation of an agenda from President-elect Donald Trump, who potentially could deepen the deficit? Or is this a signal of just normalization that's positive, because we should have a disinverted yield curve?
Well, I think it tees up the perfect conversation we've got to have this morning. Speaker Johnson looking to hit the ground running. One big, powerful bill, and looking to pass that bill by April.
They want to get this one big reconciliation bill out of the gate. There's been lots of ooh and ahhing on this program between Republicans within the House and the Senate, how they would go about enacting President-elect Trump's agenda. Would they do one immigration bill out of the gate, as Senator John Thune wanted to do? Or are they going to do what Jason Smith of House Ways and Means has been pushing, one massive reconciliation bill? President Trump made it very clear yesterday in a post, one powerful bill, immigration, energy, and expanding tax cut. He made a point to talk about no tax on tips.
Basically, all of this is coming down to the question around deficit anxiety. And ultimately, from a market perspective, there is a real anxiety right now about how much momentum they have to actually do cost cutting to offset some of the deficit expansion that a lot of people at this point are just penciling in.
Morgan Stanley's Mike Wilson talking about this morning to kick off the week in his notes, saying that rates are the most important variable to watch, that in early 25 already we're seeing the correlation of equity returns to bond yields decisively negative. We heard from Priya Misra of JP Morgan last week talking about this, reflected on what Max Kettner of HSBC had to say, that rates have decisively moved into what he believes is the danger zone.
There is an alternative. I mean, if you just think about it from an investment perspective, and then you take a look at some of the areas that people say have been the cheapest, they are the most leveraged to rates remaining low. A key question here as we move forward is today is actually a great test. Can you eke out gains at the same time that the 30-year yield's the highest level going back to November 2023, when you have a yield curve that is the most positive from 30-year to 2-year going back to 2022?
Bonds down, yields up this morning by a single basis point on a 30-year, up by close to 2 on 10s, 461 on a 10-year yield. Coming up this hour, we'll catch up with Lori Calvasina of RBC on her favourite sectors for the year ahead. Terry Haynes of Pangaea policy as Johnson pursues Trump's agenda, and Jane Foley of Rabobank as the dollar pulls back from two-year highs. We begin this hour with stocks rising after snapping a 5-day losing streak on Friday, getting a boost from big tech. Laurie Cavacina of RBC keeping a close eye on the sector, writing, "We remain market weight. S&P 500 tech, our favourite S&P 500 sectors heading into 25, are financials and energy, along with communication services." Laurie joins us now for more. Laurie, good to see you.
Good to see you too.
Good morning. Let's talk about the year ahead, and not just the sectors. Let's talk about policy. Have we got a better idea of what policy and how it will be pursued will look like down in Washington, D.C.?
I don't think we have it yet. I think that we're optimistic we're going to get some clarity soon. And, you know, chatting with Emery earlier about the one big powerful bill, I instantly thought back to my European meetings in December, right before the holidays, when I was kind of doing the death march across the continent. And, you know, in every single meeting, people wanted to talk about taxes and tariffs and what exactly is Trump going to do and when are we going to know. And, you know, I had to sit there and tell them, well, I think we got to get past the inauguration first. But if you go back to 2018 or actually 2017, what I remember about that tax bill, I'd moved firms and I was trying to put out a forecast and I kept having to change my earnings estimate because the tax rate kept changing. I think like literally up until like the week they passed the bill, and it was driving me absolutely mad. So I kept coming back to that anecdote. But the reality is markets did price in a lot of the good stuff ahead of time anyway. So I think just the promise of getting some clarity sooner rather than later, and frankly, just ripping off the Band-Aid, right, and getting a lot of this stuff done all at once, I think that's good for markets. I think one of my core beliefs about politics and markets, whatever it is, you have to go through some temporary repricings, and those can be painful for the markets. In some instances, those can be painful for certain sectors. Sometimes they're not. Sometimes they're good. But whatever it is, it tends to be rather short term. The market reprices, and then you move on.
Something we talked about last week coming in.
ब्रेकआउट के चांसेस अभी ऐसे कह तो नहीं सकते, रेजिस्टेंस ठीक ठाक ही है। अगर ज़्यादा जल्दी सेलिंग नहीं आती है, कंसोलिडेशन हो जाता है, तब ब्रेकआउट हो सकता है। ऐसे परसों हुआ था, रेजिस्टेंस पे आया, 2 घंटे साइडवे चला गया, तो फिर ब्रेकआउट हो गया। सेम सिनेरियो है, नहीं तो रेजिस्टेंस ठीक ही है, मतलब गुड रेजिस्टेंस एरिया। बाकी सेलिंग इंपॉर्टेंट है कि ये एफईजी ब्रेक होता है नहीं होता। अगर एफईजी ब्रेक हुआ तो फिर एक अच्छा सेल ऑफ देखने के लिए मिलेगा यहाँ से। फिर नीचे सपोर्ट है हमारे पास 6283 के अराउंड। के लिए मैं इतना ही कह सकता हूँ कि सेलिंग इज ऑलवेज फास्ट। आनी है तो फास्ट आनी चाहिए, ज़्यादा देर रुकेगा नहीं। रुका तो ब्रेकआउट के डेफिनेटली चांसेस रहेंगे। अभी फ़िलहाल के लिए तो नहीं दिख रहा ऐसा कुछ। प्लान कर सकते हो वैसे सेलिंग ऊपर लेवल से, रेजिस्टेंस कोई बहुत बड़ा नहीं है। ठीक है, यही टारगेट है पहला, ये एफईजी तक का। एंड अगर ये एफईजी ब्रेक करके नीचे जाता है तो फिर 6282 तक, फिर वहाँ से वापस बाई करेंगे। वो एक सपोर्ट जोन है। मॉर्निंग से कुछ खास वैसे किया नहीं है क्रूड ऑयल ने, देखोगे तो दिन भर साइडवेज ही रहा है आज इंट्राडे में। आज मोमेंटम आता है तो ठीक, नहीं तो फिर कल तो शायद मार्केट क्लोज रहेगा, मैं गलत नहीं हूँ तो। फॉरेक्स मार्केट, यूएस मार्केट क्लोज रहेगा तो मोमेंटम पता नहीं कितना होगा, बिकॉज कल शायद आई थिंक वहाँ क्लोज है मार्केट। हाँ, पुट ले सकते हैं क्रूड में, यहाँ से पुट लो, कॉल सॉर्ट करो, फ्यूचर सेल करो, आपकी चॉइस। ज़्यादा नीचे मत लेना, ऐसा बड़ा हो जाएगा नहीं तो अननेसेसरी। इस एरिया के आसपास ले सकते हो। बाकी नेचुरल गैस भी रेजिस्टेंस पर ही है, वहाँ पर ऑलरेडी एक बार सेलिंग आ चुकी थी, दूसरी बार आई थी। कुछ खास लोअर लो बन नहीं रहा है इसमें भी। तो अगर ये नीचे जो मैंने ब्लू कलर की लाइन ड्रॉ करी है लास्ट स्विंग्स के नीचे, अगर मार्केट क्लोजिंग नहीं देता है तो फिर ये भी लाइक साइडवे जा सकता है, और फिर उस केस में ब्रेकआउट के चांसेस बढ़ सकते हैं, लाइक इस तरह से। अगर इसको नीचे आना है तो ये स्विंग के नीचे एटलीस्ट एक नया स्विंग बनाना ज़रूरी है।
what this tariffs could mean. And yesterday in Trump's tweet about the one powerful bill, he said all will be made up with tariffs.
Yeah.
Is that enough to pay for this?
I don't know. And look, I think they're trying to do this right through the reconciliation process. So, and I'm a little fuzzy on how all that works. But I think that sort of reduces, right, what they can ultimately do in terms of tax cuts, because they've got to make everything balance out. So, you know, I think on the one hand, the markets will cheer a narrower approach to tariffs, more targeted. There's been a real concern over the last 6 weeks or so that the market has not been baking in a broad-based kind of tariff approach. On the other hand, are you really going to get, you know, anything much more than a renewal of existing tax cuts, right? Is it keeping tax rates low, or is it getting a bunch of new cuts? How are you going to get a bunch of new cuts if you don't have a lot of new revenue coming in?
When you look at how potentially tariffs might impact earnings, what sectors do you think would be the best in terms of making sure that they're the ones that are less vulnerable to potentially some of the retaliation we could see in the tariff space?
It's going to depend on what's on that list at the end of the day. But if you look back at 2018, the two sectors that really got smoked were industrials and materials. And so I've actually been sort of debating the industrials. There's a lot of enthusiasm on industrials in the States, not so much in Europe and Canada. And, you know, I think when I've talked to some of the domestically based investors, they've assumed that this whole reshoring is going to benefit especially small and mid-cap industrials. And I'm like, well, let's just, you know, hold up. We're trading at 3 standard deviations on valuations. And we're also looking at a sector that was really at the epicenter of these tariff issues the last time around. Defensives did best last time, right? It was things like healthcare, you know, consumer staples, utilities, REITs. REITs and utilities came up a lot in my European meetings because they just don't seem affected either way.
Well, speaking of Europe, headlines like these will open the door to have conversations about whether this allows people to think about international equities just a little bit more. The fear ahead of these headlines was a universal tariff as high as 20% on everything that America was importing. Lisa, when you see headlines like this and then look at foreign exchange, just a bit more euro strength, just a bit more strength in the Mexican peso. It's marginal stuff, but it starts a conversation.
Well, it starts a conversation about what the purpose of tariffs will be. Will it be to sort of jawbone or give some sort of increasing momentum to the American exceptionalism story, or will it be very targeted for either national security reasons? These are key issues like critical supplies like steel, iron, aluminum, copper, or syringes, needles, batteries, rare minerals. There's a real question here about if these are targeted to national security and specific needs, they won't have as big of an effect on Europe, because strategically it would make sense that they would not necessarily be as included in some of these.
Two things also come to mind. How much pushback will there actually be from Democrats? Because this has been their whole approach as well, especially when you think about going after China. It needs to be narrow, needs to be specific. Also, is this because the Trump incoming administration is concerned about higher inflation? So they want to take a more targeted, slow-going approach when it comes to tariffs.
We should stress that no decision has ultimately been made. This is the latest reporting from the Washington Post. Laurie, it's good to see you, to catch up on a whole range of things going into the next year and beyond. Laurie Cabot, senior there of RBC. If you are just joining us, this from the Washington Post just minutes ago. President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country, so universal tariff, but only cover critical imports. This according to 3 people.
So this is the breaking news right now. आप लोगों ने सुन लिया होगा फिलहाल के लिए, मैंने पोस्ट भी कर दिया टेलीग्राम पे। ये बताया जा रहा है कि डोनाल्ड ट्रम्प के जो मेंबर एड हैं, एड मतलब आप कह सकते हैं उनके मेंबर्स, उनकी कैबिनेट में जो रहेंगे, उनके आसपास के लोग, वो लोग प्लान कर रहे हैं एक यूनिवर्सल टैरिफ लगाने के लिए, और वो टैरिफ हर एक कंट्री पे लगेगा। अब वो देखना पड़ेगा किस पे कितना लगता है, या फिर किन चीज़ों पे लगता है, बट ये एक ब्रेकिंग न्यूज़ फिलहाल के लिए देखने के लिए आ रही है। लेट्स सी इक्विटी मार्केट कैसे इस पे रिएक्शन देता है। इट इज़ जस्ट राइट नाउ, ये अभी आई है न्यूज़। में एफईजी प्रीवियस, हाँ यहाँ पर ये एफईजी भी बना हुआ है बिल्कुल 6320 के अराउंड।
SpaceX for a $1.6 billion deal, providing encrypted telecoms for the government over the next 5 years. The negotiations appeared to move forward after the Prime Minister, Giorgia Meloni, met with Donald Trump at Mar-a-Lago. Some Italian officials, though, are concerned about the deal's impact on local carriers. It has, though, been approved by Italy's Intelligence Services and Defense Ministry. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the programme, one big, beautiful bill.
President Trump is going to prefer, as he likes to say, one big, beautiful bill. And there's a lot of merit to that because we can put it all together, one big up or down vote, which can save the country, quite literally. We're targeting a vote in the House, it may be in the first week of April.
That conversation up next, live from New York City this morning. Good morning.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
Foreign exchange waking up to some headlines already Monday morning. Check it out. Euro-dollar session highs approaching 104 all over again, 103.89. That's some euro strength, and that's rare over the past month or so. Check out dollar peso. Some Mexican peso strength as well in the mix. Dollar Mex near session lows. We're negative about 0.5%. So once again, a stronger peso, a weaker dollar. All of this building in the last 10 minutes or so. Off the back of this headline from the Washington Post, President-elect Donald Trump's aides are exploring tariff plans that would be applied to every country but only cover critical imports. This according to 3 people familiar with the matter. Now, no final decision has been made, but certainly some early murmurings that maybe some of the campaign promises might be, I stress might be, watered down.
There was a lot of preparation for an opening salvo that would be potentially pretty big and potentially pretty damaging should it go through in terms of huge tariffs on the likes of Mexico, on Europe, and of course on China. The fact that the opening salvo is targeted is definitely sending a signal that's being heard in foreign exchange.
A warm welcome to 2025 because this move can be undone just like that by a single post from the incoming president. So stay tuned. Under surveillance this morning, one big, beautiful bill.
We're 15 days out from the inauguration of President Donald J. Trump for his second term, and we want to make sure that we're jump-starting the agenda now over the next 2 weeks so that he's prepared and ready on day one. President Trump is going to prefer, as he likes to say, one big, beautiful bill. And there's a lot of merit to that because we can put it all together, one big up or down vote, which can save the country, quite literally. Reconciliation is the way to get it done. Why? Because you avoid a 60-vote threshold in the Senate. We're targeting a vote in the House, it may be in the first week of April.
So here's the latest this morning. House Speaker Mike Johnson laying out an aggressive plan to pursue President-elect Donald Trump's agenda. House Republicans aiming to pack his priorities into a single bill and pass it by April. President-elect Donald Trump posting this: Republicans must unite and quickly deliver these historic victories for the American people. Get smart, get tough, and send the bill to my desk to sign as soon as possible. Terry Haynes of Pangea Policy joins us now for more. Terry, on this bill, how big is it going to be and how quickly can they pass it?
The short answer, John, is I have no idea, and it's going to take a really long time to figure that out. Markets, I know, are slavering for clarity. I wrote a lot about that yesterday, but I would urge people not to engage in premature clarity on this. Generally speaking, Speaker Johnson is doing exactly what he has to do. The market signal is from Washington is we're serious. We're going to work on this as hard and as quickly as possible. That's all very good. The political signal is that the House always overcooks everything. So what you want to do is kind of overreach, and then you get pulled back in by the Senate a little bit. Number one. Number two, what Johnson's doing is engaging in the care and feeding of the other branch of government here, the executive branch. Trump just helped him become speaker again with a minimum of fuss. It behooves him for political and policy reasons, both to try to get as much as possible, as quickly as possible, and also agree with Trump right now. The reality is that Johnson doesn't have everybody in the House on the one big beautiful bill strategy, and more importantly, he doesn't have the Senate at all. So we're a long way away from determining what's actually going to happen.
Terry, over the weekend, Senator Thune, Senator Lindsey Graham, we're still all talking about one bill coming out almost immediately on immigration and then doing taxes. So are you saying that markets need to be prepared for potentially going back to two reconciliation paths?
Yeah, I am. I'm fundamentally what I'm saying is that the path here is not at all decided, and it's not all going to be decided for quite a long time. I've tried to summarize the politics and the market signals in my last answer. Here, what I would say is they've got a lot of barriers to jump over before they get to the size of the one big beautiful bill. You've got debt ceiling, debt limit that they need to decide upon. Trump has to provide a budget. You've got a situation where you've got to figure out then the size of the deficit. And markets, frankly, are going to have a role to play here, as you all were talking about earlier, and Bloomberg is reporting the way that the way markets are reacting to increased deficits and the like, particularly in the bond side, may result in pulling back some of the more extreme wishes of Johnson and the like.
I want to put two of these stories together. One, what Trump came out in black and white and said about this one powerful bill. He said it'll all be made up with tariffs. And then this morning, we get a story from the Washington Post talking about tariffs that look to be more narrow in nature. How are they going to pay for all of this if they're more narrow in nature, focused on national and economic security concerns?
Well, the answer is they don't know. And, what I can tell you is that another thing for markets here is that, 2017 is not like 2025 for Washington or for anybody else. This is obvious on one level, but it affects the size of additional deficit. It affects like how many pay-fors they're going to have and what they are. And all those decisions are months away. So the idea, Johnson, I think, is exactly right in trying to be as clear for markets and politically as possible. But at the same time, all these hurdles and markets' reaction to how these folks get over these hurdles is going to determine a lot of the size of the tax cuts and exactly what they decide to do. The last thing I would say about this is that Trump is going to ramp up defense and defense industrial base spending and supports, and that's going to have a piece to play here too.
I am wondering, just to build on what Anne-Marie was talking about, your take on this headline from the Washington Post about universal tariff plans with one key change, the key change being that it only goes after certain key imports, including things like steel, iron, aluminum, copper, syringes, as well as batteries and rare earth minerals. Do you think that this is a sign that this administration is going to take a more targeted approach with potentially national security in consideration more than, say, 100% tariffs on everybody unless they come and kiss the ring?
I think it's another sign of that, Lisa. My view of this all along, watching these folks closely and what they do and what they say, has been that, markets have veered back and forth between saying this is all negotiation versus, the tariffs will be all about application. The answer is it's not going to be one or the other. It's going to be a mix of both. It's going to depend on, kind of which products, and it's going to depend on which countries. And I think you can vector it out from there.
Terry, good to hear from you, sir. Busy morning already. Terry Haynes there of Pangea Policy. Check out euro-dollar. A move of more than 1 full percentage point now. Back through 104 on the euro. Could be, possibly, the biggest one-day move for the euro going back to the summer of last year. Off the back of this headline from the Washington Post, the consideration, at least, of watering things down a touch.
Yeah, watering things down and going after key supplies, most of which come from China. And let's be very clear, this is not the type of imports. The U.S. isn't importing a dramatic amount of syringes from Germany. This isn't a question of that. This is coming from China, so it's going after a very targeted group, basically alleviating some of the concerns that Europe had.
One thing that's very clear to me this morning, whether or not it's the Washington Post reporting or what Terry Haynes just said, the markets will have a voice in the policy that this incoming administration dictates, whether it's not those concerns about tariffs or whether or not it's how big they can really squeeze into this 1 or 2 packages of reconciliation and how willing they are to add to the fiscal deficit.
This is why so many people have come on this show going into 2025 saying brace for volatility. Everything we're talking about right now can be undone with a single post from the incoming president of the United States. And we should stress repeatedly, every time we reference this story from the Washington Post that no final decision has been made, it speaks to considerations taking place within the Trump administration.
लग रहा है शायद न्यूज़ का इम्पैक्ट गिफ्ट निफ्टी पे होता जा रहा है. शाम को यूएस मार्केट ओपन होगा तो शायद थोड़ा और इम्पैक्ट होगा, बिकॉज दैट इज़ अ मेजर न्यूज़. ये दोनों ही न्यूज़ कि डोनाल्ड ट्रम्प की जो नेक्स्ट एडमिनिस्ट्रेशन होगी वो सारी कंट्रीज पर टैरिफ लगाएंगी, बिकॉज आज तक ऐसा कभी हुआ नहीं है, नंबर 1. और नंबर 2 इमिग्रेशन वाला जो रहता है. देखते हैं मार्केट किस तरह से उसको लेता है, जो किन चीज़ों पे टैरिफ लगेगा किस कंट्री पे, उसके अकॉर्डिंग उस मार्केट की जो कंपनीज होंगी उनके शेयर ऊपर या नीचे ड्रास्टिकली जा सकते हैं. इस चीज़ का ध्यान रखना, इंडियन मार्केट पे भी इम्पैक्ट होगा.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
क्रूड ऑयल पे भी इम्पैक्ट होने वाला है, स्पेशली 20th of January के बाद, बिकॉज उस समय कल परसों जो न्यूज आई थी रिगार्डिंग द बैन ऑफ क्रूड ऑयल एक्सप्लोरेशन in refinery in USA, inside USA by current president, वो भी रिवोक हो सकता है. अगर वो रिवोक हुआ, जो कि होना ही है, सो इन दैट केस US और ज़्यादा ड्रिलिंग करेगा क्रूड ऑयल की, और ज़्यादा सेल करेगा नेचुरल गैस, तो उसका भी इम्पैक्ट क्रूड ऑयल और नेचुरल गैस के प्राइस पे पड़ सकता है, पड़ेगा ही पड़ेगा. तो देखना पड़ेगा मार्केट किस तरह से उसको लेता है. 20th of January के बाद होने वाली सारी इवेंट्स कमोडिटी और मार्केट के लिए काफ़ी ज़्यादा इम्पोर्टेंट होते जा रही हैं. लेट्स सी और कोई न्यूज़ निकल के आती है तो.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make
Hi there. It's Christopher Walljasper here, producer and sometimes co-host of Reuters World News. Before we begin this weekend special episode, I wanted to take a moment and just explain the format of the show today, because we're trying something a little different. Every year, our photo editors put together a compilation of images taken by Reuters photojournalists that encapsulates the year.
Today, Canadian Prime Minister Justin Trudeau appears to be on the way out. Minority Leader Hakeem Jeffries looks to play an outsized role in a divided House. Ukraine launches a fresh attack in Russia's Kursk, while Baltic Sea nations guard against suspected underwater sabotage. And The Brutalist and Emilia Perez win top honours at the Golden Globes. January 6th. You everyone.
Acknowledge he has failed.
The Prime Minister has lost. Speaker, the Prime Minister has lost the confidence of Canadians, lost the confidence of many of his MPs.
So will the Prime Minister acknowledge he has failed? He has to quit.
Angry exchanges in Canada's Parliament just before Christmas, after Finance Minister Chrystia Freeland resigned. Now a source has told Reuters that Prime Minister Justin Trudeau is increasingly likely to step down. But they said he has not yet made a final decision. The source spoke to Reuters after the Globe and Mail newspaper reported that Trudeau was expected to announce as early as today that he would quit. The Prime Minister's office did not immediately respond to a request for comment. Polls show Trudeau's Liberal Party would lose heavily to the official opposition Conservatives in an election that must be held by late October.
The United States has full confidence in South Korea's institutions, and we reaffirm our unwavering support for the Korean people as they work tirelessly to uphold those institutions.
Secretary of State Antony Blinken in Seoul. His visit comes as impeached President Yoon Suk-yeol faces arrest. South Korean investigators will seek an extension of the arrest warrant after they failed to serve it last week when security service guards formed a human chain to prevent access to Yoon. Austria could be close to getting a government led by the far-right Freedom Party after efforts to form a centrist government collapsed. Far-right leader Herbert Kickl is set to meet the Austrian president today to discuss forming a government. A fierce winter storm has brought snow, ice and freezing temperatures to a broad swathe of the US, with some 60 million people across more than a dozen states under weather warnings. The storm is now barreling towards the mid-Atlantic states, where Washington, D.C. is bracing for heavy snow and bitter cold. And staying in the capital, Congress is set to meet today to formally certify Donald Trump's election as president. It comes 4 years to the day when a mob of his supporters stormed the Capitol in a failed attempt to block the certification of his 2020 loss. And to the Golden Globes, where The Brutalist, a story of a Holocaust survivor who chases the American dream, landed the Best Movie Drama Award, and musical thriller Emilia Perez took home the Best Drama Film Actor and Best Director prizes. Hacks and Shogun won the top TV honours. You can check out all the Hollywood glam at the Globes on Reuters.com. And for more on the work of Reuters photographers, listen to our weekend episode. We take a look at some of the top Reuters images from last year and the stories behind them. A link to that show is in the description of today's pod. US stocks face their first major test of the year this week, with the December jobs report out on Friday. Investors are counting on the numbers showing a steady economy. Anything that suggests things are weakening could damage prospects for a third straight standout year for stocks. The benchmark S&P closed up last year with a 23% rise. But you know what did even better? Gold. Bullion prices rose 27% last year. A rally we'll be examining in closer detail in an upcoming episode of Reuters Econ World. Stay tuned for details on that. Republican Mike Johnson was re-elected House Speaker on Friday, but it was a squeaker. He won only after two Republican opponents switched their votes to support him. It illustrates just how fragile the new Republican majority is. The party controls the chamber by 219 seats to 215. That means the top Democrat in the House, Hakeem Jeffries, could wield more power than your average minority leader. Richard Cowan covers Congress. Rich, what gives Jeffries leverage here?
What gives Hakeem Jeffries leverage going into this brand new Congress is not so much his own rank-and-file members, but the chaos and divisions among House Republicans. Any defections by House Republicans, any revolts, and there were plenty of those over the last 2 years, means that Jeffries has some power to make up the difference so that the House Republican leadership, led by Speaker Johnson, can carry through and win some legislation. But it takes some bipartisan cooperation.
So in that scenario, a few Republicans could revolt and Johnson comes to Jeffries asking for Democrats' support for legislation, which opens up room for negotiations. That's happened a few times in the past few years, right?
It's happened more than a dozen times over the last few years. It happened on multiple occasions on bills to fund the government. And so if a couple, even just 2 or 3 of those right-wing House Republicans peel off and don't support leadership, that's Jeffries' sweet spot. That's where he can step in, maybe negotiate some changes to a bill, and provide the votes that are needed.
Ukraine has launched a fresh attack in the Kursk region, in western Russia, where its forces made a surprise incursion last August. Since then, Russia has been trying to push Ukrainian forces out. Mike Collett-White is our editor-at-large for the Ukraine war and has the latest.
So in the last few days, Ukrainian forces have launched what Russian military bloggers are calling quite major attacks against Russian forces in this pocket of the Kursk region, where Ukraine has been making some sort of territorial gains since last August. The narrative over the previous few months had been that Russia was retaking some of that lost territory, and now Ukraine has gone back on the offensive.
Is the objective here to send a signal to Washington?
Yes, we think that there's no coincidence in what's happening here. So the overall situation in the war in recent months has been that Russian forces have been making steady but slow gains across the Eastern Front, and this obviously is putting Ukraine on the back foot. What President Volodymyr Zelensky desperately wants to do is to change the narrative in order to have a bargaining chip if and when any peace negotiations do happen, with an eye on the inauguration of President Donald Trump in the United States, who has promised to end this war quickly, although we still don't know how.
Is Ukraine likely to achieve that aim?
Well, I think Kursk is going to help it. It gives it something, although the bigger picture is less positive for Kiev. And actually today, the Russians claimed quite a large town in the east of Ukraine called Kurakhova, which they've been trying to take for several months, which really underlines how Kiev is not winning this war. In fact, you could argue is losing the war.
And sticking with Europe, a court in Finland has denied the release of an oil tanker suspected of damaging an undersea power line and 4 data cables in the Baltic Sea. The vessel, carrying Russian oil, was seized on Christmas Day. It's one of several incidents of power cables, telecom lines, and gas pipelines being damaged in the Baltic Sea since Russia's invasion of Ukraine. NATO says it will boost its presence in the region as a result. Essi Leito is in Helsinki and has been covering the story.
This was the first time that the authorities were able to actually go in, stop the ship. Usually the ships sail on international waters, but when Finland stopped it and the authorities were able to determine that the ship was dragging its anchor, and eventually they saw that one of the anchors were missing, they asked the ship to move to Finnish regional waters. And when that was done, the authorities actually went on board and took off the ship and took over the command bridge.
And does this indicate a change of approach to these incidents?
This is quite unusual. In the previous cases, this hasn't happened. So to me, where the discussion is in Finland and elsewhere in the region, in the Baltic Sea countries, is how to stop these kinds of incidents. And the lawyer who represents the shipping company that owns the oil tanker has said that it was hijacked on international waters and it was forced to Finnish waters. So clearly there's some kind of discussion going on about what can be done if these incidents keep happening. And the Baltic Sea nations have been very alert and prepared for subsea power links or telecommunications cables being broken and trying to kind of catch whoever might be behind the breakage.
And today's recommended read: when the deadly Grenfell Tower blaze in London led to revelations that high-rise public housing across the UK was wrapped in flammable cladding, the government vowed the building contractors responsible would pay. 7 years on, contractors who fitted those cladding panels that didn't meet fire safety standards have largely escaped financial liability. A link to the story is in the pod description. And for more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favourite podcast player. We'll be back tomorrow with our daily headline show.
With clean energy, we empower communities and industries, aiming for net zero by 2050, creating a better future for all.
Legal immigration or else. When you look at China and you look at to some degree the global tariffs, this is about, you know, the idea that the huge U.S. trade deficit is a national security issue. It needs to be dealt with. Bilateral trade deficits are problematic with China. Global trade deficits are problematic because they have it's a pushback on American workers. So I think right now a lot of this is extending beyond deal making. There's also an issue with tariff revenue being used as a pay for the tax bill, which they'd like to do. So I think the broader takeaway here is that markets have been sort of underestimating how much the Trump administration likes tariffs as more than deal making. They see it as something structural they can use to restructure the domestic international economies. I think we're going to be seeing a lot more tariff talk than the street has been expecting.
Leland, and I'd love to finish on the domestic economy in China, just away from the tariff story, and think about international brands. Autos, luxury brands, foreign brands are looking for a cyclical upturn in the economy, looking for any kind of green shoots, a bounce, if you will. Are you seeing signs of them suffering from just a cyclical downturn, or do you think there is a real shift towards national champions away from foreign brands?
Well, we've been seeing a structural slowdown for a long time now. It doesn't mean that as you provide more help to the economy, you can't see some cyclical upticks, but that's not what we've been seeing. What we've been seeing is that manufacturing for a couple of years has been the growth leader. Exports. They're under extreme pressure right now and will be even more so in 2025 because of trade frictions. We have not seen a bounce in retail and services. They're still doing quite poorly, even after this, supposed mega stimulus that was supposed to have come at the end of September. So enormous pressure on domestic demand. Not a lot of reason to believe that this is going to turn up unless you're one of the people who still think that China is going to push that button, get that bazooka, restructure the economy towards domestic consumption, and all will be well. But obviously, China Beige Book is not in that camp.
Those people do exist, Leland, beyond China Beige Book. They're not going away. Leland, appreciate the clarity. Thank you, sir. Leland Miller there of China Beige Book. The latest on over in Asia. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. We begin with that breaking news from earlier in the hour. A new report from the Washington Post suggests that President-elect Donald Trump is exploring a universal tariffs, but they would only cover critical imports. 3 people familiar with the matter told the Post that Trump's aides are still discussing the plan on imposing duties on every country. It would be a paring back of the most sweeping plans from Trump's 2024 presidential election. In a rare Sunday ceremony, President Joe Biden signed the Social Security Fairness Act to increase Social Security benefits for over 2.5 million retirees. The bill changes the formula that had been used to reduce benefits for certain beneficiaries, like those on government retirement plans, including police officers, firefighters, and teachers. The law is expected to boost Social Security payments by an average of $360 per month. And in South Korea, investigators have asked the police to execute a warrant to arrest President Yoon. The court-issued warrant is set to expire by the end of today. Investigators' initial attempt to arrest Yoon last week was unsuccessful and led to a standoff with his security team and thousands of supporters. It's still unclear whether or if a second arrest attempt may take place.
Things that I'm kind of looking at as far as CES goes. I think the first and foremost is obviously going to be AI, but not just AI generally. There's AI agents, which are, advanced AI capabilities that can do things autonomously or semi-autonomously for you across various apps. So, for instance, an AI agent could pull information from your email and drop it into, for example, a spreadsheet app or a other kind of doc or a customer relation management doc, basically trying to streamline different processes across CES. We got kind of a preview last year with that Rabbit R1, that little device that basically was just an AI on its own. And you can expect more of that. I think more so, we're going to be talking about chips. We have, obviously, NVIDIA's Jensen Huang. He's going to be giving a keynote for NVIDIA. We have AMD, Intel, Qualcomm, the whole slew of them all coming out with their own different either showings or presentations at the show. That's going to be huge. I think one of the other things that we're going to have to keep a focus on is automotive. Honda has already said that they have some new vehicles that they're going to be showing off at CES. This is something that more automakers are doing, by the way, is debuting their vehicles there. We have BMW showing up, Toyota. It's basically a who's who of the auto industry at CES now. And then the software that goes into that is just as important. And so you could expect that as well. And then finally, I think kind of over all of this is that cloud of potential tariffs that could impact Silicon Valley and the tech industry around the world. And so that's something that I think a lot of companies may not talk about as much, but definitely is going to be percolating in the background. People wondering, how is this going to impact sales of vehicles, of software, of chips? So it's going to be definitely something that a lot of people have on their mind if they don't say it outright.
A lot of tech news on a lot of different fronts, and you'll be covering all of it. Dan, thank you so much for joining us.
Powered by Atlassian. Start for free. Set up.
Crypto had an eventful 2024. Bitcoin finally reaching $100,000 mark. And we also had David Sachs' appointment as the first AI and crypto czar, just to name a few. So as we head into the new year, let's talk about some of those top crypto themes to watch for in 2025. For that, we want to bring in Alexander Bloom. He's the CEO of 2Prime. Alexander, it's great to have you here on Yahoo Finance. You were recently out with 10 crypto predictions for 2025. We want to zero in
on three of those that we think could have the biggest impact on the price of Bitcoin here moving forward. And that first thing that you pointed out was that the U.S. is going to declare Bitcoin a strategic reserve asset. I guess two-part question here. One, how realistic do you think that is? And then two, how much of that optimism has already been baked into the price of Bitcoin here today?
Yeah, so thanks for having me on. I would say, first of all, in the light of the last year with Bitcoin ETFs being extremely successful, the most successful ETFs ever created, as well as the election of pro-crypto candidates and a pro-crypto administration, the backdrop is set for a strong 2025. In terms of your actual question, there's two aspects to the strategic reserve. One is, by executive order, Trump can take the Bitcoin that the US government has confiscated and already owns and just say, this is part of our strategic reserve now. There's about 200,000 Bitcoin that the US government already holds. In addition to that, which is maybe a bit more complicated, is there's a bill in the Senate introduced by Cynthia Lummis to buy another 1 million Bitcoin through the Treasury. That is a little bit trickier because it has to go through the whole legislative process and can't just be done with the swoop of a pen. However, I think, if you look at the kind of pros and cons of being pro-crypto, if you support crypto, you get more votes, you get more political donations, and there's really not a lot of benefit to being anti-crypto unless you're completely bought by the banks. And so I think there may be the political will to actually approve that bill as well. We've also seen, it's also significant, not just the US doing it, but it will set a tone for other countries to follow suit, just as other countries have collected gold in the past.
Yeah, talk to me about that part of your call, Alexander, the idea of other global central banks scooping up Bitcoin, especially in relation to the strength we're seeing in the US dollar. Can other central banks really afford to be hedging with an asset like crypto and Bitcoin?
I think, well, first of all, central banks can print paper money out whenever they want. And if they're buying a real asset with it, it's better than what they spend most of their money on, which is typically poor spending. And so I think central banks definitely can do it. It's a question of who has the incentive and kind of political will to do that. And I think there's two categories of groups that have that interest. There's one is people trying to get out of a dollar reserve asset. So maybe a country like Russia that has incentive to not be stuck to the petrodollar. And then there are countries that are trying to keep up with the US. So countries maybe like China or England that, if the US is doing it, even if there's just the US doing it makes the odds of it being a successful asset even greater. And so the game theory is, well, I want to keep up with the United States, and their involvement makes everything more likely to be make this an important asset. And so I think it's a very real thing, and central banks can definitely do it.
All right, Alexander, we have less than a minute here, but the third point that you bring out is that we might see a bit of a follow here in MicroStrategy's lead with a FANG company adding Bitcoin to its balance sheet. What signal is this going to then send to the markets, and who, I guess, of the FANG members?
Yes, so, by my calculations, these companies are sitting on about $383 billion in cash at the moment. Even a small percentage of that put into Bitcoin would likely benefit the shareholders a lot more than the cost of the actual purchase. I think the more forward-facing ones that have already expressed some interest in crypto, like Meta in the past, might be good candidates for it, especially ones that already have a lot of founder-controlled shares that they can use their kind of decision-making to make these decisions more utterly.
All right, we got to leave it there, Alexander. Thank you so much.
Thank you.
Powered by Atlassian. Start for free. Set up.
It is the final day of 2024. There are lots of changes ahead when the clock strikes midnight for your wallet. Here's just a few that could impact your finances in 2025. First, the minimum wage is set to increase in 21 states and 48 cities and counties across the country. 8 of those states and 47 cities or counties are set to raise minimum wage to $15 an hour or higher later in the year. Florida and Oregon will also raise their minimum wages later in the year as well. Next up, student loan borrowers will now have to resume payments or see their credit scores take a hit. TransUnion estimates delinquent borrowers could see their credit score lowered by as much as 129 points. So don't forget to turn that auto payment function back on for your student loans if you can before that New Year's clock strikes at midnight. And some good news for seniors. Medicare out-of-pocket drug costs will be capped at $2,000 a year. That rule applies to all prescriptions issued under Medicare Part D. Additionally, those seniors will get a bump in Social Security benefits due to the government's 2.5% cost of living adjustment. And finally, the maximum amount of income subject to Social Security tax will increase from $168,000 a year to $176,000 a year. So a bit of relief in terms of taxes paid for those individuals receiving Social Security.
Powered by Atlassian.
Today, police fail to arrest South Korea's impeached president. What we know so far about the New Orleans attack and the Las Vegas explosion, which the FBI says are not linked. President Biden is set to block a Nippon steel deal. And what to expect from the Golden Globes. It's Friday, January 3rd. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool. Dozens of police vehicles moving into the centre of Seoul and lining up outside the compound to arrest impeached President Yoon Suk-yeol. But the attempt failed after a tense 6-hour standoff when presidential guards and military troops prevented them from getting inside. Yoon is under criminal investigation for insurrection over his bid to impose martial law at the start of December. But he's defied the arrest warrant, and hundreds of Yoon supporters have vowed to block the arrest. Some of the protesters carried Stop the Steal banners, waved American flags, and even sung the Star-Spangled Banner, calling on incoming US President Donald Trump to help solve South Korea's political crisis. FBI Deputy Assistant Director Christopher Ryer of the Counterterrorism Division saying the New Orleans driver, who had pledged allegiance to ISIS, acted alone.
In this attack, except for Shamsuddin Jabbar.
Officials say Jabbar drove from Houston to New Orleans on December 31st and posted 5 videos on Facebook on the morning of the attack.
In the first video, Jabbar explains he originally planned to harm his family and friends, but was concerned the news headlines would not focus on the, quote, war between the believers and the disbelievers, end quote.
But what caused Jabbar to become radicalized remains unknown. Michael Georgi is Middle East breaking news editor and tells us why ISIS may be regrouping and why US intelligence has warned it could be poised for expansion from regions like Africa.
They haven't claimed the attack, claimed responsibility, but the guy was flying an ISIS flag. So that was what you call a lone wolf attack. And those were quite extensive in the West when ISIS was at its prime. And it ruled huge swaths of Iraq and Syria. But now it's steadily making a comeback.
Are these types of attacks unusual, though?
There have been attacks in the U.S. There have been attacks in Europe. One possible flashpoint for ISIS is
Bobby,
Syria.
what about the regulatory aspect?
Blinken,
Does
the
that
U.S.
risk
Secretary of
decline?
State,
And I guess,
expressed
how does the M&A
concerns
factor
that
then
ISIS would try to
factor
make a
into some of your
comeback and the
projections?
uncertainty in Syria after Assad was toppled. There's a bit of a tricky situation where Syrian Kurds, who are backed by the United States, are holding all of the ISIS prisoners, thousands of people and their family. Now, the fate of those Kurds is unclear. Turkey wants to dismantle them. The new ruler of Syria said he'll take them in the defense ministry, but it's uncertain, and any volatility around that situation, should these prisoners get out, escape, is worrisome.
There's a number of things
Law
that
enforcement
I'm kind of
officials in
looking at
US
as far as
cities have
CES
beefed
goes. I
up
think
security
first
after
and
the
foremost
Bourbon Street attack,
is
which killed
obviously going to
15
be
people.
AI, but not
And
just AI
after an
generally,
explosion
there's
hours
AI
later
agents,
outside
which
a
are,
Trump hotel in
advanced
Las
AI
Vegas. The
capabilities
FBI
that
says it has
can
so far found
do
no
things
definitive
autonomously or
link between the two.
semi-autonomously for you
Officials
across
say they've
various apps.
positively
So,
identified
for
the
instance,
person found
an
dead
AI agent
inside the
could pull
cyber
information
truck
from your
that
email
exploded as a
and
US
drop
Army
it into,
soldier in Colorado.
For example, a spreadsheet
Police
app
say
or
Matthew Leibelsberger,
other
37,
kind of doc or
acted
a
alone.
customer relation management
Las Vegas
doc,
Metropolitan
basically
Police
trying to
Department
streamline
Sheriff
different
Kevin
processes to
McMahon.
get rid of that
We also
mundane
discovered
work. Something
through
that
the coroner's
companies
office
like, aforementioned
that the
Microsoft
individual
have been talking about.
sustained
Google
a gunshot
showed off,
wound
capabilities
to the
similar,
head
in
prior
a
to
demo,
the detonation
but pointed out that
of
it was
the
just a
vehicle.
demo.
The vehicle
putting it
and
out there
location of the
to
explosion have
trusted
gained a
users,
lot of
but
attention.
it's still a demo at
A
this
close
point, but
relative
you
of
can expect to hear
Leibelsberger
more
said he
about
was a
AI agents
supporter of
all
President-elect
across
Trump,
CES. We
adding
got
that,
kind of a preview
quote,
last
he
year with
thought
that
Trump
Rabbit
was the greatest
R1,
thing
that
in the
little
world.
device that basically was just an AI on its own. And you can expect more of that.
US President Joe Biden has decided to officially block Nippon Steel's proposed purchase of US steel, according to a person familiar with the decision.
Intel, Qualcomm,
Biden, President-elect Donald Trump, and a politically influential labor union had voiced opposition to the effort by Japan's top steelmaker to acquire the iconic American firm that helped build the Empire State Building and arm Allied forces in World War II. Katya Golubkova is our chief correspondent for Japan Commodities. So Katya, what does this mean now for Nippon Steel?
Of course, it's unpleasant news for their long-term strategy because they indeed wanted to add another 20 million tons of steel capacity per year to their production globally.
The software that goes into that is just as important, and so you could expect that as well. And finally, I think kind of over all of this is that cloud of potential tariffs that could impact Silicon Valley and the tech industry around the world. And so that's something that I think a lot of companies may not talk about as much, but definitely is going to be percolating in the background.
And Japan's a huge investor in the US, right? What does this deal being blocked mean more widely in terms of Japanese-US relations?
This is a very good question, and there are different opinions.
A lot of tech news on a lot of different fronts, and you'll be covering all of it. Dan, thank you so much for joining us.
Thinking that this particular situation will be locked around steel and Nippon Steel in particular, and they don't expect that there will be a big wider implication because the deal from the business perspective it came during the election time. Also, if we remember just like a week or 2 weeks ago, there was an announcement by SoftBank of $100 billion investment to the U.S. economy. So didn't stop SoftBank of proposing that huge investment to the U.S. economy, which of course is a sign of that business should be continued as usual.
The German and French foreign ministers will later today become the first top diplomats from the European Union to visit Syria since rebels seized control. Annalena Baerbock and Jean-Noël Barrot will meet Ahmed al-Sharaa, the leader of Syria's new rulers, on a one-day trip. Meanwhile, in Gaza, authorities say Israeli airstrikes have killed at least 68 Palestinians across the Strip on Thursday, including the head of the enclave's Hamas-controlled police force and his deputy. Israel says the deputy was the head of the Palestinian militant group Hamas's security forces in southern Gaza. House Republicans are scheduled to elect a speaker later today, and Mike Johnson is up for re-election for the top job. While he has the thumbs up from Trump, it would only take 2 defections to sink his chances, given the Republicans' narrow majority. Hollywood's awards season kicks off on Sunday at the annual Golden Globes. Comedian Nikki Glaser will be heading the affair for the first time this year. Before her debut, she sat down with Reuters to talk boundaries for her material.
It's like there's definitely jokes that I wanted to make that I had to cut that just are too critical or too cynical. And this is not a roast. This is a night to celebrate stuff. So I want to set
For who might dominate the evening, that we asked our entertainment reporter, Lisa Richwine.
Well, Wicked is one of the big nominees. That's the musical that was based on the popular Broadway play that is a huge hit in theaters. It has several nominations, including for both Ariana Grande and Cynthia Erivo. Emilia Perez, which is a movie on Netflix, has the most nominations. It is also a musical. It will compete against Wicked in the Best Musical and Comedy category. The Globes do things a little different than the Oscars, where they put the films into musical or comedy and drama. So in the drama category, the leader is The Brutalist.
चलो अब यहाँ एक बार रिपीट कर देता हूँ फिर से क्रूड ऑयल नेचुरल गैस ओवरऑल देखोगे तो बुलिश ही बने हुए हैं बट बोथ आर ऑन रेजिस्टेंस नेचुरल गैस 2 बार रेजिस्टेंस ले चुका है एक बार यहाँ से लिया था एक लो बनाया था फिर से रेजिस्टेंस लिया एक और लो बनाया बट लोअर लो नहीं बना पा रहा है ये तो अगर ये इस स्विंग के नीचे 309 के नीचे क्लोज नहीं करता है तो फिर ये ब्रेकआउट के लिए चला जाना चाहिए क्योंकि एक ही लेवल पे मार्केट अगर ये पैटर्न क्रिएट करता है तो फिर ब्रेकआउट ही आता है अभी तक आ जाना चाहिए था नीचे बट लग रहा है कि शायद ये नीचे ना आए अब ध्यान रखना अभी ये रेजिस्टेंस पर ही है 630 होने वाला है न्यूयॉर्क सेशन के बाद शायद थोड़ा सा मूव करे ऊपर जाता है तो एक छोटा सा रेजिस्टेंस 323 है उसके बाद मेजर रेजिस्टेंस 339 है नहीं आया तो फिर ब्रेकआउट रीटेस्ट पे भी बाय कर सकते हैं नीचे सपोर्ट का और ये रीटेस्ट ऑयल भी ओवरऑल साइडवेज ही था फिलहाल के लिए एफईजी से थोड़ा बहुत बाइंग आई थी मार्केट में अपने रेजिस्टेंस जोन पर ही है कुछ खास सेलिंग आ नहीं रही है मार्केट कुछ ज़्यादा ही बुलिश बन रखा है इट इज़ ऑन रेजिस्टेंस 6368 इज़ अ रेजिस्टेंस अगर ये होल्ड नहीं हुआ तो फिर ब्रेकआउट रीटेस्ट पे बाय करेंगे नहीं तो यहाँ से एक सेलिंग का प्लान है ब्रेकआउट हुआ है क्रूड ऑयल का कुछ ज़्यादा ही बुलिश हो गया रेजिस्टेंस फॉलो ही नहीं कर रहा सेम सिचुएशन नेचुरल गैस की बनी हुई है वैसे अब 6 जनवरी है तो थोड़ा सा मेरे अकॉर्डिंग तो वॉल्यूम आ जाना चाहिए बड़े प्लेयर भी वापस आ गए होंगे
Bringing you everything you need to know from the front lines into rest.
Lots of changes ahead when the clock strikes midnight for your wallet. Here's just a few that could impact your finances in 2025. First, the minimum wage is set to increase in 21 states and 48 cities and counties across the country. 8 of those states and 47 cities or counties are set to raise minimum wage to $15 an hour or higher later in the year. Florida and Oregon will also raise their minimum wages later in the year as well. Next up, student loan borrowers will now have to resume payments or see their credit scores take a hit. TransUnion estimates delinquent borrowers could see their credit score lowered by as much as 129 points. So don't forget to turn that auto payment function back on for your student loans if you can before that New Year's clock strikes at midnight. And some good news for seniors. Medicare out-of-pocket drug costs will be capped.
Good evening to all of you.
To all prescriptions issued under Medicare Part D. Additionally, those seniors will get a bump in Social Security benefits due to the government's 2.5% cost of living adjustment. And finally, the maximum amount of income subject to Social Security tax will increase from $168,000 a year to $176,000 a year. So a bit of relief in terms of taxes paid for those individuals receiving Social Security.
Start for free.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest from Washington, D.C. Congress is set to meet on a snowy Capitol Hill today to certify President-elect Donald Trump's win in November. President Biden invited a group of new Democratic lawmakers to the White House last night and urged them to commit to a peaceful transfer of power.
Now it's your duty to tell the truth, to remember what happened, and not let January 6th be rewritten or even erased.
But the riot at the Capitol on January 6, 4 years ago, has turned into a political flashpoint, and President-elect Trump is widely expected to grant swift clemency to the 1,000-plus people who were convicted over the events of that day. We get that story from Bloomberg's Doug Krisner.
The president-elect has downplayed the severity of the attack and denounced its prosecutions. And he's expected to fulfill his promises of swift clemency for the 1,000-plus people convicted and the hundreds more with pending cases. The question is how such a move would impact democracy and the rule of law. Mass pardons would also set the tone for how Trump might wield the presidency to reward loyalists and, critics fear, punish opponents. This year's January 6th election certification has, for the first time, been designated a national special security event. In New York, I'm Doug Krisner, Bloomberg Radio.
All right, Doug, thanks. So we look to politics now on our northern border. Canada's Prime Minister Justin Trudeau is said to be preparing to announce his resignation. The Globe and Mail newspaper says the announcement could come as early as today. It would trigger a race for the party leadership, with the winner becoming PM. Trudeau has been under pressure from lawmakers in his party to quit for months. Scrutiny grew last month after his finance minister, Chrystia Freeland, quit.
In politics on the other side of the globe, Karen, South Korea's corruption watchdog has asked a court in Seoul to extend a warrant to arrest President Yoon Suk-yeol. The move comes after their first attempt last week ended in failure following an hours-long standoff with Yoon's security team. Secretary of State Antony Blinken is in Seoul. He is expressing confidence in the country's acting leader.
We got serious concerns about some of the actions that President Yoon took. We communicated those directly to the government. At the same time, we have tremendous confidence in the resilience of South Korea's democracy.
And while Secretary of State Antony Blinken's in Seoul, North Korea fired an intermediate-range ballistic missile toward its eastern waters.
Well, back here in the U.S., Nathan, it is the first full workday with the New York City congestion pricing program in effect. And we get the story with Bloomberg's John Tucker. And, John, it's something of a first, yeah?
Yeah, this is actually the first program in the United States like it. Yolanda Morales lives north of New York, and she's the main caregiver for her aging father who lives in Lower Manhattan. And her reaction is typical among drivers, as she calls the toll an abuse on the working class.
To try and to make more payments just to do that, I think it's hard for a middle-class person.
Jano Lieber, the head of the MTA, would rather focus on the benefits.
The good news for the core function of fire and EMS is one of the principal goals is to make response times faster, and that's especially important for EMS.
1,400 cameras and Easy Pass detectors were switched on Sunday to catch every vehicle traveling south of 60th Street and to hit them with a new $9 toll during peak travel times. This is all part of the plan to bring $15 billion to the MTA to upgrade subways and mass transit. The goal is to coax more people to use mass transit and encourage trucks to make deliveries overnight. One of the hurdles is some residents don't feel safe on the subways. The fatal burning last month of a woman sitting in a subway car at Coney Island shocked the city. There have been several stabbings and incidents of people pushing riders onto train tracks. And looming large over congestion pricing, the change of administration in Washington. President-elect Trump opposes it. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thanks. No doubt issues that'll all come up later this morning when we speak live with MTA Chief Executive Officer Jano Lieber on Bloomberg Surveillance. You can catch that conversation 8:40 a.m. Wall Street time right here on Bloomberg Radio.
Well, Nathan, we turn to the markets now, and futures, they're higher as we kick off the first full trading week of the new year. This morning, the yield on the 30-year Treasury climbed to its highest level since November of 2023. Right now, it's at 4.82%, and S&P futures are up 0.4%.
And this market week, Karen, is going to feature a jobs report, Fed minutes, and a smattering of earnings. Let's get a preview now from Bloomberg's Charlie Pellet.
Magnificent 7 profit growth this year is projected to slow to 17.9%, while earnings increases for the rest of the S&P 500 accelerate to 10.9%. Emily Rowland is co-chief investment strategist at JH Investments.
In order for earnings to see these double-digit estimates that are being baked in right now, you probably need to see bond yields come down a bit here. You probably need to see that cost of borrowing again sort of become a little bit more mitigated here.
This week we hear from Constellation Brands, Delta, and Samsung in New York. Charlie Pellet, Bloomberg Radio.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The NFL regular season is over. It ended in Detroit last night. The Lions and Vikings both came in 14-2. A lot at stake for the winner, a first-round bye, then home field advantage. The loser having to hit the road. It figured to be a close game. It was not. All Detroit. Lions won going away 31-9. Patriots beat the Bills 23-16 to end a second consecutive 4-13 season. They fired Bill Belichick after last year's. Yesterday, they fired his successor, Gerard Mayo. That's a Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
Not everybody likes talking about money. Some people find
Track progress in real time. Get started in
A record number of travelers are expected to fly next year. Passenger numbers are expected to hit 5.2 billion in 2025. That will be up 6.7% from this year and passing the $5 billion mark for the first time. That's according to the latest numbers, projections that we've gotten out from the International Air Transport Association. Now, amid the improving demand backdrop, our next guest upgraded American Airlines to outperform from market before updating her earnings forecast, taking into account an improved revenue environment. Let's talk about that and more. We want to bring in Savi Saith. She is a managing director at Raymond James. Savi, it's great to have you here on Yahoo Finance. Let's start with your call on American. It's one of the things that stuck out to us here in the market this week. You raised your rating on the company to outperform, saying that it has an attractive risk-reward profile. Talk to us a little bit more about why you're seeing such an opportunity for American at this point.
Hey, Shauna, thanks for having me. Yeah, what we see here is generally a kind of a demand environment that's holding. It will really depend on the economy. But there's also just in the industry itself some capacity discipline that's coming in to help right size some overcapacity that we saw in 2024 and we've seen for a little while here. On top of that, what you've seen at American is a competitive capacity environment that's quite constructive for them. And also, they shot themselves in the foot with some corporate policies that they had, or policies that they had for corporate travelers that they've started to unwind, and that created issues last year. And we're seeing kind of decent traction that they'll start to see that revenue stream recover in 2025. So a good industry backdrop and some self-help from American, which is already, I should point out, doing really well on the operations front and improving it relative to pre-pandemic. So we see a kind of a good setup here overall.
You also note that one of the potential drivers and tailwinds for American could be the U.S. economy and the strength of the U.S. dollar. Talk to me about how that currency impact could be a positive piece of movement for American heading into 2025.
Yes, Jenny, the U.S. point of sale to international has been really strong for a few years now. Not sure, it probably has a lot to do with the strong dollar, but there's also seems to be a renewed kind of interest in traveling internationally post-pandemic. And so right now the dollar is strong, so we think that continues. Around 25 to 30% of Americans' revenue is driven by international travel. So I think that's a really good setup there, and the current strong trend looks to be continuing into 2025 as well.
Savi, what about the regulatory aspect? Does that risk decline? And I guess how does the M&A factor into some of your projections for the new year?
Yeah, it's a really good point. We don't know what the new administration's plans are yet, but generally I think the sense is a little less regulatory risk than we've seen with the current administration. And even from an M&A standpoint, it will depend on the specific cases, but we think between the kind of the new administration stance as well as generally some of the smaller airlines struggling, there's a better chance of M&A. Now, that's not in our numbers and would be upside if we get a little bit more, capacity that gets right sized as a result, or even existing airlines that strengthen their position as they kind of partake in M&A. So I think that's upside to the group and definitely a higher likelihood in 2025 than we've seen these past few years.
And another theme we've seen play out in the airlines this year has been a push towards a more higher income consumer model. We've seen that across so many of the airlines. Just curious how you kind of rate that strategy and how you think that will play out and benefit some of these airlines when it comes to earnings this year.
Yeah, how I look at it is it's not necessarily catering to a higher income consumer. If you look at who travels, it tends to be more middle income and high income households. But what you're seeing is airlines offering more product that consumers might want to buy up to. And there seems to be a desire to buy up into those products. And so I think they're leaning into that. You saw this trend even pre-pandemic, where airlines were starting to offer more kind of premium offering. And premium, comes in many styles right now. Anything that's not next to the back of the plane seems to be considered premium, but there's extra leg room, there's first class, there's premium economy. There's also kind of first class on ultra low cost carriers, which is a slightly different offering. But clearly there's a desire among travelers to pay a little bit more to get a better product, and the airlines are leaning into that, and you're seeing a more aggressive push here next year.
And Savi, when you take a look at a little bit of a maybe medium to longer term basis, you've got Delta as your top pick. What gives Delta the edge?
Yeah, I think what we like about Delta is really the balanced approach that they have here. They have good domestic exposure, good international exposure. That balance sheet strategy is really smart in our opinion. Very balanced capital deployment between investing, putting money back into investments and deleveraging the balance sheet. Their target of, less than 2 times or actually 1 times gross leverage, I think is a most conservative target that we've seen elsewhere. And they're really preparing for the next shock that this industry will have to face. And, anybody who's watched this industry knows there's always a shock around the corner. So I think from a risk reward standpoint, they're really well positioned.
That's a great point. If you can prepare for risk in the airline industry, it sets you up well. Savi, thank you so much for joining us. We appreciate it. Happy New Year.
Happy New Year.
Wall Street analysts are largely expecting lower oil prices in 2025, with forecasts between $76 and $65 a barrel. Now, this could be a boon for the incoming President Trump, who has supported an increase in American oil production through deregulation. Joining us now for more, we got Rick Joswick, S&P Global Commodity Insights Head of Global Oil. We also have Leo Mariani, Roth Capital Partners Senior Energy Analyst. Great to speak with you guys this morning. Leo, I want to start with you. So you mentioned that some of the bearishness has disappeared recently when you look at 2025. What's driving that? Because it seems that the consensus has been a bearish one for oil heading into the new year.
Yeah, so I think if you look at it, WTI oil's traded better over the last couple of weeks. And I think really what folks are looking at are potential sanctions. They're going to increase maybe dramatically from the Trump administration starting in late January, which can pull some barrels off the market, most notably from Iran. There's also been a modest improvement in official selling prices in the Middle East as well from a few key countries there. And there's been some talk that some of the OPEC countries that overproduced in the last few years are going to make up for that a bit here in the first part of 2025 with some compensatory production cuts. I really think it's those 3 things that have improved sentiment a little bit on the margin of late.
Rick, what do you think?
Well, the key thing is that non-OPEC plus production is growing faster than demand for oil. So even if we have a cutback in some other areas, it's still likely that we're going to have more supply coming onto the market than there is the demand for that crude oil. And that means inventories are likely to build, especially in the first half of the year. So there still is this downward pressure that we expect on prices over the next several months.
Rick, is the market a little bit complacent at this point when it comes to pricing and what it's expecting? Yeah.
It really is. I mean, Dated Brent prices have been $74 plus or minus a dollar since September. WTI has been about $70, virtually unchanged, within a dollar. The market seems to feel that there is a cap to the prices in that OPEC wants to increase its production. And there is this looming inventory build that everyone's expecting for next year. And there's also a floor to the production because if prices drop lower, then you'd see less production out of the United States and likely you'd see OPEC Plus acting to cut. So we're kind of caught in the middle here. The key question also is what Leo was just referring to, in that what happens with Iran, with sanctions on Iran? If things tighten up on Iran and they produce less, that would be bullish, of course, initially. But what happens with Saudi Arabia and with other countries? Do they backfill for that lost production? There's a lot of uncertainty in the market here, even with the complacency.
Well, it's really interesting, too, given what you were saying, Leo, about Iran specifically. We have geopolitical challenges in Russia, China, and Iran. Do you think Iran is the key one to watch for the oil market?
Yeah, I think so for sure. I mean, look, I think that's clearly the country that Trump's incoming administration has already been talking about in terms of where there could be even more significant, economic sanctions. There's been, talk of just kind of, very full sanctions on the country, even from kind of day one and day two of the administration. If you look at, Iran's oil exports right now, they're probably somewhere around 1.5 million barrels a day, plus or minus a little bit. So clearly, there could be a lot to lose, potentially if those sanctions are effective. And certainly there's going to be some questions around that in terms of, will key, buyers of Iranian oil abide by some of those sanctions? And we'll just have to see what maximum pressure means from the Trump administration. But certainly I think he's going to go after financial institutions that facilitate the trade of Iranian oil, as well as shipping companies as well.
So, Leo, what should investors then be expecting in terms of pricing? Here we are. We've been pretty range-bound here this morning, just above $71 when you take a look at crude. Are we going to remain within this range, do you think?
Yeah, look, so my official forecast, which has been in place for the last handful of months for 2025, has been $70 for WTI. So, very close to kind of where, current prices are today. I actually think you're going to see probably heightened volatility, particularly in the first quarter, just because of the uncertainty around what Trump can do. So obviously I mentioned sanctions, which I think clearly would be a bit of a positive, for oil in the near term. But then as Rick said, look, clearly if those do take place, there could be a ramp in OPEC production later on in the year to backfill some of those volumes. The other key thing to look out for will be tariffs. Tariffs can clearly be bearish, for the commodity, as it would certainly make, oil more expensive for a lot of the world to import, and would likely put further upward pressure on the U.S. dollar, which makes crude more expensive.
Rick, how big of a risk factor do you think tariffs are?
Well, tariffs are a risk in a lot of different ways, depending on how they might be implemented. Is it just a negotiating tactic? But if tariffs were implemented, let's say, on Canadian oil product exports, New England is supplied to a large extent from Canada. So that would be an upward pressure on gasoline prices in the United States, in the northeastern United States. If tariffs were imposed on Canadian crude exports, that would result in trade changes. Canadian heavy crude would go to China, and other crudes would need to be imported into the U.S. West Coast. So there's a lot of uncertainty here. How much of this is a negotiating tactic? If there's general tariffs of modest level, then it's more of a global economic factor, a lower trade, which would tend to reduce fuel oil use for shipping, diesel use for trucking. So we are not likely to see any dramatic changes in the physical side of the oil industry from tariffs, though.
All right, Rick, Leo, thank you so much for joining us. Appreciate it.
Thank you.
15-16 पे नहीं है, FEG तो नहीं है वहाँ पे. 15-16 पे FEG नहीं है. ये क्रूड ऑयल में कोई रीटेस्ट नहीं हुआ है अभी, ठीक है. मार्केट स्टिल ऑन रेजिस्टेंस है, कैंडल वो लेवल के ऊपर क्लोज जरूर हुई है, रीटेस्ट नहीं हुआ है इसमें भी। बाकी नेचुरल गैस स्टिल ऑन रेजिस्टेंस एरिया, क्रूड ऑयल में रीटेस्ट नहीं हुआ है, ध्यान रखना, बाय मत कर लेना, रीटेस्ट नहीं हुआ है अभी भी। मार्केट स्टिल ऑन रेजिस्टेंस, थोड़ा कंसोलिडेशन करके जाए तो बेटर है, अदरवाइज इसको अभी भी रेजिस्टेंस ही मान के चलना, हो सकता है फेक ब्रेकआउट हो, रीटेस्ट नहीं हुआ है अभी भी। बाकी नेचुरल गैस देखते हैं क्या मूव करता है, 6:30 होने वाला है, लेट्स सी।
Cathay Courier's last-minute flexibility helps your business seize every extra second. We know how.
Consumer Electronics Show coming up, CES. What are you watching? What are going to be some of the key themes coming out of that conference?
Yeah, there's a number of things that I'm kind of looking at as far as CES goes. I think the first and foremost is obviously going to be AI, but not just AI generally. There's AI agents, which are, advanced AI capabilities that can do things autonomously or semi-autonomously for you across various apps. So, for instance, an AI agent could pull information from your email and drop it into, for example, a spreadsheet app or a other kind of doc or a customer relation management doc, basically trying to streamline different processes to get rid of that mundane work. This is something that companies like aforementioned Microsoft have been talking about. Google showed off capabilities similar in a demo, but pointed out that it was just a demo. They're putting it out there to trusted users, but it's still a demo at this point. But you can expect to hear more about AI agents all across CES. We got kind of a preview last year with that Rabbit R1, that little device that basically was just an AI on its own. And you can expect more of that. I think more so, we're going to be talking about chips. We have, obviously, NVIDIA's Jensen Huang. He's going to be giving a keynote for NVIDIA. We have AMD, Intel, Qualcomm, the whole slew of them all coming out with their own different either showings or presentations at the show. That's going to be huge. I think one of the other things that we're going to have to keep a focus on is automotive. Honda has already said that they have some new vehicles that they're going to be showing off at CES. This is something that more automakers are doing, by the way, is debuting their vehicles there. We have BMW showing up, Toyota. It's basically a who's who of the auto industry at CES now. And then the software that goes into that is just as important. And so you could expect that as well. And then finally, I think kind of over all of this is that cloud of potential tariffs that could impact Silicon Valley and the tech industry around the world. And so that's something that I think a lot of companies may not talk about as much, but definitely is going to be percolating in the background. People wondering, how is this going to impact sales of vehicles, of software, of chips? So it's going to be definitely something that a lot of people have on their mind if they don't say it outright.
A lot of tech news on a lot of different fronts, and you'll be covering all of it. Dan, thank you so much for joining us.
Start for free. Track progress in real time. Get started in Jira to work your way and stay connected.
Crypto had an eventful 2024. Bitcoin finally reaching $100,000 mark. And we also had David Sachs' appointment as the first AI and crypto czar, just to name a few. So as we head into the new year, let's talk about some of those top crypto themes to watch for in 2025. For that, we want to bring in Alexander Bloom. He's the CEO of 2Prime. Alexander, it's great to have you here on Yahoo Finance. You were recently out with 10 crypto predictions for 2025. We want to zero in on 3 of those that we think could have the biggest impact on the price of Bitcoin here moving forward. And that first thing that you pointed out was that the U.S. is going to declare Bitcoin a strategic reserve asset. I guess 2-part question here. 1, how realistic do you think that is? And then 2, how much of that optimism has already been baked into the price of Bitcoin here today?
Yeah, so thanks for having me on. I would say, first of all, in the light of the last year with Bitcoin ETFs being extremely successful, the most successful ETFs ever created, as well as the election of pro-crypto candidates and a pro-crypto administration, the backdrop is set for a strong 2025. In terms of your actual question, there's two aspects to the strategic reserve. One is by executive order, Trump can take the Bitcoin that the US government has confiscated and already owns and just say, this is part of our strategic reserve now. There's about 200,000 Bitcoin that the US government already holds. In addition to that, which is maybe a bit more complicated, is there's a bill in the Senate introduced by Cynthia Lummis to buy another million Bitcoin through the Treasury. That is a little bit trickier because it has to go through the whole legislative process and can't just be done with the soup of a pen. However, I think, if you look at the kind of pros and cons of being pro-crypto, if you support crypto, you get more votes, you get more political donations, and there's really not a lot of benefit to being anti-crypto unless you're completely bought by the banks. And so I think there may be the political will to actually approve that bill as well. We've also seen, it's also significant, not just the US doing it, but it'll set a tone for other countries to follow suit, just as other countries have collected gold in the past.
Yeah, talk to me about that part of your call, Alexander, the idea of other global central banks scooping up Bitcoin, especially in relation to the strength we're seeing in the US dollar. Can other central banks really afford to be hedging with an asset like crypto and Bitcoin?
I think, well, first of all, central banks can print paper money out whenever they want. And if they're buying a real asset with it, it's better than what they spend most of their money on, which is typically poor spending. And so I think central banks definitely can do it. It's a question of who has the incentive and kind of political will to do that. And I think there's two categories of groups that have that interest. There's one is people trying to get out of a dollar reserve asset. So maybe a country like Russia that has incentive to not be stuck to the petrodollar. And then there are countries that are trying to keep up with the US. So countries maybe like China or England that, if the US is doing it, even if there's just the US doing it makes the odds of it being a successful asset even greater. And so the game theory is, well, I want to keep up with the United States, and their involvement makes everything more likely to be make this an important asset. And so I think it's a very real thing, and central banks can definitely do it.
All right, Alexander, we have less than a minute here, but the third point that you bring out is that we might see a bit of a follow here in MicroStrategy's lead with a FANG company adding Bitcoin to its balance sheet. What signal is this going to then send to the markets, and who, I guess, of the FANG members?
Yes, so, by my calculations, these companies are sitting on about $383 billion in cash at the moment. Even a small percentage of that put into Bitcoin would likely benefit the shareholders a lot more than the cost of the actual purchase. I think the more forward-facing ones that have already expressed some interest in crypto, like Meta in the past, might be good candidates for it, especially ones that already have a lot of founder-controlled shares that they can use their kind of decision-making to make these decisions more laterally.
All right, we got to leave it there, Alexander. Thank you so much.
Thank you.
the final day of 2024, there are lots of changes ahead when the clock strikes midnight for your wallet. Here's just a few that could impact your finances in 2025. First, the minimum wage is set to increase in 21 states and 48 cities and counties across the country. 8 of those states and 47 cities or counties are set to raise minimum wage to $15 an hour or higher later in the year. Florida and Oregon will also raise their minimum wages later in the year as well. Next up, student loan borrowers will now have to resume payments or see their credit scores take a hit. TransUnion estimates delinquent borrowers could see their credit score lowered by as much as 129 points. So don't forget to turn that auto payment function back on for your student loans if you can before that New Year's clock strikes at midnight. And some good news for seniors. Medicare out-of-pocket drug costs will be capped at $2,000 a year. That rule applies to all prescriptions issued under Medicare Part D. Additionally, those seniors will get a bump in Social Security benefits due to the government's 2.5% cost of living adjustment. And finally, the maximum amount of income subject to Social Security tax will increase from $168,000 a year to $176,000 a year. So a bit of relief in terms of taxes paid for those individuals receiving Social Security.
Start for free. Track progress in real time. Get started.
A record number of travelers are expected to fly next year. Passenger numbers are expected to hit 5.2 billion in 2025. That will be up 6.7% from this year and passing the $5 billion mark for the first time. That's according to the latest numbers, projections that we've gotten out from the International Air Transport Association. Now, amid the improving demand backdrop, our next guest outperformed from market performance.
Hasn't really been sort of perhaps the greatest start to the year that policymakers in China would have seen, just given the amount that they're coming out to try and stir up and generate support for the economy, for the market outlook. What are you making of 2025 so far?
Yeah, well, we have one of the worst starts of the year since 2016. Right? So I think, people are starting to realize that, between now and the Chinese New Year, probably there's a vacuum of policy, right? So they're probably not going to come out with, a stronger stimulus policy just before the Chinese New Year. So maybe the central bank is going to do some OMO, open market operation, to inject some liquidity for the Chinese New Year, because that's a period where you need intense liquidity injection. Because during the Chinese New Year, people give out red packets and all that, and it tends to be in cash. Right? So it's a season that requires quite a bit of liquidity in the system. But other than that, people were thinking, they'll wait until the twin session in March to see more details on the policy before they're ready to make another move on the market.
Yeah, if we look at history, any potential liquidity injection before the Lunar New Year will likely spur even a short-term rally. The question I have for you is, right, would you buy the current dip, for example, Hao Hong?
Yeah, well, I think it's still not attractive enough for me to buy. I mean, even though the liquidity injection before the Chinese New Year tend to be very strong, but it's also expected by the market, right? So because every year they more or less do the same thing, and also right now because the trade war risk is rising. Donald Trump is getting into the office very soon, right? So tariff is one of the first things he's gonna execute. So I think people are waiting for further signal to see further currents to see what's gonna happen next, and that's the reason why we're seeing substantial depreciation pressure on the Chinese yuan.
So you said that the conditions aren't quite favourable just yet for you to consider buying. What do you think does make it more favourable then? Do you see further weakness and then just the valuations are the reason to get in? Or do you actually think that it's more the policy side and you get enough of an announcement that's concrete enough to be attractive to you?
Yeah, well, I think, for the Chinese equity to do better this year, firstly, we need to see a pause, at least a pause in the decline of the property price, right? So because in the past couple of years, because of the property price continue to decline, it actually erode people's confidence in the economy and also, take away the consumption power as well. I think secondly, you need to see a expansion of the government's balance sheet, right? So you need to see a very strong fiscal stimulus, right? So, I think the central government balance sheet is the only balance sheet that is still clean enough for expansion in this cycle. But I think so far we haven't seen concrete signal for the central government to expand its balance sheet. And, I think thirdly, we need to see more policy on how to promote consumption and improve social welfare for the Chinese people. I think back then, especially in the past couple of years, because the property sector has been falling, therefore, most of the new investments has gone into manufacturing. And actually, the Chinese government directed the Chinese banks to lend to the manufacturing sector, and that creates a huge overcapacity in that sector, and also, substantial deflationary pressure. So I think, these three things are probably the key sort of indicator that we'll be looking for in this year for the Chinese stocks to do better.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress.
Let's get to our guest, Timothy Mo, his Chief APAC Regional Equity Strategist at Goldman Sachs. Tim, good to have you with us. I mean, strong words from your Danny saying uninvestable still. And Hao Hong also not convinced. I mean, to be fair, Chinese stocks are off to their worst start in a decade.
Well, there's a lot we have to unpack, Linda. First of all, thank you very much for having me on. It's a pleasure to be here. But the word uninvestable is, I think it's not very helpful because this is a roughly 10 trillion market cap market overall, if you take the A shares, the H and the ADRs, and it trades about $150 billion a day. So the idea that it's uninvestable is kind of a sweeping statement. So I think that's not terribly helpful, frankly, way to characterize things. I think it's probably better and more insightful to say that it's very challenging and complicated to invest in China. And it seems to us from the data we look at that the constituents who are investing, the people who are investing in China, that constituency is shifting. So it's very clear that U.S. investors have decumulated, disinvested, some of that being intensified or required by government edict, if you would. Texas and I believe one other state have actually just issued proclamation saying that public pension funds cannot invest in China. So, there's either a legal or a strong overarching effort to reduce the amount of U.S. investment that's going on in China. Having said that, if you look, for example, at southbound Connect flows into Hong Kong, and just to remind your viewers that southbound Connect is mainland Chinese money coming into the Hong Kong stock market, the amount of flows that came in 2024, last year, was over $100 billion US dollars. So Chinese investors are buying, quote, their own market. So I think that one of the themes that we're seeing is a shift in leadership and ownership from foreign investors, particularly U.S. ones, which is obviously informed in part by geopolitical tension and so forth, which we can get into in our conversation, to more domestic investors. The other point I think is very important to emphasize is that the requirement for China to do well, and what our assumption is, but it's very much the critical ingredient in our tactically constructive view on China equities, is that government policy does come through. Now, we think it will do. We can unpack more of that in our conversation, I'm sure. But as sort of an opening, observation, I would say that you've got this shift in ownership of Chinese equities and the requirement for equities to resume their upward move, which we saw a very powerful move in September and October, and we've corrected about half to 60% of that. To get to sort of stabilize here and move further up, we're going to need clearer, more tangible evidence of policy support.
You talked about how the national team has been boosting Chinese stocks. We're talking about what? I think, 6% of the valuation of Chinese stocks as a whole. I'm just wondering whether that is good enough for you to make an overweight call in Chinese stocks.
So it's not dependent on the national team. A national team sort of comes in at times of particular stress and will sort of form a bottom in the market, or a short-term bottom in the market. I think what's required here is further evidence of Chinese policymakers implementing the so-called Beijing put, the idea that they want to take out the so-called left-tailed risk, the downside risk in growth. We think that clearly happened with the September 24th set of policy measures. That was when the PBOC and the CSRC and the National Finance Regulatory Authority, those are the three key monetary bodies, they had a joint press conference, as you may recall, which basically really signaled the shift in the market. That was quickly followed by a succession of other press conferences showing that there really was a policy pivot. I think that was enough to get the market going. In fact, it was a rally of nearly 50%. But we need now to see further evidence of the implementation of that. Now, we do expect that. We think that monetary policy would turn more accommodative. That we're expecting two 20 basis point cuts in interest rates. We're expecting two 50 basis point cuts in the reserve ratio. We think there will be significant increase in fiscal support. The broadest measure of fiscal is what we call the augmented fiscal deficit. That's both the central government deficit plus the more broad provincial deficits. We think that will increase close to 2% of GDP this year, which is significant. So we think there are efforts to support growth. And if that happens in the context of a market which, as of last night's close, was trading at 9.7 times forward earnings, and where positioning is still light, we think that the combination of that could get China to go back up this year.
But the thing is, all the stimulus measures that you've announced are pretty much factored in. That's why we saw the Chinese stocks gaining at the end of 2024. How much more upside can you expect?
Well, I say yes and no. So to just get some numbers on this, so the trough of the market was September 11th, and we had, as I said, about a 50% rally, close there too, into the second week of October. Since then, we've given back about half of that, or a little bit more. So put that in valuation terms, we went from just below from 9 times earnings to 11 times earnings. And we've now corrected, as I said, back to sort of just under 10 times earnings. For a variety of reasons, which we've articulated in our research, we think that 11 times earnings is roughly what we think would be, quote unquote, fair value for China in the context of the macro and political and policy and so forth environment that we're expecting. So if indeed China comes through with a policy support, could you get a moderate recovery in valuation from, in round numbers, 10 to 11 times? And then as you go through time, you can also have some underlying earnings accretion, which we think will be sort of high single-digit earnings growth. If you put those together, about a 10% valuation expansion and about 8 to 10% earnings growth, that could get you high teens type of return. And we've seen that China can do that in like a week if the sentiment turns. So, I agree that China is very difficult to invest in. And one additional point that's maybe helpful for your viewers is that many global investors that we speak with have really disinvested or just said, look, China's not worth it for me. I actually have a fair amount of sympathy for that. Or I can understand why they have that view, because if the global market is your playing field, so to speak, and China now is only about 2.5% of the global ACWI, All Country World Index. U.S. is 65%, thereabouts.
Biden saying no to Nippon Steel buying U.S. steel. It is about national security. You got to wonder what it means for deals generally going forward, and also what it means for investor sentiment.
So it depends on which deals we're talking about. If it's cross market or within market, et cetera. Maybe I just step up a little.
How can public-private partnership drive green innovation?
We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Chung-Wilkins with David Ingles.
Let's get to the top stories today. Chinese assets in focus after the worst start to a year in almost a decade. That's for equity markets. The currency, of course, in focus too, with the yuan weakening past this key 7.3 handle against the U.S. dollar. The PBOC pledging to step up support for the economy.
And two Fed officials stress inflation fight is not over as traders look ahead to key data releases this week, including the December jobs report.
And Hon Hai delivers an upbeat sales outlook as the global AI infrastructure build-out continues to accelerate. Welcome to the show. Hope you're all well. A fresh start, question mark, as we approach the Monday session. We are, of course, on a 3-day decline as far as equities go, particularly the onshore. We'll talk more about that in a moment. Generally speaking, though, we had this rally on Wall Street, and as you can see, we're picking up a little bit across most equity markets. Japan, though, is going the opposite way. That's a different story with yields and the 10-year hitting the highest here since 2011. Hon Hai is coming online 3%. We talked about that in our headlines. That's lifting what you're seeing on the TAIEX index here. Dollar strength, does that continue? We'll talk more about this survey we did among clients. U.S. exceptionalism. Equity markets in the U.S., including this long dollar trade, set to continue at least over the short term. S&P futures 5984. As you can see, flip the boards, please, and have a look at the Chinese currency. We'll look at this very, very closely here because couple of things. We took out the 7.3 on the onshore rate. On the offshore rate, as you can see, we're extremely close to hitting all-time lows in this one, about 0.2% away from levels we hit back in October of 2022. The other thing we want to talk about is the spread between this and the onshore rate, which is at 7.3. So you do the simple math, at 300 or so pips, that's actually the widest in about 3 months or so. So does that give traders at least some food for thought to maybe pare back some of these expectations or more weakness? We'll see. We'll see what happens with this. Equity markets. Let's go. Let's have a look at this. So futures coming online over in Singapore, 0.2%, 0.3% to the upside as far as A50 futures go. Winnie Wu out of BOFA joins us, or B of A, joins us at the bottom of this hour to talk us through They just put out this report on how to trade the short term cautious, long-term greedy is the headline coming on that. She joins us at about the open. 1.6 on the 10-year yield. And, of course, Rebecca, we're talking a lot about the currency at these levels. Again, we're extremely close to those all-time lows here on the Chinese currency, offshore rate, to be more specific.
Yeah, an enormous amount for us to nerd out on this morning, David. All of these Chinese assets really in focus with these really key levels. So mainland stocks slump, looking at the agenda of what we're really focused on. Of course, the worst start to onshore Chinese equities in nearly a decade there, particularly that small caps route also in focus. And this CGB rally, a seemingly unrelentless rally, we went lower than that 1.6% level. We have the likes of Lombard, ODA, and other strategists really saying that actually this year we're going to test this 1% level. Pretty extraordinary to even be talking about that kind of move. And then, as you were saying, David, the yuan very much again in focus. Of course, we had this sort of quite supportive fix actually on Friday, but it was in the trading itself where we saw this shift and we saw this breach of that psychologically important 7.3.
Yeah, and we'll get more on that, of course, in about 26 minutes or not, to be more exact, when the onshore rate comes online. And to Rebecca's point, right, this 1% call on the 10-year yield, we have inflation numbers coming through this week, which will remind us maybe of the lack of inflation and the pressures there leading to where you are on rates. Let's bring in our team to talk us through everything from interest rates to potential reserve ratio requirement cuts from the banks, this PBOC statement, what that means for the CGB rally and also the currency. Our China correspondent, Min Lo, is here with us alongside our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Stephen Chu. Min, let me start with you. We were expecting a triple R cut going into the new year. It didn't happen, clearly. What are the expectations now over the short term?
Yeah, so the PBOC held its MPC meeting, the Monetary Policy Committee meeting quarterly in December, and they just released a readout on Friday. And again, we heard that same message, the PBOC saying it sees a room for, or it will cut interest rates and triple R at an appropriate time, which is nothing new. As you said, Pan Gongsheng had signaled that he saw room for triple R cuts at the end of last year, but that didn't materialize. So the expectation now is that we will get a cut imminently, sometime in the first quarter, a possible window could be maybe before the Lunar New Year holiday, after Trump's inauguration, because that is likely the first big catalyst we will see across equity markets when Trump gets inaugurated, or when he announces his first opening shot, if you will, when it comes to the tariff. And the other factor that could perhaps be holding back the PBOC is because the Fed's expectations for rate cuts has also been pared back. And you add to that the unstoppable bond rally, also adding another challenge to the PBOC as well.
Mimin, that's right. And with the RRR as well, some expectation perhaps that they will use that to support the stock market. Sometimes it's a way that we see authorities intervene. But can you help us decode a little bit more from that PBOC statement? You know, they're saying more support for innovation and consumption, more of these sort of extraordinary tools that we heard reference at the end of last year.
Yeah, so the PBOC, as I said, we have seen the yuan really breaking below that psychological level. And beyond the yuan, what the PBOC really need to focus on is also boosting the domestic economy. So it has pledged to provide more support to, for example, the consumption sectors, to the tech sectors. Not a lot of elaboration on what that could mean, but it could possibly look like guiding financial institutions to step up credit extension, for instance, by lowering the interest rates or the fees for consumer loans, for example. That is one thing we could look forward to this year.
735.69 currently on the offshore rate. We mentioned this, Stephen, earlier on. 737, I believe, takes us to all-time lows. 735.03, sorry to inundate our viewers with a lot of numbers at this point in time, is the onshore level to watch, because that's the 2022 high, I believe, on that. Do we get to these levels without almost any effort?
I think so. Like, it's still January. Like, when we look at it, basically, it's very hard for them to defend 7.2, because if you look at the basket, which is what matters now, especially this year, before last time, during the last trade war, it's US-China. So dollar yuan might be the focus. But this time, President Trump basically has promised to do a comprehensive tariff, meaning that the competitiveness of the yuan against its trade partners, actually China's largest trade partners are the ASEAN, the Eurozone, so the euro matters, the other currency matters. So the yuan basket matters a lot more this time. I mean, if you look at the basket, look at the fixing, the basket level is 102. That's too strong. Even the offshore CNH, it's just at 100. That's too strong as well. So we see actually there are room for China to let the yuan to weaken a little bit further. Record low offshore, to your point.
Yeah, Rebecca, remind me, what was that, the projection from Lombard ODA on the CGB?
Yeah, I mean, this is interesting. They're saying that we are going to test that 1% level this year.
That's a little bit aggressive. I mean, direction-wise, yes, for sure. Yeah. Like, when people ask me what do I look at the CGB, whether it's this year, 3 years ahead, just look at Japan. So a flatter curve, lower rate will be the fate of CGB going forward. But for now, like 1% is really aggressive. I'm sure people will do something, intervention, verbal intervention, actual intervention to slow that drop, but direction will be there.
Speaking of Japan, since you brought it up, the 10-year yield in Japan, I believe, the highest in 13, 14 years. How do I look at the BOJ conversation as we enter this new year? Higher rates and weaker yen still, or how does it work?
Higher rate. I mean, the yen will still weaken against the dollar because the Fed may not cut as much, probably 2 times. So that dollar yen may still be somewhat consolidated, but the yen against other currencies may still strengthen, especially the yuan. We look at the PBOC is going to cut probably triple out and the policy rate, but the BOJ will have to hike because wages are going to be accelerating and then the inflation are still there, so they have to hike this year.
Stephen, I'm sure we'll be speaking to you plenty more just this week, in fact.
Yeah, if not in the next hour.
Yeah.
Pleasure.
Bloomberg's China correspondent Min Lo and Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu there. And coming up, hear why B of A Securities think the Chinese economy will continue to struggle this year with or without tariffs. Equity strategist Winnie Wu joins us a little later.
But ahead of that, HSBC Global Private Bank's Willem Sells joins us to share his views on the markets as we enter this new calendar year, counting down to the open of trade in Shanghai and Shenzhen and here in Hong Kong. Futures are pointing slightly to the upside this Monday morning, 20 minutes away the opening bell. This is the China Show. Good morning.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
not want to see further slowing in the labor market. So while we do absolutely have to continue to get inflation down to our 2% target, we have to be resolute about that. We have to do it in a thoughtful manner so that we can also support the full employment.
Obviously, our job is not done. We're not at 2% yet. So we're definitely aiming still to get there, and we know the job is not done.
The FOMC has recalibrated the Fed funds rate down 100 basis points to 4.3%. Inflation's not yet back at target, so we still have more work to do, but we don't think we need to be nearly as restrictive as we once were to finish that job.
Some Fed officials there stressing that the inflation fight has not yet been won. And here's what we're watching in terms of data elsewhere this week. US data, of course, still going to be in focus. We're expecting those on Friday, those US December non-farm payrolls, expecting a bit of moderation as we've seen, but still a pretty firm jobs market. We've got a slew of data coming in from Asia and China too. Of course, today, the Tyson Composite and Services PMI, David, wondering whether or not that matches up with some of the official data that has already come in, as well as a CPI coming from the Philippines and Australia Tuesday through Wednesday.
Yep, and to top things off, as Rebecca was pointing out, and we were just talking about the Fed there, right? So the consensus is they've cut so far 100 basis points. They'll probably, based on current forecast, sit on the January meeting and will effectively get a confirmation of the jobs report coming Friday of still modest, if not moderate, job growth in the U.S. following really exceptional 2022, 2023 monthly averages as well. Yeah.
Yeah, I mean, I think talking about that exceptional 2024 that we saw in U.S. markets, let's bring in Willem Sells, Global CEO of HSBC, Global Private Banking and Wealth. I mean, thank you so much for joining us. Let's kick off with the U.S. We are about to enter this period of uncertainty. We're expecting the U.S. to formulate policy over, let's say, the next 3 to 6 months. How are you advising clients to play this period, and where are the winners?
Well, we have to start with the fundamentals, and the fundamentals are is that the U.S. is growing at a very decent clip in terms of economic growth, and if anything, the policy is going to, stimulate that further, and earnings as well, are supposed to accelerate up to 15% by the end of the year, and also broaden between sectors. And so that's the first kind of thing that we are telling clients is, look at where, that earnings growth is going to come. Yes, of course, IT is going to continue to print strong earnings growth, but the 493 forgotten companies outside of the Mac 7, those ones are supposed to accelerate. The earnings bar for Q4 for those companies is very low. Markets are only expecting 3.5% earnings growth there year over year. So I think they can exceed that, and that is going to trigger, a positive attitude there, especially if there is then pro-growth stimulus.
Yeah, and I'm wondering what the role of China in your portfolio is, and while you perhaps mull on that, let me just mention here for our viewers here, the PBOC is out with a fix today, 718.76. You do the math with the 730.57 handle. That's 100, almost 1,200 pips stronger than estimates, which is slightly less than the 1,300 pips we've gotten spread over the last 2 days or so. Separately, Min Lo, our China correspondent, just laid out the PBOC statement from the MPC meeting which took place. We now have the Financial News, which is the PBOC-backed newspaper, which effectively means if you see it there, they're probably going to do it. That they are showing resolution to stabilize this currency, and they're laying out they have ample tools to deal with the weakness we are seeing in the currency. Markets are responding, some strength coming through in the currency right now. Willem, let me bring in on the China conversation here. Is this a good indication of the equity markets, the weakness in the currency? Can I tie those two things together?
So I think on the Chinese question, where it actually fits in the portfolio, for us it's a neutral allocation currently, in spite of the very low valuations, because we are waiting for a trigger for that value to be unlocked. Now, the government very well understands that they need to focus their...
Didn't we get that trigger, though, in late September with the policy?
I think it needs... What the market is looking for and what our clients are looking for is kind of more of a big bang approach. So far, it's been very incremental, and markets want more a bigger package. They also want, it in one go, and very much focused on domestic stimulus, and in particular, actually, on the consumer. So we've started to see, a number of those measures, the trade-in schemes and so on, which are starting to create a little bit more optimism. But of course, before you've seen the measures from the US, you can't have the full reaction from China, or you can't have the full reaction from the markets in terms of a positive attitude.
I just want to pick up on your point there about the need for this big bang, this desire from investors for something really hefty. Is that the only thing that will move you to overweight, or is there a scenario in which a sort of slow burn might move your positioning?
I do think that given that what you saw during the summer, where you had that stimulus and then basically the sell-off, which was to a very large extent, I think, related to people who had been sitting on a lot of Chinese stocks and basically did, their profit taking or cutting smaller losses. I do think that you need, a stimulus measure that is convincing rather than a slow burn. But indeed, maybe what you're referring to is that you do need to actually then see it translate into the data, into the earnings data, into the economic data, for investors to see that the proof in the pudding, to jump on the bandwagon. Because especially foreign investors, I think, are going to wait until they see those things translate in actual hard figures.
There has been an exceptionally high bar for foreign investors to reallocate back, and I'm wondering, well, two things. There's a ton of cash that's still sitting in cash. Do you think that we see a drawdown there, and where do you think that should go?
Yeah, so it's true that foreigners are sitting local investors as well are sitting on a lot of cash. So and also they don't have any allocation to China, or many don't have any allocation to China. So indeed, if they then see the positive numbers, then they will need to step in, and that will boost the market as well. But they want to see the proof in the pudding first. They don't have the FOMO, just because of the valuations. I think in terms of your broader question around cash, I do think, if you look at 2024, 12% return on a diversified portfolio, not very racy, just a moderate portfolio. And in 2023, that was 14%. So that tells you that there are a lot of opportunities out there outside of cash. As those cash rates come down, I think people need to go into those multi-asset strategies. We see some interest in fixed income, but I think you basically just clip the coupon there, no price gains. Equity markets, for now, it's mainly the US, but also Japan, a little bit of UK to try to diversify, India, Singapore, and then alternatives. Alternatives for a lot of our clients is the big number one thing that they will be adding to, especially if they believe that US valuations are high and bonds are not going to rally. It's in alternatives, and that's hedge funds, that's private equity, that's infrastructure.
And you've said that partly in response to trying to deal with some of these geopolitical risks, not least US-China and so on, that investors are thinking about thematics and long-term rather than sort of short-term winners or losers per se. I just want to ask how you think about Asia in that context. How does Asia fit into that approach?
So, from an Asian perspective, it's interesting that this region is obviously extremely diversified, and clearly people here know that, but in the West, people need to understand that, Japan, India, China, very, very clear different drivers, very uncorrelated, which actually makes quite a big attraction of the region to make an allocation to that, because it already immediately diversifies you. For example, if you don't get the timing right between India and China, quite often actually people go from one into the other, so you get that pair trade. So you don't need to try to time it if you allocate to all three regions. I do think that in Japan you continue to see that mild reacceleration. They're out of the deflation stage. I think that you're going to get enough wage growth again to give consumers more spending power and companies more pricing power. We've talked about China. India obviously is a very longer term, very positive story. I'm telling clients not to worry too much about the weakness in the recent data that you have seen. You'll get more stimulus for the sort of not necessarily the high tech, but the mid tech type manufacturing, and also that formal employment that is being accelerated, that is going to create more tax revenue, more visibility, and also obviously stimulate that economy as well.
just to pick up, final question for you on alternatives, for example. A lot of people have been calling for, oh, there's a bubble in private credit, what have you. How do I need to be thinking about risks in terms of allocating to private markets this time around? What are the, potential red flags?
So potential red flags would be if the M&A cycle doesn't accelerate, because this is the upside. For me, I think you're seeing, because of the high cash balances at the corporate level, and the borrowing that gets cheaper, plus the pro-growth stimulus that you're going to have in the U.S., and actually probably a relatively friendly attitude to M&A from the next U.S. government. I think you're going to have more M&A that creates more opportunities in PE. Obviously, also the capital markets accelerating and more activity happening there is a good area for PE as well. So really watch the M&A cycle, because that's going to be very important to get that dry powder to work and to get the distributions going.
There we go. That's what Willem buys from Willem sells. Happy New Year, sir. Have a great year ahead, and hi to your team. Global CIO, HSBC, Global Private Banking and Wealth there. Right, so going into the open today, 7 minutes away, a stronger fixing yet again from the PBOC, stronger on the currency, and as you can see, that's engendering a little bit more strength coming through, momentum in the equity markets. The opening bell, 7 minutes away. This is the China Show.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
As my birthday signals another milestone in my life, I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly for generations to come.
Direction.
We are taking a look at how we are poised to open, and it looks like we are poised to open higher. Very interesting, given some of that weakness that we saw coming into the start of this year. The Hang Seng up high in pre-market trading, of course, in around just over around 0.5% there. HS Tech also higher, and the CNH strengthening a touch after that very strong fix that we had. Looked fairly robust. Of just bearing in mind, of course, we are looking at the CNH and the CNY very, very closely, because of this question about whether or not the PBOC might look to be prepared to allow a little bit of weakness coming through. Of course, there have been this sort of push and pull around the strengthening dollar, the overhang of US tariffs coming through.
We do have just some breaking news right now, and we promise you we'll get you more details on this. So the Globe is reporting, wow, okay, that Justin Trudeau is likely to resign before the National Caucus meeting. That's what we have so far. Not much as far as market reaction goes. Not that we're a lot of proxies, of course, this part of the world. But yeah, we'll keep on top of the story for you guys. Some strength coming through in the loonie right now, 1%, slightly stronger on that news. We're going into the open today, and futures are pointing up. A lot of levels to watch as we head into the Monday open. You're watching the China Show. The open is just ahead.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Sea cargo is responsible for 3% of global greenhouse gas emissions annually, and ports are a major contributor. As Mexico's first carbon-neutral port, ICTSI subsidiary Contecon Manzanillo is setting the standard for progress by deploying electrified cranes and tractors, recycling and reusing resources, and offsetting emissions by allocating resources to preserve critical ecosystems. This demonstrates how ports can be drivers of positive change and sustainable growth.
Welcome back. You're watching The China Show, and we are counting down to the open of markets here, David. Things looking a touch higher.
They are, and you know, it took 3 days, at least on the onshore markets, right? 3 days of fairly steep losses. On the CSI 300, we were north of 5% over 3 days. Now, if you think that's bad, look at the small cap space, where I think the Chinex index is now actually down 21%. Not over 3 days, that would be something. 21% from the peak that we hit back in late September. But the question is, you know, is the low in, is the floor in, or are we going to start testing, or do we need to start talking about testing lows that we hit pre-policy pivot? It doesn't seem to be the case, although technicals do suggest that there is a lot of momentum to the downside. Currently, risks on flows is number one on the Hong Kong markets. Risk to earnings is the key here. Out of B of A, who'll join us. They'll be joining us, of course, in a couple of minutes here. So a couple of levels to watch. In fact, on the CSI 300, we were going to show you a chart a couple of minutes ago, and I think our producers might be able to get that up after we go through the opening boards here. On the level to watch in the CSI 300, because we are testing the low end of the post-policy pivot range, which was the intraday low October 18. There we go, 37.65.16 is the level to watch on the CSI 300. As you can see, we're moving against that currently. The big story, though, apart from the equity markets, obviously, is what's happening in the currency markets, where you do have, as you flip the boards, open in Hong Kong, and you'll get a sense of where you are on the exchange rates. And as Rebecca was pointing out, we are nerding out on many things beyond the exchange rate, the spread between, the direction of travel, you know, the variance as far as the fix goes from the estimates, which was at 1,300 pips still on that. So the spread between the two, dollar onshore, dollar offshore, is about 3 percentage points, give or take. Not 3 percentage points, yeah, but it's widest in about 3 months or so. So we're within half of 1% of an all-time low on the offshore rate. The onshore level to watch is bottom of your screens. We did get a stronger fixing coming through from the PBOC earlier on, which is managing to at least ring-fence some of the speculation out there. We'll see how long that lasts. And as we promised you, thank you so much for our fantastic producers. Here is that level to watch on the CSI 300s. It's a candle. It's the intraday low, which we hit back in October 18. We almost hit that level on Friday, when we'll see, of course, where this goes. But I guess let's put that question to Winnie Wu, who joins us right now, China equity strategist at BofA Securities. Is the derating over, or do we need a fresh conversation around whether the worst is in fact already in the price?
I would say that we've probably seen the worst in terms of the flow position selling on the China market. You know, a year ago, I think, you know, it was easy to make money elsewhere, right? Long AI, short China, long Japan, long India, short China. Now, these pair trade look less obvious or maybe too crowded. A year ago, I think investors had much more concern about, you know, how important is the economic growth and the stock market to the Chinese policymakers, right? Do they care? Do they, you know, prioritize those? But I think over the past few months, at least people understand that Chinese policymakers do care, and they try to respond to market demand. So I would say the worst of the derating fear is probably over. However, having said that, you know, MSCI China current PE multiple is around 10 times. CSI 300 is around 13 times. Could they see a 10-15% correction? I think it is possible, given that we are facing a lot of uncertainty in terms of geopolitical tensions in the coming couple of months. And also domestically, you know, the policy details of the policy stimulus, especially on the fiscal side, on consumption side, is still yet to be seen. And for the policy to making impact on the GDP and earnings, there will be quarters of delay. So in between, investor might still get disappointed. So I would say the worst is over, but it doesn't mean market will only go up from here.
I want to ask you and follow up a little bit on that point about stimulus and what's really needed. We had Willem Zels earlier talking about that investors really want to see big bang stimulus. So I want to ask, what does strong stimulus constitute for you? What is actually required to start seeing a turnaround?
Yeah, sure. So, a few ways to look at it. First, the next couple of months, important thing to see is we need to see credit growth accelerate. Right? Throughout 2024, we see total social credit growth or loan growth decelerating sequentially. That need to turn. Whether it's reflected in better mortgage demand or better corporate capex investment or private sector taking drawdown credit, increasing credit growth will be a sign of economic activities re-expanding rather than, the fear of balance sheet recession. But also from a top-down budgeting fiscal policy perspective, I think people clearly want to see more fiscal stimulus, right? Currently, investors are expecting this year's budget deficit to be closer to 4%. And in terms of the incremental new credit this year versus last year, we think new credit need to be 6-7 trillion more in terms of the new money being spent. In terms of the areas of focus, in September, October, we got some property-related easing and more of the new urban redevelopment project announced. The NPC also announced the resolving the debt swap program to resolve the local government hidden debt. What's missing now is the consumption stimulus, right? Last year, we had some trading program that helped the durables, EVs, but I think people want more, something that can have a more lasting impact. So hopefully more effort to support jobs, to support new births. Those are more important.
I want to pick up on that because that's interesting. We've been trying to figure out what the best leading indicator is of the equity markets. In fact, that's, part of your first paragraph in your report, which came out today. The pickup in credit growth. How long typically is it between, say, a pickup in credit growth? And I would imagine that's not a 1 month data point. And the sustained rally, is that a few months away? Is that 6 months? How does that look like?
So if we look at from credit growth to GDP second derivative change, it's typically 2 quarters. So if credit growth starts to accelerate in January, let's say, for the GDP to really accelerate or rebound, it's probably 4 quarters away. But for GDP to stop declining fast, declining slower, second derivative factor turnaround is 2 quarters away. Market leads fundamental, right? Market is typically in between. So from credit acceleration to more sustained market rebound, I would say it's probably around 2-3 quarters. So if we can see a more sustained pickup in credit growth, I would think by second half this year, China market should have more sustained rally in anticipation of GDP and earnings turnaround in 2026.
That really robust pickup in credit, can we actually see that without a far more concentrated effort on the consumption side? Because there's been a lot of discussion about needing to increase those credit numbers, but the problem has been we just don't see it in fundamental demand.
I think you are right because, historically, the key demand or borrowers of credit, right, is the SOEs, it's the POEs, it's the government and the household sector. In the past few years of the property market decline, we already see the build-up of advanced manufacturing sectors to the extent that there's overcapacity pressure, there's deflationary pressure, there's a lot of tensions regarding China's trade surplus. So by now, purely investing more on the corporate side, on the capex side, is probably not going to be good enough to drive the continued growth, the acceleration, to drive the turnaround in credit growth. We really need a private sector, especially the household side, to pick up. So, something more focused on to help the household, to help with jobs. So in the report, one of the proposals, we mentioned is something like a subsidy for private employers. Hong Kong and Singapore government actually did that during COVID lockdown. So for private employers, if you hire a person or especially recent college graduate, you get 1,000 RMB per month, let's say, to subsidize for your salary. It will be very effective in terms of helping out the private entrepreneurs for their hiring, for their expansion. It will help resolve the youth unemployment issue, which is a big drag on, consumer or even for people who decide, do I still want to have kid or invest in my kid if they can't get a job or they can't get a proper job, right? So I think, there can be more measures targeted to support employment and especially private sector. And that in turn, better job outlook, better income outlook should help with consumption.
Yeah, I think to be fair, I think it was during about a week back, just as a side note, I think there was a report that came out that they started raising wages for state-owned employees, if I'm not mistaken, right? I want to pick up on earnings. Time of the year. 7.5%, I believe, is the consensus earnings growth at MSCI China. I think it's 20%. Could be mistaken on CSI 300. I mean, 20%. We get 20%. Is my question. If you're right that the recovery in the economy is, I can't believe we're talking about this first show of the year almost in 2026.
Most likely. Yeah. So on the earnings side, I still think earnings need to go through downside risks, right? In the report, we showed the bottom up when we look into different sector, different company, the consensus earnings forecast. This year, the strong MSCI China earnings was mainly contributed by two sectors. One is internet. Many of them were reporting 60%, 130% earning growth. And two is insurance, which also benefiting from the stock market and bond market trading rallies and reporting like 80%, 100% earning growth. Those two are index-heavy large cap sectors, which distorted the MSCI earnings universe so that we're seeing very high MSCI earning growth forecasts. But beyond these two sectors, many of the real economy sector, whether it's property, material, industrials, technology, are still seeing earnings pressure. But consensus also factor in some significant turnaround. For example, solar sector, lithium sector, property sector for 2025. This is either in anticipation of supply side reform that removes some of the overcapacity and help with the industry leaders, or stronger stimulus that turn around the property related sector. Whether those can be delivered effectively within 2025 is a big question mark. So I still think that, earnings will still see the downside risk. And when we go through the earnings season in March, April, market might reflect these volatilities.
You've written, just to close out, about the need to be long-term greedy. Just quickly, where should we be greedy? Where are you pointing investors towards?
I think overall for the China market, right, yes, there's a lot of external challenges, but very importantly, China is a big domestic market. Domestic policy still matters a lot on consumer confidence, on job creation, on the economic growth. And it's important that it seems like from September last year, there was an important policy pivoting that the government is responding to the market concerns, starting from property, then they address the local government debt, and they vow to support consumption. So we believe that with these policy measures, there will be a fundamental turnaround in 2026. So for the short term, for this year, we think, earning perspective, HSCI Hong Kong market leading by the internet financials probably have better earning certainty, whereas Asia market with more industrial, auto supply chain, battery and solar supply chain might be more vulnerable to the trade wars and uncertainty of tariffs. So for this year, we have a more preference for adding quality beta on the H-share and ADR market during those correction and pullbacks.
Winnie, thank you so much for joining us. That's Winnie Wu, China equity strategist at BofA Securities for us. And just to recap some of these breaking lines that came through earlier today, Trudeau, Canada's leader, Trudeau, likely to resign this week, according to local media, The Globe, there saying Trudeau, of course, has been under pressure, including from within his own party, about potentially this crushing defeat that he faces. So, yeah, we'll stay across that, see how things fare. A little bit of a ripple through here, looking at the USD Canadian dollar.
Yep, it's based on the reports. It could happen as early as Monday. Certainly, the bookend to that is the caucus, which takes place midweek on Wednesday. So we'll keep on top of developments. Of course, that's what we know so far. Based on that, the currency, as you can see, as Rebecca's pointing out, is stronger going into the Monday session. Plenty more ahead. This is Bloomberg.
Right, early Monday, there's an early winner across these markets. It's in Taiwan. Hon Hai is up 2.2, and as you can see, that's doing enough and of course the proxies to that trade doing enough to lift the overall benchmark up 2% in Taiwan. Decent set of numbers, I think, is an understatement there. Let's bring in Jane Lan Hee Lee, of course, who joins us, our tech reporter out of Taiwan, to talk us through these numbers. Jane, and I mean, Jane, suffice to say, markets are riding this wave currently. What can you tell us?
Right. Well, the fourth quarter earnings for sales, for Hon Hai were much better than expected. The market had expected sort of a 13% growth, while the company delivered about 15% growth. It was a little bit surprising for me because these are monthly numbers that come out, monthly sales numbers, and for October and November, those monthly numbers were sort of a single-digit rise. So there was some question as to whether or not with those, less spectacular numbers in the previous months, whether it would be able to even meet the quarterly outlook. But then for December, it had above 40% growth year on year. The AI, it just shows that the AI infrastructure build out is still continuing, although everybody's watching to see how long it'll last.
Bloomberg Asia technology reporter Jane Lan Hee Lee there in Taipei. Now, here's a look at some of the other earnings releases to monitor this week. Samsung will probably report a rise in fourth quarter operating profit on Wednesday. That's on the back of AI-related demand for memory chips. Elsewhere, Uniqlo parent Fast Retailing may see operating profit growth soften as warmer temperatures affect sales. And 7-Eleven chain operator 7&I could also report a double-digit decline in third quarter operating profit this week. The consensus is that growth in its superstore operations was offset by profit slipping across other segments.
Okay, some breaking numbers coming through. The Taishin numbers, composite, these are PMIs for December. Composite 51.4, pulled back from the 52.3 handle. Although you are getting a 51.4 handle on the non-manufacturing gauge, which might, just give me a sec here to just take you through. So that was slightly higher, actually. Okay, my data is just updating right now very quickly. 52.2 is the PMI services number from 51.5, also higher than estimates. Highest level on the non-manufacturing gauge going back to, I believe, May of, May last year now. Okay, I forgot it was a turn of calendar. But yep, that's it for now. Currency stronger following the PBOC fix. Okay,
Yeah, just shifting gears a little bit, David. Singapore and Malaysia, they're planning to launch a special economic zone in the Malaysian state of Johor. Newspaper The Edge has reported that the neighbours could sign an agreement as soon as Monday. Bloomberg's Avril Hong has been looking at the project's promises and its challenges.
Singapore and Malaysia are separated by just a short stretch of water. Now the neighbours are hoping to further bridge that gap by creating an economic hub. Located in Malaysia's southern state of Johor, the special economic zone is expected to cover more than 3,500 square kilometres. That's 4 times the size of Singapore. It's likely to include a port, airport, and major highways. For Malaysia, the zone could attract billions of dollars in foreign investment. Officials hope it will create up to 100,000 jobs in Johor and boost the Malaysian economy by around $26 billion a year. For its part, Singapore would get access to abundant land and cheaper labour. Both Singapore and Malaysia view the project as a win-win.
I think is a perfect match, because it's going to be so complementary to the two economies. The synergy between Singapore, with its sophistication and its connection and its reputation as a trading nation, and Malaysia with its much wider capacity for manufacturing, cost advantage, resource advantage.
The surge in AI and data centers is expected to play a significant role.
We are building a data center that's $1.5 billion,
And that is a significant amount of capital. And our customers would put another $3 billion of capital in that data center. So $4 to $5 billion of one data center. Now what's that creating? Jobs. Is going to create more jobs as our suppliers also supply equipment and engineering support to our data centers. So that employment base is going to up. So there's going to be a multiplier effect because of the data center being built in a particular location.
But other factors could impact the zone's success. This border is among the busiest in the world.
Hundreds of thousands of people cross between Singapore and Malaysia each day. It's hoped that an upcoming rail link and a proposal for passport-free travel in the zone will help alleviate congestion, a key consideration for companies to manage supply chain uncertainty.
Firms have also voiced concern about a talent shortage and red tape. And while Malaysia is enjoying a period of political stability, previous crises have cast a shadow. Anwar Ibrahim is the country's 5th prime minister since 2018. A big question is also whether Johor's Forest City, a $100 billion real estate project, might benefit from the zone. Built by China's Country Garden, it remains largely unoccupied. It has taken intensive negotiations to get to this stage. As investors and business leaders wait for details of the zone, it'll be up to Singapore and Malaysia to deliver. Avril Hong, Bloomberg News.
If you're a Bloomberg subscriber, you can catch up with all our interviews by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and our guests during our live show. Please check it out at TV Go. There is plenty more ahead. This is Bloomberg.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Here are some of the stories we are following today. The Biden administration has asked the Supreme Court to reject President-elect Donald Trump's request to delay a U.S. ban for TikTok. And the Justice Department argues that TikTok has not demonstrated it can prevail in its case to justify a pause. The Supreme Court will hear the case on Friday with oral arguments pitting national security concerns against free speech rights. And U.S. President-elect Donald Trump has been ordered to appear for sentencing on Friday in his hush money criminal case. That's after a Manhattan judge denied his request to throw out the conviction on presidential immunity grounds, stating that no such immunity exists for a president-elect. The judge has also indicated that Trump will not get jail time and will face no real penalty other than having the conviction on his record.
Right, just going through some big moves across these markets. Expo is up 2.23% here on news here that Expo and VW will be building super fast charging networks. We're talking more than 20,000 charging pilots operated by both companies spanning 420 cities in China. Watch it very closely. We're also looking at some healthcare stocks, pharma and medical on the back of this report, I believe, which was out on Friday, late Friday going into the weekend here. That policy support will be in favor of innovation. And as you can see, markets are going long on that trade, at least for now. And going into the first 30 minutes of trade, markets are looking like this. Plenty more ahead here on the China Show. This is Bloomberg.
this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
How can public-private partnership drive green innovation? The PPP actually enable countries to grow fast if they do it in the right way and attract foreign direct investments.
We need investment into renewables, so whether it is solar, whether it is wind, whether it is thermal, or even small nuclear reactors, the world has to share this problem.
Good morning. Welcome back. You're watching the China Show. We're entering the second hour here. It's Monday. It's a fresh trading week. It's a fresh trading year. So I would imagine many of you, more than usual, are joining us out of the gyms this morning. Keep it up. No one wants to see your gym selfie, FYI. We're near session lows in the CSI 300 here, 0.6%. You know what? At these levels, we're actually 13 to 15 points below the low, the intraday low we hit back on October 18. The reason that's important is that represented the lower end of the post-policy pivot range. And we'll see how we end the day, but certainly there is a lot of weakness bell here coming through across these markets.
Yeah, we could talk about sort of new year, new you, but
in most cases, yes.
Maybe not the case with Chinese equities, because it's actually been not the greatest start to the year. But let's have a think about what is standing out today, and that's definitely what's coming through in the tech space so far, because we're half an hour into the session, 90 minutes into trading for Japan coming into its 2025 start, and it's really that tech story that's standing out. Of course, these are the Taiwanese names. We did have Honhai posting fourth quarter sales that beat estimates. So it's that strong AI demand, and again,
Same story.
It's same story. And that's really been the story of a couple of years now, but a lot of different analysts will talk to you. Yes, that AI demand is strong, and people still aren't prepared to walk away from it just yet.
No. There's a great piece, by the way, out of our Bloomberg intelligence folks here. Gina Maron-Adams, of course, and her team have put out a fantastic comprehensive piece really looking at the S&P 500 and whether the broadening out of the rally will and can continue. There are risks involved currently, given market concentration and what have you. Anyway, I won't take away the thunder, and that's partly because I haven't read through the whole piece. You can read about that, of course, on your Bloomberg terminals for you. While you look at broader markets and how we're doing, and speaking of, we are tracking most of the gains we had in Wall Street. Just to mention that Vietnam comes online, and the GDP numbers are out, fourth quarter, 7.55% year-on-year, above the estimates of 6.7%. So apart from the weakness we're seeing in Japan, most of Asia, led by, as Bell was pointing out, Taiwan, leading these gains. Separately, though, the Japanese 10-year yield, as you can see, at 113, which is a level we last saw actually back in 2011. Right, let's zero in on one of the big market stories in China today and so far this year, and, you know, very small sample size there. The Chinese currency has been very much under pressure. The PBC came in, stepped in rather, I wouldn't say very, very forcefully, but stepped in quite firmly here to support the currency with a fixing, which was, again, quite a variance from the estimates. We're getting a lot of strength coming through in the currency following days of weakness. Still 735, though, on the offshore rate. Let's bring in Min Low, our China correspondent, to talk us through everything we've seen so far from the PBOC, including, of course, that meeting they just held.
Yes, the MPC meeting, they did pledge to keep that currency stable, and it's really this tug of war between the FX traders and the PBOC, right? Because we did see implied vol, for instance, starting to tick up. Turnover volume, especially in the option space, last Friday was surging, and you saw that yuan really hitting below or above that psychological 7.3 level. But I mean, it's clear that there is a lot of depreciation pressure on the yuan. The question is when, but there really isn't any reason for the PBOC to weaken the yuan fix until the next big catalyst, which is when Trump comes into power or when he announces his first big opening shot when it comes to the tariff policy, which will likely cause this knee-jerk reaction across equity markets. So perhaps the PBOC is still reserving a little bit of dry power for that. Plus, you got the Fed paring back its rate cut expectations. You got to think about the capital flight pressures on the yuan if the PBOC cuts rate or if it devalue the yuan. And plus, we had Stephen Chu earlier saying that yes, the yuan is in fact relatively stronger compared to other Asian currencies, for example. But keep in mind that last year, China's trade surplus was at a record high, so it doesn't exactly need to depreciate the yuan to enhance the competitiveness of its export. It really needs to focus on bolstering its domestic economy here.
I mean, there's sort of reasons for both camps. You know, there's reasons for them to wait. There's reasons for them to act now.
Yeah.
What are the expectations then, and what are economists saying, for instance?
Yeah. So I also want to point out what was said at the MPC meeting, because the PBOC again reiterated that they are going to cut the RRR and interest rates at an appropriate time. Of course, we were expecting some sort of cut at the end of last year that didn't materialize. So the expectation is that we could get a cut in the first quarter of this year. A possible window is before or around the Lunar New Year period, after Trump gets inaugurated, for example. And the PBOC also pledged more support for tech and consumer sectors. And this could perhaps look like guiding financial institutions to step up credit line to these sectors, maybe lowering the fees and the interest rates for consumer loans, for example.
All right, that's our China correspondent, Min Min Lo there. Let's get more on this story, bring in Hao Hong, his partner and chief economist at Grow Investment Group. And you know, it hasn't really been sort of perhaps the greatest start to the year that policymakers in China would have seen, just given the amount that they're coming out to try and stir up and generate support for the economy, for the market outlook. What are you making of 2025 so far?
Yeah, well, we have one of the worst starts of the year since 2016. Right? So I think, you know, people are starting to realize that, you know, between now and the Chinese New Year, probably there's a vacuum of policy. Right, so they're probably not going to come out with, you know, a stronger stimulus policy just before the Chinese New Year. So maybe we you know, the central bank is going to do some OMO, open market operation, to inject some liquidity for the Chinese New Year, because, you know, that's a period where you need intense liquidity injection. You know, because during the Chinese New Year, you know, people give out red packets and all that, and it tends to be in cash. Right, so it's a season that requires quite a bit of liquidity in the system. But other than that, you know, people were thinking, you know, they'll wait until the twin session in March to see more details on the policy before they're ready to make another move on the market.
Yeah, you know, if Hao Hong, if we look at history, any potential liquidity injection before the Lunar New Year will likely spur even a short-term rally. The question I have for you is, would you buy the current dip, for example, Hao Hong?
Yeah, well, I think it's still not attractive enough for me to buy. I mean, even though the liquidity injection before the Chinese New Year tend to be very strong, but it's also, you know, expected by the market, right? So because every year they more or less do the same thing. And also, you know, right now, you know, because the trade war risk is rising, Donald Trump is getting into the office very soon, right? So, you know, tariff is one of the first things he's gonna execute. So I think, you know, people are, you know, waiting, you know, for further signal to see, further currents to see, you know, what's gonna happen next, and that's the reason why, you know, we're seeing substantial depreciation pressure on the Chinese yuan.
So you said that, you know, the conditions aren't quite favourable just yet for you to consider buying. What do you think does make it more favourable then? Do you see further weakness and then just the valuations are the reason to get in? Or do you actually think that it's more the policy side and you get enough of an announcement that's concrete enough to be attractive to you?
Yeah, well, I think, you know, for the Chinese equity to do better this year, firstly, we need to see a pause, at least a pause in the decline of the property price, right? So because in the past couple of years, because of the property price continue to decline, it actually erode people's confidence in the economy and also, take away the consumption power as well. I think secondly, you need to see a expansion of the government's balance sheet. Right? So you need to see a very strong fiscal stimulus. Right? So I think the central government balance sheet is the only balance sheet that is still clean enough for expansion in this cycle. But I think so far we haven't seen concrete signal for the central government to expand its balance sheet. And I think thirdly, we need to see more policy on how to promote consumption and improve social welfare for the Chinese people. I think back then, especially in the past couple of years, because the property sector has been falling, therefore, most of the new investments has gone into manufacturing. And actually, the Chinese government directed the Chinese banks to lend to the manufacturing sector, and that creates a huge overcapacity in that sector, and also, substantial deflationary pressure. So I think, these three things are probably the key sort of indicator that we'll be looking for in this year for the Chinese stocks to do better.
Interesting that you phrase it that way, Hao Hong. Speaking of lending, speaking of leading indicators, we spoke earlier with B of A, and interesting how they frame the possible timeline for the rally. They say wait for credit, credit to pick up. Wait for a few months before the economy and the rally can sustain itself. And funnily enough, first few days of 2025, they're already saying that 2026 will be the year that the economy starts to respond. I want to get your thoughts on this, but let's play it out for our viewers, please, if we can.
So if credit growth start to accelerate in January, let's say, for the GDP to really accelerate or rebound, is probably 4 quarters away. But for GDP to stop declining fast, declining slower, second derivative factor turnaround is 2 quarters away. Market leads fundamental, right? Market is typically in between. So from credit acceleration to more sustained market rebound, I would say it's probably around 2-3 quarters.
Hao Hong, what do you think of that timeline there?
It's pure speculation, I have to say. I think in September, late September, we've seen a large injection of liquidity into the system, right? So the PBOC came out and said, wow, we're going to lend you, 300 billion, 500 billion worth of liquidity to buy stocks, and people get excited. And the market rallied for 2 weeks and taper off, and then and we've been falling since then. So I would say that liquidity is important. The Chinese market is always very responsive to changing liquidity condition, but then at the same time, one has to realize that at this moment, there's more than enough liquidity in the system, right? So if you look at the short-term Chinese Treasury, now it's approaching 1%, right? So the 10-year Chinese Treasury is making his historic low, and it's actually lower than the Japanese JGB. So it's telling you that there's plenty of liquidity slushing around in the system. Because even though the central bank has been printing money, but I think people because of the lack of confidence, people are somehow reluctant to reinvest those liquidity into production, and that is the reason why we actually have excess liquidity. If you look at the Chinese household, the bank deposit has increased from 10 trillion yuan to 15, 16 trillion yuan, maybe even more, right? Much of this money is looking for a home, and that's the reason why you have abundant liquidity and also a suppression of the Chinese bond yield in the market.
That's sort of the problem. I mean, it's the perception. People need to feel confident to borrow. They need to feel confident to invest. You're in Shanghai right now. I'm wondering what the sense is that you're getting on the ground when you're talking to people there, because I think it's also just interesting the timing. We are just a couple of weeks out now from the Lunar New Year break. Are people still kind of in that wind down phase as well?
Yeah, I think, traditionally during this time of the year, people will be, packing up, getting ready to go home. Surprisingly, this year, we're still seeing, plenty of activities going on, right? So, for example, just now the Caixin PMI, is showing, a substantial expansion, and it's actually higher than expected. Construction industry is still going on, right? So that is telling you that, people somehow, for some reason, people are working, into the Chinese New Year, which is traditionally a quiet period. It's good for the Chinese economy, right? So, because normally, in January and February, you look at the economy, people basically stop everything and go home for the Chinese New Year and reunite with their family. It's the biggest holiday in the Chinese calendar, but I think this year is very different, and it's producing some sort of a seasonality in the economic number. But no one's complaining, of course, because more production, more activities in the economy is good for the market and also good for the Chinese people.
How did your fund do last year? And after you answer that too, what would you be overweight? What plays would you be putting in place short term right now in this market?
Yeah, last year was the first year of my fund in the running. It's make more than 24% last year, and for most of the time, I don't have position in the market. I only have position for a couple of weeks, and because last year most of the market gain is very concentrated in those few weeks. So if your market timing is right, you can actually get most of the return, without doing, a full year worth of work. Right? So can't complain. Last year was a good year for my fund. And I think for this year, we, like the rest of the market, we're still waiting for an opportunity to entry. Just now, we discussed the liquidity condition and exchange is very important for the Chinese market to rally. And most of us are hoping that, more policy signals going to come out during the twin session. And also, most of us is waiting for some sort of a signal from the US side, in terms of the tariff and the trade war, and also, in the second half of the year, some of us, are looking for some sort of a grand bargain between China and the US, right? So, because if you look at the Chinese foreign trade sector, it built up a substantial foreign reserve, right? So on the central bank's balance sheet, you have 3.3 trillion US dollars. In overseas bank account, you have almost 2 trillion US dollars worth of Forex reserve, right? So we're talking about a very substantial amount of money. And so from this perspective, because the Chinese exports the growth has been quite strong in the past couple of years, it's counterintuitive, right? So on one hand, you have a huge Forex reserve, your export sector is going banana, but the Chinese yuan is under substantial depreciation pressure. It just doesn't make sense, right? So from an economic point of view. So I think, the weakness in the Chinese yuan can be sort of a reverse, through a grand bargain. So a stronger Chinese yuan will help revalue the Chinese assets, and then at the same time, it sort of show the USI we have this very strong intention to improve the domestic sector, because a stronger Chinese yuan helps domestic consumption and helps the confidence as well. So of course, this is sort of a remote hope, right? So we're hoping this could happen probably towards the second half of the year, but it's not a certainty. So most of us are still waiting for some sort of signal to happen before we build up our positions in the market.
Hao Hong, thank you for coming in to our Shanghai studios.
Thank you.
Hao Hong there from Grow Investment Group. Out of Shanghai today for us. Right, just ahead here on the China Show, Nippon Steel planning to challenge President Biden's order to block its bid to take over U.S. Steel. We'll look at whether the deal has any hope of a revival, plus, of course, the latest out of Canada. Just ahead as well, this is Bloomberg.
In this gig, you get comfortable being uncomfortable. The enemy is always adapting. Hey, handsome. Always iterating.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Welcome back. Let's get to the latest now out of Canada with the Globe and the Mail actually reporting that Prime Minister Justin Trudeau is expected to announce as early as Monday that he will resign. He's been under a lot of pressure from his party, of course, to step down over fears of a crushing defeat in elections later, well, due this year at least. Let's bring in Thomas Seal, our Vancouver bureau chief, with us right now, late Sunday. Well, thanks for staying up for us. Number one, quite a week ahead. Just take us through what the likelihoods are.
Hi, yeah, so it's not a huge surprise that this could be happening this week, that Trudeau could be announcing his departure. He's been under mounting pressure for a lot of the last 12 months. The polls, the opinion polls have turned pretty decisively against him, and he's been unable to reverse them, and he's now about 20 points behind his main rival. And he faces an election due at the latest by October this year. And so voices in his own party have been calling for him to step down. That got very dramatic last month in December when his deputy, his longtime trusted deputy, Chrystia Freeland, resigned, his finance minister, the day she was supposed to be making a financial update for the country. So that really set things into high gear and has really made things quite urgent. And then at the same time, you've got Donald Trump wins the US election, the biggest trading partner for Canada by a long margin, has started threatening 25% tariffs and mocking Mr. Trudeau in social media posts, just kind of putting a lot of pressure on the government and on Mr. Trudeau. Trudeau has been really largely silent since his deputy's resignation. He told people we understand he'd be reflecting over the holidays, the Christmas holidays here in Canada. Those are now over, and it's kind of back to school. And so the Globe and Mail newspaper here is reporting that he could announce his plans to step down as soon as tomorrow.
So how much is this a function, do you think, of, well, the timing of it, I mean, and the pressure that he's under? How much is that a function of President Trump going back into the White House? I know you mentioned that tariffs risk. Is that sort of the sort of chief concern around how Canada manages its relationship with the US?
That was certainly a factor in what forced Finance Minister Chrystia Freeland to resign. She wrote a letter, posted it online, and she accused Mr. Trudeau of not necessarily keeping the fiscal buffers for a trade war with its largest trading partner, with the US. Instead, using, I think her phrase was, political gimmicks, such as tax breaks or giveaways to make people, feel, less of the burden of inflation. That is really what's also hurt his popularity so decisively in the last few months. Terrible inflation, putting up the cost of living. So I think Trump looms large in this discussion, and whoever replaces Trudeau in the short term and then after the national election, that's going to be absolutely number one priority, is dealing with President Trump.
That was our Bloomberg Vancouver bureau chief, Thomas Seal. Thanks so much for joining us. And we'll take a look as well at some of the other global stories that we're tracking this morning. Well, the Biden administration has asked the Supreme Court to reject President-elect Donald Trump's request to delay a U.S. ban for TikTok. The Justice Department argues that TikTok hasn't demonstrated it can prevail in its case to justify a pause. The Supreme Court will hear the case on Friday, with oral arguments pitting national security concerns against free speech rights. US President-elect Donald Trump has been ordered to appear for sentencing on Friday in his hush money criminal case. That's after a Manhattan judge denied his request to throw out the conviction on presidential immunity grounds, stating that no such immunity exists for a president-elect. The judge also indicated that Trump will not get jail time and will face no real penalty other than having the conviction on his record. Russia's defense ministry says its forces have repelled what appears to be a fresh Ukrainian offensive in the border region of Kursk. Ukraine earlier seized territory in the region during a surprise incursion that started in mid-August. Russia has claimed back about half that territory
and US officials say it could regain the rest in a matter of months. We'll have plenty more ahead. This is Bloomberg.
This is going to sound crazy, but I know these attack vectors. Oh, had a little upgrade, have we? Okay, so that's how you want to play.
Taking a look at some of the movers in the session so far today, this is actually off the back of not a great news story, but essentially we're seeing more influenza cases in China. They're continuing to rise. A lot of those, according to local media, are related to the influenza A strain. And off the back, you're seeing gains in some of these flu-linked stocks, Dave.
Limit up in some cases there on that report. The other group of movers we're tracking here as well. Interesting how Jeffries phrased their commentary around this. Shoot first, ask questions next. In terms of alcohol and booze-related stocks, your market will adopt that approach because of the declines across global liquor stocks. That's really on the back of, if you missed it, the U.S. cancer warning, of course, around the link between alcohol consumption and heightened cancer risk, which frankly is fairly obvious, but in any case, of course, just watch it very, very closely. Am I speculating? Anyway, I'm not the doctor here. Just look at that report.
I would clarify that one.
Yeah.
The fairly obvious link.
Anyway, they're down.
It's 11:29 a.m. in Tokyo.
गैस क्रूड ऑयल को देखोगे तो बिल्कुल ही वॉलेटाइल हो चुका है। नेचुरल गैस में भी शायद न्यूज आई थी, हाफ ही लेवल तक मार्केट गया, उसके बाद एक ऊपर ही ब्रेक कर चुका है। उसमें नेचुरल गैस में कैंडल ओपन इक्वल टू लो बनी हुई है। भी अवॉइड करना, कंप्लीटली वॉलेटाइल हो चुका है। रेजिस्टेंस जरूर है बट ना नीचे आ रहा है ना ब्रेकआउट रीटेस्ट कर रहा है। वॉलेटिलिटी इन द मार्केट, सिल्वर को देखोगे ऊपर एक रेजिस्टेंस था 30.38, इसमें भी कुछ हुआ है शायद वही सेम कैंडल 415 की कैंडल के बाद देखोगे कंटिन्यूसली मोमेंटम ऊपर है एंड देन कंटिन्यूसली गोइंग डाउन। यहाँ पर एक छोटा सा सपोर्ट है 29.49 एंड देन $29 15 मिनट में। ऑयल बड़ा इंटरेस्टिंग हो रखा है, रेजिस्टेंस था, नीचे आया नहीं, ब्रेकआउट किया, रीटेस्ट नहीं किया, वापस नीचे फिर से ब्रेकआउट कर चुका है, कंप्लीटली वॉलेटाइल। इसने अभी तक रीटेस्ट किया नहीं है, याद रखना। रेजिस्टेंस पे जरूर था तो सेलिंग बनी जरूर थी एक, और उसमें एसएल जा चुका है, उसके अलावा कोई एंट्री नहीं बनी इसमें। आई थिंक ट्रम्प की ओर से एक स्टेटमेंट आया है जिसमें लिखा गया है कि वॉशिंगटन पोस्ट ने जो स्टोरी दी है जो थोड़ी देर पहले हम बात कर रहे थे। Washington Post story that I will pare back my tariff policy is wrong, as per the Trump statement.
Advance his political agenda. The Committee on Foreign Investment in the U.S., CFIUS, failed to conduct a good faith, national security focused regulatory review process, depriving the two entities, Nippon Steel and U.S. Steel, of their rightful opportunity for fair consideration of the transaction. That is alleged by the companies here. They put it out in a press release this morning. Here, shares of U.S. Steel moving higher pre-market by about 4.4%. But still, if you were to kind of broaden this out and look at some of the turmoil that's ensued since the blockage of this deal, and really only several deals have been recommended to the president in history of CFIUS to be blocked. And this just the latest of that, less than 10 deals in the history of CFIUS here.
Yeah, and it's also pointing out, maybe some of the viewers at home are asking where Trump stands on this, whether or not he has changed his stance at all. President-elect Trump last month, once again, underscoring his intention to block the deal. He reiterated that in a post on Truth Social here earlier, saying, why would they want to sell U.S. Steel now that tariffs will make it a much more profitable and valuable company? Wouldn't it be nice to have U.S. Steel, once the greatest company in the world, lead the charge towards greatness again? It can all happen very quickly. So again, you see some sort of that consensus there just in terms of why ultimately maybe this deal would not make sense from both sides of the aisle.
Yeah, absolutely. Also here, we're going to go to the skies for a hot second here. Let's feel happy in the air. Delta Airlines set to report fourth quarter earnings this week. Joining us now, we've got George Ferguson, Bloomberg Intelligence Senior Aerospace Defense and Airlines Industry Analyst. George, always a pleasure to grab some time with you. What are you expecting to see from Delta?
Yeah, so I think what we'll watch very closely is going to be Delta's yield. So we're expecting that the yields or price paid per mile flown, we think of it very synonymous with fares. We think they will continue to edge over. So we've seen declines, small declines in what consumers are willing to pay to fly. But the saving grace for Delta in 4Q will be fuel prices are down dramatically. We think that'll add, 400 basis points or so to their margins. So that's going to be, the bright spot in the market. But again, a big portion of what we're going to watch at Delta is how demand is holding up, how fares are holding up. They're going to grow capacity 4% during the quarter. So we still see capacity growth above GDP rates, which we think typically means softer fares. So we'll see with that higher growth rate, if in fact the consumer is maybe getting a better deal, it's getting a little softer out there.
So George, did you say it could be getting a little bit softer out there?
I think so. Yeah, we think so.
Yeah, I guess to what degree? And when we talk about the pressure that could ultimately then put on these airlines looking ahead to 2025, we talked a lot about some of the strengthening fundamentals. Does that offset maybe some of that looking ahead to the next year?
Yeah, so as we look into the new year, as we left 2024, fuel prices were down. We kind of look at Gulf Coast jet down around $2 a gallon. They're back up a little bit from there, but we're still in the first half of the year going to see a really strong tailwind from fuel. So fuel will allow the airlines to discount a bit to fill airplanes. And so that could mean first half looks as good as last year. I have a hard time imagining it being better. It still feels like demand is a bit soft. We've seen the pain in the low-cost carriers, right? We've seen the challenges at Southwest, the challenges at JetBlue, Spirit declared bankruptcy. Capacity looks like it has to come out of this marketplace. As we look at the first half of 2025, we see more capacity coming from the big full-service carriers, Delta, United, American. We think that means that premium seating is probably moving into the slightly oversupplied, area, which means their source of strength may not be as strong in the first half. So, sort of, if I wrap that whole thing up, profitability is probably still good, about what it was a year ago. But again, I think we see a little bit of softening in maybe that premium demand for the big full service carriers, and maybe a little bit of improving for the low cost as some of that capacity comes out, as Spirit cuts back capacity, Southwest and carriers like that.
George, it's really interesting. I mean, especially thinking about Delta CEO Ed Bastian going to be starting off his week on a more fun note at CES, and then making his way back, ending the week all business, of course, here for Bastian as we get these earnings that are going to be coming out. But as you mentioned, premium, it really kind of lit a fire, at least in my mind, around what they were talking about at the investor day, and really leaning into what could be a new tier of premium. What do you imagine that needs to look like in order for them to stave off any of the pressures on pricing that we could see the industry face this year?
Yeah, so I mean, a new tier premium, I guess it's I always sort of struggle to figure out what else you're going to bring to the front of the airplane to make people want to pay up. Look, I think that business travel is about where it was in 2019, so it's lagged a bit. What could work for Ed Bastian could be continued return in business travel, which could boost some of his front of airplane revenue. Look, I think Delta probably gets as good as it gets when it comes to premium travel, with their lounges, with their reputation in the marketplace, with the product they're offering in the front of the airplane. A lot of people are trying to bring premium, airlines like Frontier, by cutting out middle seats. That isn't that premium to me. And so I think he's still sort of maybe the market leader in premium. How he brings more to that, I don't know. I guess he makes you feel more special as you get on the airplane or something like that.
Maybe it's a Lenny Kravitz concert. I don't know. That's what they're doing at CES.
They do. They play games like that, offering good customers different kinds of perks like that that are probably off airplane.
I'm not good enough, George.
I was going to say, did enough to win Brad over. All right, George, great stuff. Thanks so much.
Thank you. I appreciate it.
We've got much more of your market action ahead, counting down to the opening bell on Wall Street. That's just 3 minutes away. We'll be right back.
Oh, yeah. You're not going to forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh, yeah. You're not going to forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh, yeah. You're not going to forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
We're just seconds away from the opening bell here and taking a look at the U.S. major averages. The futures right now pointing higher across the board, nearly a percent higher, we'll call it, for the NASDAQ futures. Here are our bell ringers for today. You've got Headspace at the NASDAQ celebrating Wellness Week, and at the New York Stock Exchange, you've got JBT Morel ringing the opening bell. All right, taking a look at the major averages as we kick off this trading week. The first full trading week, well, not exactly. We were close. We're going to have, of course, the National Day of Mourning in observance of former U.S. President Jimmy Carter here. As we're taking a look here at the major averages to kick off today's trading week, we've got the Dow Jones Industrial Average right now higher by about 0.3%. The NASDAQ Composite, you're seeing that move higher by a little more than 1% to begin today's activity. And the S&P 500, you're seeing that up by about 0.7% here. I see those candlesticks. I see that 3-month view. I imagine that our own Jared Blickery has that fired up, so I'll wait for him to get to that. But first, let's take a look at some of the sector activity here before we get over to Jared. We're taking a look at technology, leading the pack right now, blinding me with science. We're up by about 1% right now. And then additionally, taking a look at the laggard, you've got real estate pulling up the caboose here. That's down by about 0.6%. Utilities and, of course, staples as well. And additionally, you're seeing healthcare also in the red. But more gainers than laggards. That's good news to start off today's trading activity. And then just lastly here, I'll take a look and ride out with a brief gander at the NASDAQ 100 here. You can see some of your mega cap tech stocks to begin this week here. NVIDIA ahead of CEO Jensen Huang's keynote address. You're seeing those shares begin the day higher by about 2.7%. That event's set to come later on in Las Vegas, Nevada. All right, here in New York City, let's get on over to Yahoo Finance's Jared Blickery for a look at what's moving.
Thank you, Brad. You called it. I'm going to look at a longer-term view of the S&P 500 because we've got some interesting thing going on with the chart right here. This is a 3-month view, and a lot of people were looking for what's called a head and shoulders top here, and we didn't quite get it. In fact, we punched down beneath this support level, and we pop right back above, and now we are heading higher, and so that is not a top at all. And a lot of people like to call these things in advance, but this is one particular pattern that just gets called wrong all the time. And I also saw this on Bitcoin. I also saw it on some other tech charts. So this is something that's happening here. And what's actually happening is we have what's a W bottom here. We just cleared the neckline and we are off to the races. So that is a bullish pattern that has developed. Also want to point to small caps. Russell 2000 is leading early. That's up 1.72%. It has not cleared its hurdle to make this a double bottom just yet, but it's on its way. And then we want to take a look at the U.S. dollar. Both the 10-year yield, actually 10-year yield is up 4 days, but, and this is something that's really interesting, usually the yield and the U.S. dollar are moving in the same direction, not today. So the 10-year is way up here by recent highs. The dollar has come down appreciably. And in fact, this is the biggest drop since August. That's notable because it's kind of a release valve for risk assets. When it's heading higher into multi-year territory, that just kind of weighs on stocks and other risk assets. So early on, we had energy leading before, but guess what? Tech has taken the mantle here. Tech up 1.23%. Should mention energy too is up because WTI crude is in the midst of a 6-day rally, which is pretty notable. And then I want to go over to the NASDAQ 100 and show you, there's a lot of green on the screen today. I want to show you what's happening with the year-to-date price action. We have NVIDIA leading the Mag 7 pack. I'll show you a year-to-date chart real quick. Up 11.07%. I think investors will take that. And got to leave you with Bitcoin because Bitcoin is trying to break through the $100,000 price level once again. It's done that a few times, but it's kind of stuck around 90,000 or 99,000. Here's the 1-year view. You can see actually just below 99,000 right now, but pretty close to those all-time highs. Guys?
All right, Jared, thanks so much. Let's get to today's strategy session. Santa Claus skipping his visit to Wall Street at the end of last year, beginning of this year. But our next guest still saying that several factors can lead to a market rally in the months to come. Joining us now to break it all down, we want to bring in Zachary Hill. He's Horizon Investments Head of Portfolio Strategy. Zachary, it's great to have you here on Yahoo Finance. So talk to me about some of those factors. Why are you concerned about that lack of a so-called Santa Claus rally? Why that maybe isn't signaling something a bit more bearish for the months ahead?
Yeah, well, great to be with you and Happy New Year. Santa Claus rally is one of those things that it's a statistical anomaly. It appears in the data, but if you really look at it, it doesn't tell us anything conclusive about the following year. We've had 2 really strong years for the S&P back to back, so that probably means that this year is going to be a little bit more tempered in terms of its overall returns, and we're really looking for earnings growth to be the major driver as opposed to the multiple expansion that we've seen over the last few years as the Fed has taken their foot off the gas a little bit. So we continue to see strength in the underlying economy, and we do think that feeds through to earnings and to stock prices, just maybe not as much as they have over the last 2 years.
Okay, so all that considered, as you're looking at these 3 drivers for markets in 2025, what needs to take place to make sure that these all come to fruition?
Sure. Well, earnings growth, we're going to get some updates very soon, starting next Wednesday, I believe, with the big banks. So we'll be paying quite a lot of attention to, just obviously the fourth quarter, but also, full year guidance for 2025. On the Fed side of things, we have seen a little bit of a shift in terms of the market's overall thought process for how they're weighing growth and inflation. That hasn't been terribly helpful, to interest rates or to equity valuations. So we are a little bit lower, in the S&P and small caps, even lower than where we were before the Fed cut rates in the middle of December. But really abstracting from all of that, our most important view around what we think about Fed policy is they're still talking about cutting interest rates, and they're not talking about raising rates. And so that's going to continue to be something we can argue about if it's going to be 2 cuts or 4 cuts or what have you. But really the bigger picture and the more important one for investors, we think, is the fact that we are going to get cuts this year. And then the last thing would be, the labor market. We get an update on non-farm payrolls on Friday. That's really important for continuing to fuel consumer spending, especially with interest rates as high as they are. Debt is expensive, and so people are spending out of incomes. They need to have jobs to have incomes, and so that's something that we're going to be watching quite closely.
Zachary, when you take a look at the fact that the 10-year yield, right around 462, I guess at what point is that a challenge for some of those earnings growth expectations that we do have going ahead to 2025? And do we need to have a bit of a readjustment here in terms of lower rates here for yields in order to achieve some of those earnings growth expectations?
Yeah, we definitely have seen a pretty sharp repricing in yields over the last month, and I think that's been reflected in terms of the way the market is traded. December was not a great month for the S&P, down marginally, but things like small caps have completely unwound their so-called Trump bump from the election period. We're right around those same levels as we were before the election in early November, and so we do think a lot of that move higher in rates has already been reflected in price action, which means for us, and a continued bullish view of the underlying economy, means that it sets up really well for those parts of the market in 2025.
What about some of your wild cards that perhaps you're keeping an eye on going into this year and amidst the early innings of this year?
Yeah, a couple of wild cards. One, is around the level of interest rates. We're not at that level where it really starts to hurt, the underlying economy, but we don't believe that rates don't matter. They will eventually start to bite on underlying economic activity. The reason they haven't thus far is that consumer balance sheets are just really, really strong, and that's a function of all of the things that we did during COVID, the appreciation in home prices, the appreciation in stock prices, all of those types of things wrapped up together means consumers have been more resilient to interest rates. Companies also have termed out their debt, which means they're more resilient to interest rates. And so that's something that has been a feature of the last 2 years and has really confounded a lot of forecasters. We are not extrapolating that necessarily for the next 2 years, though. Eventually, higher interest rates will start to bite on economic activity, and so that's something that we're going to be watching for as a wild card in 2025. And, another one, too, is just potential volatility from the new administration, and we saw some of that this morning with a unsourced article in the Washington Post and then a tweet refuting that around tariff policy. The way that we're thinking about, the incoming administration, there are some, policy procedures that are really positive for markets and some that are not so positive. And so as investors, we're going to have to continually weigh the positive and negative as the news flow evolves over the coming year. And so that's another thing that we're going to be paying a lot of attention to.
Zach, really great insights. Thanks so much for kicking off today's trading activity with us. Appreciate it.
Thank you. Happy New Year.
Happy New Year. It's time now for our charts of the day. Let's send it on over to Catalyst's co-host Madison Mills for a look at the S&P 500's CAPE ratio. All right, what do you got?
All right, well, we're taking a look at the S&P 500 CAPE ratio. This comes from Deutsche Bank in their 2025 outlook. And you can see here, it is a bit elevated compared with historic levels. But take a look at the dot-com bubble in heading into the early 2000s here. You can see this ratio was elevated for 2 years heading into that dot-com bubble. So kind of throwing cold water on this idea that we are in a very similar moment to those early 2000s, right? Because not only did we have 2 years of this ratio being elevated, but Deutsche Bank argues that this kind of tech bubble here in the early thousands was only popped by a macroeconomic downturn, and they don't necessarily see that coming in for 2025. They also note that if we do see that for 2025, the Federal Reserve has plenty of room to cut interest rates, so that could be a cushion for the economy. They also talk about growth estimates being revised higher for those mega cap, large cap names that are driving a lot of the expense debate in this market over whether valuations are too high. And those growth estimates rising a little bit could again be a sign that, yes, we may see this ratio continue to be elevated, but not so much as we saw in the early 2000s. So again, throwing cold water on that idea that we are in a tech bubble again, and also noting that they are overall cautiously optimistic as we head into 2025, guys.
All right, Maddie, thanks. Coming up, we are taking a look at why 2025 might be an inflection point for GLP-1 weight loss drugs. We got more on that next.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills. We're 30 minutes into the U.S. trading day. Let's get you the 3 catalysts that we're watching this hour.
First up, we break down the market outlook for 2025 and what early investor sentiment signals for the months ahead.
Plus, we hone in on Trump's tariff policies as the president doubles down on his plans for his presidency.
And President Biden indefinitely blocking offshore oil and gas development. We'll break down the implications for the industry and investors ahead on Catalysts.
Let's take a look at some of the market headlines to start the hour, sponsored by Tasty Trade. Look at all 3 of the major averages. We are seeing gains across the board. You can see the NASDAQ leading the way up just about 1.5%. You've got the S&P up just around that 6,000 level there, up about 1%. You've got the Dow up 230. Taking a look at the bond market, lots of talk about the move higher that we've seen in yields, what kind of pressure that could add to equities going forward. But when you take a look at the 10-year yield here this morning, is still pointing to the upside here, right around 462. Flipping over to Bitcoin, also catching a bit of a bid here, right above $100,000 level, back above that level that we have been critically watching here over the last several weeks. You can see the rise of just about 3,000 here this morning. And finally, talking about some of the leadership that we are seeing within the market here this morning, we're seeing some of that confidence return to the tech sector, a group of names that hadn't been feeling so much of the love here as of late, but you are looking at some buying across the screen. One of the biggest gainers here in today's action, one of the drivers that we're seeing of the broader market, is NVIDIA. This coming ahead of CEO Jensen Huang's keynote address tonight at CES. Lots of focus on what we're going to hear about Blackwell chip demand and maybe what that could signal, whether or not it could spark not only a rally in NVIDIA stock, but something more broadly speaking that we could see across the market. You're also looking at gains from Microsoft and Google. Once again, today you're looking at Microsoft up nearly 2%, and that's the case for Google as well.
As stocks look to hold on to gains, today's action mirrors a familiar pattern. It's driven by tech stocks. Our next guest sees market breadth flashing a warning signal for the S&P 500. For more, we bring in Joe Mazzola. Joe, great to speak with you. You're the, of course, head of trading and derivatives at Charles Schwab. Just want to get your sense here. We keep worrying about breadth, but the tech rally continues. Does the breadth zombie matter so much if tech can keep this rally going?
You know, I think it matters in earnings season, and here's why I say that, because look at the strength of the dollar that we've seen just really from October through where we're at right now. We've seen about a 7% rally, kind of not given some of the weakness today, but you know, that could affect some of the tech earnings. You know, you're looking at markets where 50-60% of the revenue for some of these mega cap companies is coming overseas. Could be something that factors into the earnings, and what we would need is we'd need, you know, the rest of the 493 stocks to kind of catch up. And kind of given where analysts' expectations are for next year in terms of about 11 or 12% growth in the S&P 500, you're going to need to see something that's going to pick up that earnings. And it doesn't mean that we can't have another year like 24 where, you know, tech led the way, but it does mean that a broadening would help. And where we're at right now, about 23% of the S&P 500 above the 50-day moving average. It doesn't show that the market's selling off. It just shows that, you know, we're building a base a little bit, and then I think earnings will be the catalyst to either push that higher or you know, have that come down a bit.
Yeah, Joe, that was going to be my exact question. When you talk about what is going to be that catalyst in order to get maybe broader participation, you just mentioned earnings there. What type of growth do we need to see beyond tech in order to convince the market that this rally does still have room to run?
I think it starts with the financials. I think those will be really important. And I forecast that the financials will have pretty darn good earnings. I mean, just look at what we've seen in the steepening of the yield curve. I think there's some excitement around deregulation, what that could mean for M&A activity. So if you get favorable reports from the financials, which I said is kind of my expectation, I think that kind of kicks off things a little bit, and that'll start next week. And we'll see kind of how that carries forward. But, you know, they're going to be important right away.
If yields are a tailwind for financials, are they also a headwind for the likes of large caps and tech?
They could be. And here's the reason why. Maybe not the Magnificent Seven just because of the cash that they have on hand. But if you're looking at, investor dollars, right? I mean, every investor has a choice. Do they want to put it in the equity market? Do they want to put it in the bond market? Do they want to keep it in cash? And when they're getting, 4% and higher yields on cash, there is sometimes, especially given the fact that we've had 20% year-over-year growth in 23 and 24, or excess of that. There is a tendency to say, hey, what's going to happen in 2025? Should I park a little bit on the sidelines? What we're hearing specifically from our clients is there's a little bit less bullishness heading into this January than there was at the tail end of the year. Now, we're seeing that, and that a lot of that started in November. And what I found was really interesting is, we talk about our stacks report, right? That's our Schwab Trading Activity Index. And what we look at is we look at what clients are actually doing in their portfolio. And in November, I thought this was really key. As the market rallied, clients were trimming into that strength. We actually saw the widest gap that we've seen between our stacks and then the S&P 500. That caught up a little bit in December. The markets pulled back, and our activity index actually went up a little bit. So that did kind of cut into that divergence a bit. But what that was telling us is that clients were already kind of starting to do a little bit of a portfolio rebalance at the end of November, heading into December, maybe paring back some of those higher beta names.
Joe, how does that compare historically speaking when we talk about the rebalancing into year end? I would think that is something that's relatively common at the end of the year as investors try to best position their portfolios into the year ahead. I guess what is to glean from that, just in terms of the big takeaway for investors, what that is then signaling about the trends that we could see in the months to come?
Well, if we look last year at this time, it was interesting. Some of the bigger buys that we saw at the end of the month were like a Pfizer or a Microsoft or an Exxon. What we're seeing this time is it's really concentrated within a couple tech names. So ironically, if I look at the sector that was sold the most kind of within our basket of stocks in December, it was IT, and number 2 was communication services. So you would look at that and you would say, that's interesting, kind of given the fact that the stocks that were bought the most were NVIDIA, Tesla, and Palantir. So it's not necessarily that clients are just pulling everything out of tech, but they're just being very selective in what they're buying right now. I think they really looked at that opportunity in December where you saw that pullback. We basically had a correction in NVIDIA, and they looked at that as an opportunity to buy. Now, Palantir didn't have a correction, right? That just continued to go up, but they also used some of that opportunities on Tesla's pullback to buy in there as well, too. So it's kind of hard to make a carte blanche statement, but what we are seeing is, selective buying, but rotation into maybe some unloved sectors. And these are interesting ones, too. Energy, healthcare. Those are sectors that we just hadn't really seen much fund flows in all year. We started to see that in December. So that's part of that rotation and that rebalancing that we're talking about.
How much of a risk do you think the incoming administration and potential policies for that administration could be for those trades that you are seeing so much activity on?
Well, I mean, time will tell on that one. I think every day we get a new report, right? Early this morning we got the Washington Post report, and then that was, corrected by President-elect Trump, within an hour. So, we'll have to see kind of what the tariff and the trade policies look like. I think, across the board, what we're seeing right now is I think there's still confidence in the market because, what clients are doing is they're weighing and they're trying to figure out what does that mean for profits if you get tax breaks, for the companies relative to the tariffs and what that could mean. So, until we know exactly what that policy is, it's really hard to determine what that'll be.
All right, Joe Mazzola, thanks so much for taking the time to join us here this morning. Happy New Year.
You too.
Disney is set to combine its Hulu plus a live TV business with Fubo to form a combined virtual company. Joining us now with the details, it's our very own Alexandra Canal. We certainly are seeing the reaction play out in the stock this morning.
Reaction play on the stock. Fubo shares up over 100% in early trading. If you take a look at Disney shares, they're up a much more modest 1%. But this is a big deal, one of the first major media deal-making moves in 2025. According to a press release, Disney will control 70% of Fubo, and then shareholders of Fubo, they're going to own the remaining 30% of that combined business, which is going to operate under the publicly traded company name. Now, in conjunction with this transaction, Fubo also settled all litigation against Disney, Fox, and Warner Brothers Discovery related to Venue Sports. That was that upcoming joint venture between those three companies at the time last year. Fubo cited that antitrust lawsuit, saying that it was making the marketplace anti-competitive. And Fubo, as a much smaller player, was really struggling to compete against that. So now with this deal, that lawsuit is dropped. Fox and Warner Brothers Discovery shares also are up around 1%. Now, this is going to form one of the largest digital pay TV providers. When you think about the consumer environment right now, when a lot of folks are cutting that cable cord, Fubo offers those live channels over the internet, primarily focuses on sports and news. Hulu Plus Live TV is looked at as a cable replacement service, so very similar to YouTube TV that also has access across sports, news, as well as entertainment. So on an investor call that I just got off of, David Gandler, he is the CEO of Fubo, and he's going to control this new entity. He said that this creates options to potentially have skinnier bundles, maybe more focused, more targeted content offerings for consumers. So again, another option when you think about consumer choice that could be priced differently. So this is something that I think we're going to start to see across the board as these smaller players are looking to compete. They're going to be gobbled up essentially from these bigger giants. And really, I expect a lot more consolidation here to come. But this is sort of the first sign and the first shoe to drop when we think about the consumer and the options that are out there right now.
All right, Allie, we're going to let you get back to reporting on this as the news develops this morning. Thanks so much for bringing it to us. We appreciate it. Coming up, we'll bring you our research roundup. But as we head to break, we do want to give you a special preview of our live coverage from the ground at CES in Las Vegas. This week, we'll have all the tech headlines for you there. Here's a quick preview of what you can expect.
CES, the annual Consumer Electronics Technology Expo, is set to kick off here in Las Vegas on Tuesday, and it's sure to introduce plenty of interesting, attention-grabbing, and downright weird new products. AI, of course, will be the big story this year, but that's not all. Here's what to expect from CES 2025. AI is everywhere at CES 2025. Sure, it's been the talk of the tech industry since ChatGPT debuted in 2022, but this year's show has turned up the hype to a fever pitch. Samsung, for example, is boasting its AI for All event. From headphones and glasses to pool cleaners and robots, AI is set to dominate this year's big event. It wouldn't be CES without a few good chip stories. AMD, Intel, Nvidia, and Qualcomm are all bringing their A game to this year's show. Expect each company to talk up their latest and greatest chip capabilities and dive into how their platforms are going to power the next generation of AI software. This is the Consumer Electronics Show, so don't expect much in the way of announcements related to enterprise servers and AI-specific chips. Still, AI will be a major part of the conversation. How the company's new chips will beat out their competitors' offerings while running AI applications, the types of apps they can offer, how many TOPS or trillions of operations per second they provide. Expect to hear it all. It's hard to imagine CES without some wild new car tech, and 2025 will be no different. This year, we'll hear about how automakers are embedding AI into everything from their vehicles' dashboards to their driving systems. BMW, Mercedes-Benz, Honda, Hyundai, Toyota, and others are set to show off their latest technologies and more. Don't sleep on the non-four-wheel vehicles either. CES is known to feature a variety of flying cars and tricked-out boats. It's bound to be a menagerie of transportation tech. Of course, you can expect plenty of weird gadgets at CES, from AI-powered appliances and high-tech toilets to electric roller skates and more. CES 2025 will have its fair share of highly talked-about devices that will leave you scratching your head wondering, what did I just see? Finally, big tech is bracing for President-elect Donald Trump's proposed tariffs, and exactly how those will impact everything from enterprise to consumer electronics is certain to be top of mind. It's not just tariffs, though. Tech firms across the spectrum are bracing for Trump's second time in the Oval Office, with leaders of several of the Mag 7 companies, including Meta's Mark Zuckerberg and Amazon founder Jeff Bezos, cozying up to the president-elect in an attempt to repair their frayed relationships. It's all sure to make for an interesting dynamic at CES, and an even more interesting year for tech overall.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Now it's time for some of today's trending tickers. You can scan the QR code below to track the best and the worst performing stocks of the session. That's what the Yahoo Finance's trending tickers page. First up, let's take a look at chip stocks. Citi is staying bullish on the group of names here within the sector. Buy ratings on large cap, small and mid cap names, component makers, and consumables. When you take a look within this note here, take a look at some of those larger cap OEMs. AMAT, one of those names here, saying that they have a balanced 2025 mix. When you take a look at multiple secular drivers, the valuation discount to peers. Many of the questions going into this New Year's, whether or not we have seen an inflection in the chip coverage here, whether or not we will see further gains in some of these larger cap names. Also went on to some of those smaller and mid cap names there, laying out some of the bullish cases there just in terms of demand. The fact that he sees them being, the group there sees them being beneficiaries there of the larger component or the larger bullish case surrounding this story. But I think a lot of this seems to be based on valuation, exactly what the extent of growth could potentially look like here over the next 12 months here, Maddie.
It was interesting. They had a lot of names on the list, obviously, but 5 of them were upgrades to buy from neutral. They had the likes of Nova, Vico Instruments, Advanced Energy Industries, Form Factor, and MKS Instruments, which was the highest gainer, at least in the pre-market trade. You can take a look on your screen here. Just the big gains that we are seeing across these names, again, upgraded to buy from neutral from Citi. And the analyst talking about how after a sharp correction, which we did see, there was seasonal weakness, but it was more than that. The amount of weakness that we saw in some of these names due to demand. He says that second half of last year correction means that the risk reward appears skewed to the upside moving forward. For this group of trades, they are closer to historically attractive PE levels, which is exactly the challenge that we've been talking about for a lot of those other names, including the likes of NVIDIA, which is also, just to say, another name that I know you've been talking about a lot this morning, but also surging off the back of that assembly partner Han Hai surging after their earnings as well. So interesting to see that movement. All right, well, we are also watching gold today. Goldman Sachs delaying its forecast of $3,000 for gold to the second quarter of 2026 due to fewer Fed cuts expected this year. Analysts now expecting it to reach $2,910 by the end of 2025. What really stood out to me here, obviously the macro impact of the Federal Reserve, but also I thought back to that November note from Goldman calling for gold to hit a record high under the Trump administration due to the impact of tariffs and the impact of gold buying as an inflation hedge heading into this year. And now seeing the reversal of that call also in tandem with all the tariff news we've gotten this morning, just really interesting to see that they don't necessarily see that anymore.
Yeah, and what's interesting to me is some of those opposing forces that were laid out within this note, and a lot of that driving into what we have seen the price action here as of late. They talked about the fact that lower speculative demand and structurally higher central bank buying effectively have offset each other. Looking ahead here to this year, they do see the price still rising up to $2,910 by the end of this year, and looking ahead, they're now expecting that to reach that $3,000 maybe until mid-2026. But I think you're exactly right here. As we talk about, there's so much uncertainty surrounding the Fed's next moves and what that is going to look like and the degree to which they are cutting. When you come out with so many of these forecasts, especially as an inflation hedge here, you might see a bit of a readjustment here over the next 6 to 12 months as we do get a better idea of obviously what the central bank has decided, where rates are going to land, and what that longer term rate is going to be. Obviously could have a huge impact on a trade like gold.
Yeah, absolutely.
Finally, Constellation Energy awarded a record $1 billion to supply nuclear power to the U.S. government over the next decade. Joining us now, we want to bring in Paul Zimbardo. He is at Jefferies U.S. Power Utilities and Clean Energy Research Managing Director. Lots to get into here, but I think the big focus, and we certainly saw some of that optimism play out in the market last week on the heels of this $1 billion in contracts that was awarded to Constellation. What do you think this is indicative of, or what this tells us about the demand here for the nuclear sector at large, and whether or not we're entering here in this new into a potentially new era?
Yes, no, thank you very much for having me. And I do agree. I think 2025 is going to be a big year for nuclear, both existing nuclear as well as new nuclear. And it comes back to a topic that we've been following closely. It's just the power demand from data centers and AI is accelerating. You saw Microsoft come out with a significant increase of its CapEx expectations just last week. You know, the thirst for electricity is extremely high, and there's very few sources of clean baseload electricity that is carbon free, and that's really just nuclear.
And talk to me just about how much more room to run there is for a name like Constellation, for a name like Vistra, which topped the S&P 500 year to date for 2024. Can investors still get in on these names?
In short, yes. We prefer a Vistra as well as a Talon to TLN as well. And there, the nice thing about them is they came from very low starting points. So yes, Vistra was one of the best performing S&P companies in 2024, but it came from a very low starting point. The market was unsure about the value of some of their gas assets, describing very low terminal values, kind of uncertainty around future of gas. So we do think there's a lot more room to run for a lot of these names, especially Vistra and Talon.
What does that look like for a name like Vistra, just given the massive gains that we saw in 2024?
Yes, no, absolutely. Kind of when we look at the blue sky scenarios, what's really untapped still is the natural gas side. So what we've seen, like you mentioned, the Consolidation deal with the government for nuclear energy, we still haven't seen deals from Vistra to be announced yet. We still have not seen deals for natural gas assets. The big power plants that they own, they're one of the largest owners of natural gas, where you have the potential to contract directly with a hyperscale customer. So even though it's had a significant run, great performance 2024, good start to 2025, I think there's a lot more potential once you actually have deals announced for Vistra, which we do expect in 2025.
And zooming out a bit, how much of a tailwind do you expect regulation to be under the Trump administration in particular? Because we did see some of that regulatory wrist slapping in 2024. But I like to think a lot about how when he was at the New York Stock Exchange, Trump said he wanted regulatory approval for nuclear sites within a week. Do you anticipate it being that real and bullish and positive for nuclear stocks?
A week might be a little hard, but there's a lot of red tape with the Nuclear Regulatory Commission, also for the new nuclear plants, where right now the projections are around mid-2030 before new nuclear can take a big toehold, which again is kind of the advantage of the companies like a Vistra, Talon, Constellation that actually have nuclear for sale today. So things should get better under the Trump administration on permitting, regulatory reform, et cetera. But kind of there's no real options besides the existing nuclear plant if you want to add your data centers in the next 5 to 7 years.
Well, when you take a look at the pricing here of this deal with Constellation Energy and the U.S. government, how does that compare to expectations? And what does that tell us then about maybe pricing of some of these deals that we could see to come to fruition?
Yeah, no, it's an excellent question. It's the number one question that we get asked all the time. So this deal was around $84 a megawatt hour. And to put that in perspective, just normal electricity in the wholesale market is around $40 to $50 a megawatt hour. So a significant premium for that clean energy, as well as kind of a nuclear upgrade, which is adding more nuclear capacity. So investor expectations for a virtual deal were probably around the $80 level. So you saw the significant outperformance that the stock had, as well as Vistra. The question really becomes, what will the hyperscalers be willing to pay? So that's what we're waiting for, the next big hyperscale deal. We saw Microsoft with a 3 Mile Island restart. We saw Talon and Amazon back in March of 2024, but we're waiting to see what the next hyperscale customer is willing to pay.
Yeah, what do you think is more likely, increased capex from the names that have already announced those deals, or a different hyperscaler jumping in here?
Really, I think both. So you've had all of the hyperscalers, Microsoft, Google, Amazon, be involved. Meta has a request for proposal for nuclear. Right. So we're really waiting to see Meta step in on the nuclear side. They made some gas announcements. So I think it's really kind of both aspects right now, because the scarcity of power is the real number one constraint when we talk to all of these companies. I think you're going to see all of the players in large size as well.
All right, Paul, we got to leave it there. Thanks so much, as always, for joining us. Appreciate it.
Thank you for having me.
Coming up, as Congress prepares to certify the 2024 presidential election results, we're going deep on Trump's tariff plans. That's next on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial gain. We'll go beyond the headlines, analyzing all the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
Trump denying a report from the Washington Post saying that the president's aides are planning to pare back his plans for, quote, universal tariffs to specific sectors. You're looking at a post that President-elect Donald Trump posted this morning on Truth Social. Taking a look at the market's reaction to this, you still have yields continuing to move to the upside here. You have the 30-year yield at the highest level that we have seen since November 2023. Flipping over to the currency market, the dollar paring some of its earlier losses here this morning on that update here from President-elect Trump. Here on what to expect from the early days of a second Trump administration, we want to bring in Henrietta Treyz, Veda Partners Director of Economic Policy. And Henrietta, let's start with this back and forth of what we could see here with tariffs and how exactly this is going to play out. And I bring that up in the context of market expectations, even from the moves that we're seeing this morning, the fact that the dollar paring some of its earlier losses on the update that we got from Trump. What does that tell us just about the market's realistic expectations versus maybe what we are hearing and hoping to hear from the Trump administration?
Yeah, I think it's really interesting. The market is obviously signaling that they take Trump's campaign promises very seriously, and they were moved by the tweet by the Washington Post report this morning that maybe the campaign promises, which were very vague in the first place, were going to be pared back. What I think it really signals is a repeat of what we saw in the first term, which is that there's not a lot of detailed trade knowledge on the street right now, whether that's understanding Section 301 versus 232 versus IEPA versus balance of payments authority. There's just a lot of different components of trade law that can be deployed by the president. And we expect that to happen in January 20th when Trump takes over. So I think this one is going to be most likely deployed via IEPA, which is an immediate authority. We know that Customs and Border Patrol can update tariffs on any item in 12 hours. So the street should be prepared for that. I think if you wanted to step back and say, what's it really going to look like? Think about how much revenue they're going to need for the tax bill. The tax bill is going to require a minimum of $2.5 trillion to offset just the delta between what they already have and the $4.6 trillion cost of a permanent extension. So we need $2 trillion in revenue. Trump says that we're going to get it from tariffs. You should assume the tariffs will be coming on.
Henrietta, that's exactly where I wanted to go with this reconciliation bill. Are any form of tariffs going to be enough to cover the costs?
No, and really importantly, there's not votes in the House or the Senate to impose these tariffs. So when Congress is writing the tax bill, it will not incorporate a tariff. So what that means functionally is that the president will have to impose the tariffs likely well in advance of the tax bill being written to start generating revenue from the tariffs to go and tell Republican members of the House and Senate who may have an issue with massive deficit increases that the tariffs are going to, in fact, offset the cost. So right now, we generate about $74 billion per year on tariffs. We need to fill a $2.5 trillion gap. So the tariff rates need to rise substantially, and that's going to come from the president because, again, the House and Senate do not have the votes to pass tariffs as a part of the tax bill to functionally offset the cost.
Henrietta, then how should we be looking at the path forward as Republicans are trying to chart this path forward? Maybe what is within the realm of possibilities, what is almost a pipe dream at this point, just given the very, very slim margin for error there, just in terms of being able to get enough votes. How do you see that progressing?
I really can't say it strongly enough. I was the tax staffer in the Senate, and I've worked for Joe Crowley when he was in the Ways and Means Committee. Writing a tax bill is so hard. So to think that this is somehow going to happen in the 30, 60, 90-day time frame is unrealistic. The deadline for a tax bill is not until December 31st of 2025. The best case scenario is that Republicans do, in fact, try to tether the debt ceiling to the tax bill. The debt ceiling is going to be due around July, which is the earliest deadline that investors should have for the tax bill to pass. And then, of course, when the tax bill is written, it's going to be an extension of existing tax rates, not further stimulus from here. So all expectations about massive tax cuts, limited tariffs, easy passage of any of this should be pared back.
Yeah, I want to stick on that, Henrietta, because I think it's such an important point. And we heard Speaker Johnson talking about this over the weekend, that he wants it to kind of be a waterfall of legislation at once in April. Should the market be anticipating more of a drip of policy coming from Washington throughout the year?
Well, that's certainly what Senate Majority Leader Thune would like to see. So Thune, who's been in the Senate for 20 years and has a deep well of experience when it comes to how difficult this legislation is, including the 2017 Tax Cuts and Jobs Act and myriad debt ceiling increases and government funding shutdowns, has appreciated that writing a tax bill is very likely to take 7 to 12 months. And so instead, he would prefer to, give the president some victories on some of the issues he campaigned on early on in, the first half of the year. And that's a strategy that will actually deliver to voters, sort of give momentum to the Republican majority. One of the things to keep in mind is that it really helps the party when you're able to register wins. When you get bogged down in the legislative text, it tends to fracture folks. And in March, we have to have another government funding fight. So I think the president-elect has recently tweeted that he's, going back on this one reconciliation bill strategy, and now maybe is open to the two bill strategy of Senator Thune. And I think that makes a lot of sense because you could actually get a military, immigration, border, and energy bill passed in the first 90 to 100 days. I think that's entirely conceivable, maybe even by February 14th if they put their back into it. But one of the issues is that then you don't have that border security red meat to carry into the tax bill debate, which is going to be extraordinarily contentious, controversial, massively deficit increasing. And so you really have those slim majorities, as you pointed out, creating havoc already before the president's even sworn in.
So, Henrietta, just taking all this then into consideration, it doesn't sound like the market's optimism then maybe surrounding some of the things that we have seen drive some of those higher gains here since President-elect Trump was elected. It doesn't seem warranted.
No, I mean, this is going to be really difficult and really hard fought. I do expect all of the tax extensions to go through, but it's going to take 12 months and there's going to be rocky roads in the interim. I think the bond vigilantes are in a really good position to say, this is going to be a $2.5 to maybe even $5 trillion spending year. Whether that's because of the debt ceiling, the government funding bills, increased defense spending, and of course the tax bill. These are all very expensive provisions. So optimism on deficit increases is entirely warranted. Optimism that this is going to be easy is way off the mark. Anybody who's ever worked in Congress should know that the president does not have the authority to write tax legislation. And though Trump can get Speaker Johnson confirmed as Speaker, he's not going to sway the SALT caucus. He's not going to sway the Inflation Reduction Act clean energy tax credit supporters. 70% of that money goes to red states. Those members are not going to want that money repealed in writing a tax bill.
Henrietta, to start to wrap up our conversation where we started, this reporting from the Washington Post this morning that Trump's tariff policies had shifted a bit, that it was going to be specific imports, but across every country. That led to a bit of bullishness across certain corners of the market. And then, of course, Trump responding, throwing cold water on that reporting. Do you think that there is any truth, not to this reporting, but to the idea that the market is acting as a check on Trump and that the market reaction in the 30-year yield, for example, could be moving him on when it comes to his agenda on tariffs?
No, I don't think that that's the case. Indeed, I think that the Washington Post reporting probably has a kernel of truth. I think it's unrealistic to anticipate that the president is going to impose 10% or 20% tariffs across every single import from any given country. That's not what we saw during Trump's first term. Now, granted, he has a different U.S. trade representative in Jameson Greer than Bob Lighthizer, but the strategy that is available and the tactics that are available to the USTR are so much more advanced than just a blanket tariff that we should expect it to be on specific alloys, specific critical components, just as we saw in the first term. It's Section 232 national security tariffs across steel and aluminum, not all alloys that are imported into the United States. It's Section 301 tariffs on a critical list of items from China on a tiered basis. 1, 2, which is industrial components, list 3, which is consumer facing, 4A, which is consumer facing as well, and then 4B, which has never gone on, but is everything you buy at like the grocery store and Dollar General. Extraordinarily regressive. The trade world is a lot more nuanced than just a blanket tariff. And so it was probably never appropriate for the street to think that there would just be a blanket tariff. I know that Trump said that on the campaign trail, but I think it's because it's easier to explain. The ability of the USTR, the Department of Commerce, to target individual items and change the tariff rates on those items specifically is something that we should expect. And I think is what the Washington Post reflected. Trump, of course, did not like that it appeared to be lenient and came out and retracted that. So I think there's a long way to go. Keep your eye on the prize. We need $1 trillion or more in revenue from tariffs. They are going on. They will be high.
All right, Henrietta, always a great overview. Thank you so much.
Thanks for having me.
We will have all your markets action ahead right here on Yahoo Finance, so keep it here for more. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Oil prices rising today after President Biden moving to permanently ban new offshore drilling on over 600 million acres of ocean. Now, this would impact the entire East Coast, the Eastern Gulf of Mexico, parts of the West Coast along the shores of Washington, Oregon, and California, as well as portions of Alaska's northern Bering Sea. President Biden saying in a statement, quote, drilling off these coasts could cause irreversible damage to places we hold dear and is unnecessary to meet our nation's energy needs. The American Petroleum Institute issuing a statement after this announcement saying, quote, "We urge policymakers to use every tool at their disposal to reverse this politically motivated decision and restore a pro-American energy approach to federal leasing." Joining us now, we want to bring in Scott Shelton. He's an energy specialist at United Cap. And Scott, it's great to have you here on Yahoo Finance. So talk to us just about how those within the insiders within the industry are looking at this. And when you take a look at President-elect Trump, the possibility here that he could try and reverse this, what the odds are, and what ultimately this looks like here for the oil and gas industry going forward.
Well, I think, first of all, most of the U.S. production gains that we're seeing are more onshore and less offshore. And certainly offshore is a component of it, but those projects are 6 to 8 years out. So my clients and myself, we're more focused on onshore production, and we don't think it's really going to affect that. Longer term, of course, if this stays intact, it inhibits our ability to grow, but peak demand is not far away with EVs, and there's plenty of spare capacity out of OPEC. So the concern really isn't there.
How likely that it stays intact?
It's a good question. I think if Trump has his way, it won't be intact. The question is, can he make that change? And that's something that we're currently working on to see if that's a possibility, but it's not clear to us.
Yeah, and the case out there has been that it could potentially be harder for President-elect Trump to unwind this going forward. Scott, when you take a look at where we are trading right now for crude, we have been relatively range bound here. As you look ahead to 2025, what do you see? Are there any further catalysts on the horizon that could get us back to some of these levels that we haven't seen for quite some months?
To the upside, I would think the catalyst would come out of Iran and Russia. We have seen a slowing of Russian exports to the extent where some refiners in Asia, like India, are all of a sudden being forced to access cargoes from Asia rather from Russia. It seems like the net effect of the sanctions that Biden put on shipping are starting to have an effect. And certainly the way that Trump talks with regards to Iran and playing tougher is certainly going to be something that we're going to have to watch pretty closely, because Iran supplies a lot of oil to China, I think about 1.3 million barrels a day. So if all of a sudden we can find a way to slow that down, China's going to be forced to go elsewhere, which will have a positive effect on balances.
How do you square that with the drill baby drill of it all, of the incoming administration and Trump's desire to keep energy as cheap as possible? How much does that weigh on your broader outlook for oil?
Well, we don't really think that there is going to be a significant change on the supply side in Iran. I think if anything, maybe it'll be a couple 100,000 barrels a day. With regards to Russia, it's a wait and see, but the amount of exports they've been able to do under these sanctions has been pretty significant, and we continue to think that. And we think that non-OPEC supply is going to be up about 1.5 million barrels a day, and we also think that demand is not going to be over 1 million barrels a day. So regardless of what happens with Russia and Iran, as long as it's within our parameters, we actually think that it's going to be a stock building year all the way through the end of the year, and it's going to accelerate in the spring.
All right, Scott, we got to leave it there. Thanks so much.
Thank you.
President-elect Donald Trump doubled down this morning on universal tariffs, saying on Truth Social, the Washington Post wrongly reported potential plans to target specific sectors. Now, that comes after this morning the Washington Post had reported that tariffs would be universal to every country, but would only impact certain items. We want to get some perspective on this from a former member of Trump's economic team, Joseph Lavorgna, SMBC Nikko Securities America Managing Director, also former chief economist at the National Economic Council. Great to have you on with us, Joseph. I just want to get your sense, given that you have had these kinds of conversations with the incoming president, do you think there was truth to the Washington Post reporting?
No.
Tell me more.
No, I don't. I mean, the thing is, because, look, President Trump's been very clear on what he wants to do with tariffs, and he said some minimal level of tariffs, 10 to 20% across the board, and China at 60. Those numbers are obviously can change, but to come out and say that we're not going to be as high as what he'd been saying and it's going to be targeted, is definitely putting the cart way in front of the horse. So when I saw that story, I said that didn't make any sense to me, and certainly President Trump admitted as much.
Joe, what do you think of the market's reaction? Though it seemed like the market was a little bit encouraged by what we heard from the Washington Post report.
I mean, it depends what market. I mean, the equity market is still up pretty significantly today because the market's excited about inflation coming down and growth being a lot stronger. The bond market has reacted a bit negatively, but I don't think it's because of the tariff story, but rather just because you've got a lot of Treasury supply coming in the first part of this year. You've had inflation that's been higher than expected. You've gotten the Fed that has been pretty dovish, and that's led the market to add risk premium in the long end. So the reasons why the long end and the Treasury market broadly has sold off, I don't think it's related to tariffs, though.
But Joe, you just said it. The market potentially, in your view, rallying because they think inflation's coming down. That could be a sign that the market was happy that Trump's tariff policies could be more limited because there's concern that those policies will be inflationary.
Yeah, I don't think it's. I know. No, the tariffs to me are not inflationary. The tariffs are part of a comprehensive program that includes increased energy production, as you were highlighting, deregulation, which can increase the supply side of the economy, and of course lower taxes. So that four-pronged approach, so to speak, will get the economy moving, get growth to be faster. And that, to me, is what the equity market is discounting. The equity market is discounting what should be a very good year for growth in 25, and hopefully concentrated more in the private sector than in the public sector, which, by the way, in the last 7 quarters, the public side of the economy has grown faster than the private sector, which is really unheard of and unnecessary. So if the programs coming in, DOGE, et cetera, can deal with some of this excess government spending, that'll also go a long way to leading to faster or better animal spirits. And I think the equity market certainly is factoring that in as well.
Joe, when you take a look at the bond market and the reaction really that we've seen since that first cut going back to the fall, it's been pretty steady in one direction to the upside here. When you take a look at yields, the current rate right now on the 10-year yield, how much higher could we potentially see? And I guess at what point does that become a bit problematic here for growth?
I mean, right now rates are pretty high. We think they're above where estimates of fair value have them. Unfortunately, the Treasury's decision to shorten the average maturity of the debt does pose some problems in the sense that eventually that debt will need to be termed out. I'd say there is a risk that 10-year yields could move higher, perhaps make a move up to 5%. But if inflation's coming down and we've got very good growth, close to 3%, if not better, and we look at the first Trump 1.0, we had low rates and good growth and low inflation. So I don't think rates are sustainably going to be higher here, but it's not to say in the short term we can't get a move up. I also think a lot will depend too on what the Fed does. I mean, the reason why the market is sold off is if you look at the term premium after that 50 basis point cut back in September has explained the bulk of the sell-off in 10-year yields. And the fact that Fed imprudently cut in November and December is a reason why these yields have risen, why the yield curve has steepened. The Fed cut when it shouldn't have.
Really quickly, want to get your take on this reconciliation bill. Speaker Johnson saying that it could be passed by April. When do you think the market should anticipate getting policy clarity from the incoming administration? Should it be in April?
Well, President Trump said he wants something on his desk in May, and that'd be right around 100 days from when he took office. So I think that's very doable. And I like the fact that there's going to be one big bill. I think that makes a lot of sense as opposed to breaking it up. So I'm optimistic that we can get it done, whether it's April, great, or May. I mean, that really won't matter.
What happens if it's 2 bills, though, Joe?
Well, right now, President Trump has said he wants one bill.
Yeah.
And Jason Smith, who heads up the Ways and Means Committee, said we could write the tax stuff. We've been working on it, and we can get it in one bill. So to me, it looks like it's going to be one bill, which to me is the more prudent way to go.
All right, Joe. Thanks so much for your time. As always, great to have you
Thank
here
you.
on Yahoo Finance. Keep it right here. We got much more of your market action ahead. You're watching Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and tricks that you need to grow your money. On today's show, Navigating Your Portfolio, we'll discuss the stock and bond markets in 2025 and strategies that you can implement to help build your wealth. And President Biden signing legislation expanding Social Security benefits for millions of Americans. We'll discuss some of the biggest changes that are coming through. Plus, estate planning. As we kickstart 2025, it's time to review your financial planning. We'll talk to an advisor, a financial advisor, about the 3 documents that everyone must have in retirement. All that and much more coming up this hour. But first, we have some breaking news from the Federal Reserve. Yahoo Finance's Fed correspondent Jennifer Schonberger has the story. Hey, Jennifer.
Good morning, Brad. That's right. And a surprise announcement. Fed Vice Chair of Supervision Michael Barr has announced he will step down from the position of Vice Chair of Supervision effective February 28th, but will continue serving as a governor on the Federal Reserve Board of Governors. Barr saying in a statement, quote, "The risk of a dispute over the position could be a distraction from our mission. In the current environment, I've determined that I would be more effective in serving the American people from my role as governor." Barr, who has served as Vice Chair of Supervision since July 2022, has submitted his letter of resignation to President Biden. Now, Barr's resignation coming just ahead of President-elect Donald Trump officially taking office on January 20th. A longtime economic aide to the incoming president, Steve Moore, told me on Friday when I asked whether Barr could be replaced that was, quote, "something in the mix." Of course, Barr, very unpopular amongst Republicans, members of the banking community and banks, for having pushed much higher capital requirements as part of Basel III, a leftover piece of legislation that needed implementation following the financial crisis. Again, the breaking news here, Brad, that Vice Chair of Supervision Michael Barr will be stepping down from that position as of February 28th, but will remain on as a governor. Back to you.
Jennifer, thanks so much tracking that story and bringing us the latest. Appreciate it. Stocks climbing to start the week here, looking to recover from last week's losses. Joining me now, we've got Burns McKinney, who is the NFJ Investment Group Managing Director and Senior Portfolio Manager. Burns, good to have you back on the program with us. You're specifically watching value stocks, and you say now is the time for them to outshine growth stocks. Just define the thinking around value versus growth right now, even in this environment, and why you're expecting this type of performance.
For starters, you really do see an economic situation coming into the new year where, we have, GDP growth has been pretty close to 3%. Unemployment is pretty close to 4%, and inflation has now got a 2 handle on it. And so, that looks like somewhat of a Goldilocks type scenario. If that's the case, then investors should expect a continuation of the broadening of returns that we saw during much of the fourth quarter last year, up until the Fed, I think, had a little bit of a hawkish commentary in mid-December. So, typically a Goldilocks type scenario is good for value stocks. You also have just reversion to the mean working in your favor. If you look at the U.S. Value Index, it trades at roughly a 50% discount to the growth index. Typically, it would probably be about half of that type of discount. And so reversion to the mean also works in your favor as a value investor. And I think finally, the third key point is that interest rates, despite the fact the Fed is lowering rates, they should probably, the longer term, the 10-year bond yield may stay a little bit higher than it has been over the last 10 to 15 years, which is the type of thing that maybe should push investors into shorter duration financial instruments, which would mean away from some of the really the highest growth, the growth stocks, for which a lot of your value is coming from cash flows you expect in the distant future, into something for which you're getting a lot more of your cash flows today, and that tends to be value equities.
Okay, so when you think about this, the parameters, or at least the checklist that investors should be going down for the value equity portfolio play, what does that checklist look like?
Yeah, and looking for names in value, you definitely, you don't want to go bottom fishing. You want to look for quality. And so, probably the key things we look for is free cash flow. That pretty much cures all ills. Free cash flow means you can return capital to shareholders. It means you can support a dividend. It means you can clean up balance sheets and pay down debt. Look for companies that are generating a lot of free cash flow. And probably the second thing you look for as far as trying to go into quality value names is the holy grail is pricing power. Look for companies that have some sort of sustainable competitive advantage that allows them to generate pricing power in an environment that might not be as inflationary as we've seen in recent years.
Burns, as you were mentioning the economy here, it kind of brought back the thought of what the economy is anticipated to do over the course of this year. And you're anticipating a slower but more sustainable economy, normalizing from some of the hot post-pandemic rebound that we'd seen 2021 to 2023 year. So as you're thinking through 2025, what does the calculus kind of lead you to believe we could see play out? And what does that mean for the Fed and how they could also influence in their decisions what markets might be trying to get ahead of as well and anticipating the Fed?
Well, again, I noted that the economic situation is certainly fairly comfortable right now insofar as that we don't see a recession in the next 6 to 12 months. But a lot of the near term and the forward-looking indicators show that the growth is slowing. And that's not necessarily a bad thing because it does lead to a more sustainable growth. The way I like to think, if I'm a marathon runner and I come out of the gates, blazing at a 6-minute mile, I'm gonna burn up and overheat about 3 miles, which is something that kind of is represented by inflation. But if you come out with something 8-9 minute mile, it's something that maybe you can sustain that for 26 miles. Then the key to that means that you can still see the consumer can remain strong. You can still see jobs remain solid, and you still have that growth without becoming overly inflationary. And that's the key. You noted the Fed because if we can actually sustain that momentum without having a relapse in inflation, then it would allow the Fed to stay on the sidelines and potentially continue to reduce rates at some point this year, which is really the tailwinds that investors are looking for. Stock valuations are a little bit rich, but the policy outlook is still pretty positive insofar as the central bank is still in cutting mode, and you never want to fight the Fed.
Yeah, look, you surely are spoken like a marathon runner. So we'll be looking for those splits just to see exactly what you're running yourself, Burns. But just lastly, while we have you here, want to get your picks as you're thinking through the plays that you've just outlined here on a sector basis. Who is best positioned to outperform this year?
Well, one of the first things that we look for as value investors is try to find something that's out of favor. Look for embrace headline risk. And when I think headline risk, the first thing that pops to mind is the healthcare sector. You do have it's a sector that lagged last year. You have a lot of investors worried specifically about the incoming administration, and perhaps the appointment of RFK Jr. might lead to threats to managed care or to some of the vaccine makers and some of the drug companies. But at the same time, what people are maybe overlooking is the fact that the new administration may also ease a lot of regulatory burdens. So you might actually not have the same degree of headwinds that investors are talking about. And this is a sector for which right now it trades at a discount to the market. You don't often get that. And you do have historically solid earnings growth. It's you can kind of have your cake and eat it too, whereby demographics tend to be defensive. But the healthcare sector, if you look at the longer term over the last 40 or 50 years, has actually grown earnings faster than any other sector. And so if you can get it at a discount, then that really is quality at a reasonable price. And so that's one place I think investors should maybe lean into some of that headline risk.
Burns, great to grab some time with you here. Appreciate it. We'll talk about the splits offline.
Sounds good.
Thanks.
Thank you.
The AI boom expected to continue in 2025, but it might look a little different. Yahoo Finance's Josh Lipton joins me now with more on how the AI trade could evolve this year. What are we anticipating?
That's right, Brad. So there is no theme we know investors have been more excited about than the mega AI trend. That enthusiasm helps explain the performance of the Magnificent Seven in 2024. Big tech names like Apple, Meta, Amazon, Tesla, Alphabet all enjoyed strong runs. The MAGS ETF, which tracks this group, it's up about 70% over the past 12 months. So how does that AI trade now evolve over 2025? Well, some analysts argue that yes, AI-related names have indeed enjoyed great runs, but they believe investors can stick with what has been working, such as the all-star performers like NVIDIA and Broadcom.
There's going to be continued momentum in the what we'll just call infrastructure play. So that's the networking stocks, Broadcom, Marvell, and obviously NVIDIA remains super well positioned going into 2025. I think everybody's confirming a whole host of demand for continued GPU growth for them. And then obviously everybody else that's in that cycle, right? So AMD as well, Intel.
Now, Beharan's enthusiasm in part is driven by the bet that those so-called hyperscalers, those giant cloud computing providers, are going to continue their chip buying spree in 2025. But in addition to hardware, Dan Ives over at Wedbush says to expect the broader software space to get in on the AI party as well. As he puts it, use cases, Ives says, are exploding. One of his favorite ways to play that trend, Palantir, which has already soared about 370% over the past 12 months. Now, some on the street are concerned about valuation after such a remarkable move like that, but Ives disagrees.
The transformational tech winners, if you just focus on valuation, you've missed all the transformational tech, from Apple to Meta to Google to Tesla and others. I believe, to me, it's the view, can they get to 10 billion in revenue? Can they get to $5 billion of free cash flow next, call it 3, 4, 5 years? Those are some of the numbers that we're talking about.
And finally, as our own Josh Schaefer reports, Goldman Sachs argues that the AI trade is going to evolve in the year ahead as well, moving into a basket of stocks it calls enabled revenues. In other words, companies that will benefit from the rollout and monetization of AI solutions, those companies that can use AI to drive sales but aren't actually selling things like AI chips to other companies. And this would include names like Adobe, MasterCard, and Salesforce. Brad, back to you.
All right, excellent stuff. A lot to track here. And it's kicking off some of the conversation at CES this week as well.
Exactly right.
We've got much more coming from there. Josh, thanks so much.
You got it.
Appreciate it. Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Nippon Steel and U.S. Steel jointly filing lawsuits to maintain their planned merger after President Biden blocked the deal last week. The litigation involves two cases, one in the U.S. Court of Appeals for the District of Columbia, alleging that Biden and CFIUS's decision-making around the merger here, that is in question. And then the second in the U.S. District Court for the Western District of Pennsylvania against rival steelmaker Cleveland-Cliffs over its alleged actions to prevent other parties from acquiring U.S. steel. Next up here, we're also tracking Uber. Uber has entered into an accelerated share repurchase agreement with Bank of America to repurchase $1.5 billion worth of shares of Uber common stock. This is part of the previously announced $7 billion in buybacks. And finally here, we're also tracking AT&T, boosted to outperform from sector perform at RBC. The analyst citing stronger confidence in the company's growth and shareholder return profile versus its peers. Meanwhile, the analyst cut T-Mobile to sector perform, saying they see less favorable reward risk based on current valuation. The 30-year yield hit a 14-month high today. This is ahead of the U.S. government's $119 billion bond sale later this week. Here with a look at the role that bonds should play in your portfolio in 2025 is Cooper Howard, Schwab Center for Financial Research, fixed income strategist here. So what is the weighting, what is the percentage that you're recommending for bonds to play in this year's, in the portfolio mix for investors?
You know, that's a great question, Brad, and one we oftentimes get from clients. And I don't think that there's an exact answer to it. I think really what it depends on is why are you investing in fixed income to begin with? We think that there's really three primary reasons that we recommend fixed income to most of our clients, and that's income, capital preservation, and then diversification is the third reason. So we think that fixed income should play a role in most of our investors' portfolios, but how much is really going to depend on what your goals are, what you're looking for to get from your portfolio. Because at the end of the day, all that a bond is, all that fixed income securities are a contract between you, the investor, and the issuer of that security. So I think sometimes some clients can be confused about what fixed income is, how it should play a role in their portfolio. But for what we suggest, when we tell many of our clients, if they've purchased a CD in the past, that's very similar to purchasing a bond. You know what you're going to get, when you're going to get it, and who that issuer is coming from. So those are kind of the three primary reasons that we suggest investing in fixed income. And I think that it more boils down to who you are as an investor and what your goals are versus what an exact allocation is, just broadly speaking.
The moves in fixed income could also, of course, as always, hinge on what the Fed decides to do. And as of right now, it seems like they're signaling for at least two rate cuts this year is what they've put out into the market's mindset here. What is your best estimation for what could play out and the impact on fixed income?
That is our estimation of what the Fed is going to do as well. So we do estimate that they are going to cut 2 times by 25 basis points each. But in terms of the outlook for 2025, I think that there's a lot of uncertainty, and that could filter into the fixed income markets in terms of a lot of volatility. And if you recently look at just the most recent dots plot, I think that a lot of that uncertainty is displayed in the most recent dots plot. So one Fed official, for example, projected no rate cuts this year, while another Fed official projected 125 basis points of rate cuts this year. So there's a wide dispersion about what Fed officials believe the ending rate for that Fed funds rate is going to be in 2025. But with the economy continuing to perform relatively well, hovering around 3%, unemployment continuing to hover around 4%, and then inflation not meeting the Fed's 2% target, I think the downside for additional rate cuts is going to be limited.
Okay, so all of this in mind, there may be some out there that are trying to figure out where lower rate investor or where lower rate issuers actually might play a role in their own portfolio as well. How are you evaluating this?
When we look at lower rated issuers or kind of some of those more speculative rated issuers, what we generally suggest is start with the bulk of your portfolio into core bond holdings. Those are going to be treasuries, mortgage-backed securities, investment-grade corporate bonds, or potentially municipal bonds, depending on your tax bracket, and then add more aggressive risk or more aggressive income sectors. We suggest to most of our clients no more than 20% of your fixed income portfolios to those aggressive sectors. That's things like high yield corporate bonds, for example. And right now, we think that high yield corporate bonds, they can still play a role in an investment portfolio, but we're just a little cautious on the outlook going forward. And the primary reason is low spreads. So a spread, Brad, is just the additional yield that you receive for investing in that riskier issuer relative to, say, something like a U.S. Treasury. Now, spreads are relatively low, so really what that means is that you're not getting too much additional compensation for taking on that added credit risk. So we, again, still think that high-yield corporate bonds or those riskier issuers can play a role in a portfolio, but we're a little bit more cautious because if the economy does deteriorate, those low spreads don't give too much wiggle room in terms of the outlook going forward.
But it seems like what we were starting off the conversation with is that we're not seeing such a major deterioration to the point where it would be classified as a hard landing. So are we seeing from right now in the fixed income landscape that it's more of the traits of a perceived soft landing being carried out or being really enacted here by the Fed?
Yeah, I would agree with that. And one of your previous speakers, they kind of pointed to the outlook for a recession in the next 6 to 12 months is relatively low. I would agree with that. It looks like we are engineering kind of a soft landing where the Fed is coming in. And like I mentioned earlier, with the economy running near 3%, unemployment relatively low, we have seen the trend in inflation start to stall out. Overall, that paints the picture of a relatively healthy economy going forward. And again, that does limit the downside of what the Fed is going to do. But again, our expectation is that they are going to cut interest rates in 2025. And what that should mean is lower short-term yields. So the Fed has direct influence over the very short end of the yield curve and a little bit less of an influence over the longer portion of the yield curve. So we do think that the yield curve is going to steepen, meaning short-term yields are going to continue to move lower, while longer-term yields, it looks like they do have some potential upside from here.
Cooper, thanks so much for taking the time. Happy New Year to you.
Thank you, Brad.
Appreciate it. Coming up, we're breaking down President Biden's changes to Social Security benefits, plus the documents that everyone should have ready when estate planning. All that and much more coming up.
Oh yeah, you're not going to forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
A report by the CFP, or Certified Financial Planner Board of Standards, reveals that 97% of Americans have at least one financial priority for 2025. Topping the list of goals, 42% looking to reduce debt, 21% looking to save for a major purchase, and 14% looking to plan for retirement. These goals all revolve around one key aspect of financial planning: budgeting. Here with more, we've got good friend of the show, Michaela Alaka, founder of Break Your Budget. Michaela, great to have you back on. So how should people be setting up their budget for the new year?
Thanks for having me. Yeah, the very first thing that you need to be doing is taking a financial snapshot. And the top of the year is the perfect time to do this. And it's an opportunity for you to really audit your different accounts, understand your paycheck deductions and your cash flow and how much money is flowing in, how much money is flowing out, and also get an idea of your monthly spend for the various categories of your budget. I like to follow what I call a zero-based 3-bucket budget, which sort of marries a few different budgeting methods into one, and it allocates every dollar of income that I earn towards either an essential expense, a financial goal, or a non-essential expense. And this really is the budgeting method I recommend you follow in 2025.
Okay, all right. I'll be real with you here, and perhaps some of our viewers struggle with this too. Once you have a budget, how do you stick to it? Because that's been the challenge.
Oh, yeah. Most people struggle with sticking to their budget, but my best tip for this is to set what I call a weekly money date. And this is something that you should make a meeting with yourself on your calendar, your work calendar. I like to do mine on Monday evenings at 5 o'clock when I'm wrapping up the day. And it's basically 10 minutes where you sit down and you track your numbers, you're updating your expenses, whether you do this manually in a spreadsheet or with whatever automated budgeting tool that you choose. And then you look at how you spend your money and you compare it to what your original budget was. And then if there are any discrepancies or any surprises or anything that didn't necessarily go to plan, take a moment and make some adjustments, because it's super, super normal for your budget to change, for your priorities to change, for things to come up. And I think what a lot of people struggle with is once one small thing goes awry, they completely throw their budget to the wind and they say, I'll do it again next month. But where you're missing is you should just make some small adjustments. You can make some tweaks and realign your spending, realign your budget, and that will really help with actually sticking to the original plan and reaching those goals.
So how can people avoid overspending?
Yeah, overspending is a big problem. Overconsumption in 2024 was a big problem as well. In the long term, the goal is to figure out what your spending values are. So what are the things that make you feel really good, and what are the areas or categories where you want to cut back on? In the immediate short term, to help you figure out what those spending values are, there are a couple of things that you can do. So first would be to start tracking your expenses, because when you track your expenses, you're drawing awareness to where your money is going and how you actually feel about it. Are there things you're spending your money on that you're super excited about? And then are there things that you're spending your money on that kind of make you feel gross or icky? The second thing you can do is create what I call an impulse list, which is just a list on the Notes app on your phone where if you're scrolling social media or you're out and about and you see something that you want, instead of acting on that impulse, you're just adding it to the list and you're curating a list of things that in the future, maybe when you reach a different goal, you can go out and purchase. And the last quick thing here is to set small, tangible, like reachable goals. So maybe every week your goal could be to have 2 or 3 no spend days, or every week the goal is to put $25 into your high yield savings account. Ultimately, your financial success is a result of your day-to-day actions. So take it one day at a time and make your goals digestible.
All right. What do you do when your budgeting goals ultimately tell you, I might need to make a little more. I might need to try to figure out another way to bring in more income here to balance out. How do you go about that calculus?
Absolutely. So, discovering that you need to make more money, I think, is a really integral step. And throughout 2025, you can make it a goal to increase your income in a few different ways. Personally, I think that 2025 is the year of the part-time job, and not in a way where you have to completely overextend yourself, but in a way where you can figure out different opportunities or different paths to explore your interests and hopefully increase your income at the same time. So that's one way. The second way is to figure out if you either need to get a raise or a promotion at work, or if you need to go find a new job. And giving yourself the leeway and the time to navigate that decision is ultimately what is going to indicate your success. Making changes to your income takes time, it takes thought. You have to do some careful planning, but recognizing you need to make more is the first step. So those are a few of the avenues that I would explore if making more money is on your goal list for the new year.
Michaela, thanks so much for taking the time here with us. A happy new year to you, and look forward to checking back in.
Thank you.
According to LendingTree, 36% of Americans took on holiday debt this season, an average of $1,181. That's up around 15% from 2023. If you're one of those people, we want to give you some useful tips to manage that debt. Here to help us, we've got Emily Irwin, Head of Advice for Wells Fargo. Emily, good to see you here. So if, unfortunately, everyone was trying to be in the holiday spirit, clearly here, 15% up versus 2023. You got a lot of givers, cheerful as they may be out there. Now we got some debt that we also need to pay down cheerfully. Where do you start?
Well, the first place to start, Brad, is really not to get overwhelmed by the fact that you have debt at this point. It would be completely natural and normal to live in the inertia of, I don't know what to do, and therefore I'm going to avoid this situation. Rather, what I encourage people to do is really lean into it. Lean into your finances and try to deeply understand, where am I starting from? 2, set tangible goals for your short-term debt, your long-term debt, and other recurring payments that you might have. And then 3, make a commitment to yourself right now. This is the month of resolutions. Make a commitment to yourself to have a strong balance sheet and either maintain or continue to build a strong credit score throughout the year.
So with that in mind, how can you go ahead and recognize how much you spent in 2024 and plan, dare I say, plan already for the 2025 holiday shopping season in advance?
I'm a planner. I'm already planning for 2025. So you need to start by getting organized. This can be as simple as taking all of your statements and spreading them out on your dining room table. You might want to start with a spreadsheet, or even in your mobile app. Wells Fargo has the LifeSync app, which is incredibly helpful for this type of management. And what you want to identify is, to whom do I owe money? That's the first step. Is it a credit card company? Is it a recurring payment? Is it an individual that you maybe shared an experience or gift with? 2, how much do I owe for that particular item or experience? 3, what is the due date or commitment that I've made to pay it by? And then 4, what's the applicable interest rate relating to it? And what you also want to do is not forget about the other side of the balance sheet, because while it's good to understand the debt, if you just stop there, again, you go back to that feeling of overwhelmed. What you need to understand is, what's the cash flow that's going to come in, whether it's through salary, bonuses, part-time gig work, or other income that you can generate in order to be able to support those needs and those debts that you have. And when is it going to come in?
How can people identify the best debt management strategy for themselves? We've heard about a lot of them: snowballing, avalanche, a lot of winter corollaries there. But how can somebody go through that mental practice and ultimately figure out, okay, this is going to be the best strategy for paying down debt right now?
This is a know yourself moment. You must know thyself. So if you're someone who the thought of paying 1 cent extra just makes your skin crawl, then you're probably going to want to think about the avalanche method. And that's something where, of course, you make all of your minimum payments on time, again, getting back to that building a strong credit score. And then any additional funds you have left over, you apply those to your highest interest rate principal debt. And you do that because that means that really in the long term, you're going to be paying less from a debt perspective. By contrast, if you're someone who says, I'm going to have a hard time maintaining my motivation to continue this throughout the year, I feel like this is just a crushing amount of responsibility that I have, then the snowball effect might be a better one for you. And that's where you make those minimum payments, again, on time, and then any additional funds that you have, you go ahead and you start quickly paying off your lowest principal debt. And that way you really move that off your balance sheet and you have that sense of accomplishment immediately.
Emily Irwin, thank you so much for taking the time here with us today. Some very actionable tips for our viewers out there and me.
Thank you.
Coming up, how do you boost your credit score in 2025? I talked to an expert from Experian next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
A programming note. In this week's episode of Financial Freestyle with Ross Mack, Matt Garland, MG, the mortgage guy, breaks down why 20% down payments on a home aren't always the best option. Let's listen.
If you're buying a primary residence, you don't have to put down 20%, right? And I'm a fan of OPM when it comes to this, other people's money, meaning I'd rather use the bank's money and finance as much as I possibly can on this property so that way I can use my capital for other things and other investments so I can make money. Now, you only want to do this if you can afford to play this game, right? We're putting less than, 20% down if you can afford it. Right. But some of the programs, FHA, 3.5%, you have knocker loans out there. You can do 100% financing.
New episodes of Financial Freestyle air Mondays, 12 p.m. Eastern Time. Catch them on Yahoo Finance or wherever you get your podcasts. A new year could mean a new credit score for those struggling to stay on track. If you have a score below 670, you may want to listen to the tips from our next guest. Joining me now, we've got Rod Griffin, the Senior Director of Public Education and Advocacy at Experian. Rod, Happy New Year to you. Thank you so much for hopping on. Give us the 3 keys to improving our credit scores in 2025.
So Happy New Year, Brad. Thanks for having me. And 3 keys. People are looking for a quick fix. There really isn't one. You have to do, as you said, basically 3 things. You have to pay your bills on time every single time, number 1. If you've fallen behind, catch up if you can. And then make sure that you are repaying your credit card bills, reducing your credit card debt. I'll add a 4th, you have a plan. So, holidays just gone by, I always tell people, be like Santa Claus, have a list, check it twice. When you're gift shopping, the same thing applies during the new year. Have a list, check it twice, and reduce your spending, reduce those impulse buys. So maybe a few more than 3 tips.
If someone is unable to make payments on time, what are their options?
Yeah, several things. 1, notify your lender. Make sure that they know that you may be having some difficulty. They have plans in many cases that can help you with those payments. They may be able to defer or forbear your payments, work with you on a repayment plan that can reduce those costs and help you get there. They want to get paid just like you want to pay them.
Yeah, true. What about utilization rate? Is there a sweet spot for utilization rate to have on your credit cards to keep your score in check?
Yeah, 0. That's the ideal, of course. But what we have seen for many years is that utilization rates or balance to limit ratios on your credit cards that are less than 10% are ideal. We often hear about that 30% number. That's really a maximum. It's not a goal or a target. When you reach 30% utilization on credit cards, the risk of default begins to accelerate rapidly, and your scores will fall rapidly as well. So the lower, the better. If you can pay down your credit card debts, pay the balance in full each month, that's the ideal, because if you don't pay the balance in full each month, all you're going to do is pay the interest on the balance that's remaining.
Rod, it's a new year. You got some new resolutions really knocking around out there. And one of them for some consumers might be closing out a credit card. But does closing a credit card really hurt your credit score? And if so, why?
It can a little bit in most cases, but that might be just fine. When you close a credit card, you lose the available credit limit on that account. And as a result, your utilization rate based on the balances with your other cards goes up. That causes your scores to dip. Typically, that results in a change for about 3 or 4 months, maybe, if that long, because it becomes clear you didn't take on a lot of new debt, but rather you've closed an account. That's a positive thing. Scores will rebound. So if you're planning to close an account, I wouldn't do it if you're planning to make a major credit purchase in, say, the next 3 to 6 months. If you're not, might be okay. Your scores will probably bounce back up, assuming that there are no other negative changes in your credit history.
And then while we have you here, we got to talk about fraud here. Fraud could be harmful to credit as well. How can we avoid identity theft and fraud this year? And if you are a target, how can you go about making sure that that doesn't hit your score because of something that, you know, happened to you, but wasn't necessarily because of a byproduct of your spending habits or you paying back something?
Sure. One, check your credit report. You can get a credit report once a week for free at annualcreditreport.com from each of the 3 credit reporting companies. I would also recommend that you subscribe to a monitoring service. Many times they're free. Experian has a free monitoring service, and we'll give you a free credit report and a free credit score and the risk factors that go with it. If there's any changes to that report, we'll alert you. That lets you respond right away. So be sure that you're proactive in checking your credit histories. That can be a tip-off. One of the first places people often find evidence of fraud. Lets you respond quickly. That's really key. You can, if you find evidence of fraud, add an initial security alert at Experian.com/fraud. We'll notify the other bureaus. That will add some protection for you, and then go through some additional steps if you need to. From there, it's about being proactive in the way you manage your information. Some people buy a shredder. They're cheap. And actually, identity thieves still love to go through people's trash. That dumpster diving is still one of their favorite ways to get information. So shred any paper that goes out with your information on it. That's going to help. And be careful about what you share, where you share it when you're online as well. That can be really critical.
Rod, some really valuable tips. Appreciate you joining us here today. Thank you.
Thank you so much. Happy New Year.
Happy New Year. The latest consumer price index, CPI, shows Americans are still being hit with higher food prices at the grocery store and at restaurants. Ricky Volpe, who is the former USDA economist, shared his thoughts on whether it's more affordable to cook at home or eat out.
It is still the case that it is cheaper to purchase food and prepare it and consume it at home. It is not the case that eating away from home has become cheaper than eating at home. In fact, it's quite the opposite. And food price inflation for restaurant foods, even fast food, is still way above normal.
But there is some good news for people who like to dine out, because the Golden Arches, McDonald's, is introducing a new McValue menu starting January 7th. Our own Brooke DePalma has the details on this. Brooke, this is McDonald's first national value menu since 2018. Color me surprised. What should consumers and investors expect here?
McDonald's here is really looking for a fresh start with, like you said, this first national value platform in nearly 6 years. After a year of lackluster sales growth, McDonald's also got hit with that E. coli outbreak and largely had to face this value perception that consumers had. Do I dine out to save money or do I simply cook at home? And so all U.S. locations of McDonald's will be getting this McValue platform starting Tuesday, January 7th to kick off the year. It includes multi-facets to this McValue platform. First, starting with the $5 meal deal that McDonald's introduced last summer. In addition to that, we're going to be getting this new buy one, add one. So consumers can buy something and then add something for $1. In addition to that, franchisee operators will also be getting local deals as well as these in-app exclusives. Now, analysts that I've spoken to said that this menu allows more optionality that we've had compared to previous national value platforms. For example, that buy one, get one for $1 allows a franchisee to set that price of that buy one. And in addition to that, we also, with this $5 meal deal, that has the potential opportunity to be increased, say, over time if it does well.
Do you think we'll see other fast food chains introduce more value options?
Absolutely. 2025 will be an ongoing continuation of what we saw in 2024, this idea of affordability and value really driving consumers' decision. Now, this could be a good news, say increased guest count, but also it could be a hit to margins overall for restaurants. But McDonald's really the leader here. When McDonald's does something, analysts saying that others follow, sort of a game of follow the leader, if you want to call it that. So we're taking a look at Wendy's over time, Jack in the Box, Burger King, to see if they introduce more value meals in order to compete with this. But one person saying that this is not good for the entire industry. We know that discounts and value does end up hitting profitability.
All right, Brooke, we got to leave things there. Whoever has the best tater tots, they'll probably get my buck. Okay, that's it for Wealth, everyone. I'm Brad Smith. Thanks so much for watching. Stay tuned for Market Domination coming up 3 p.m. Eastern Time. You don't want to miss it.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
There was a time, there was laws that were in place to stop us from buying real estate, right? There are people who literally died for you and I and everyone who's going to watch this that looks like us to fight for us to buy real estate. It's important for me to be a home ownership advocate, a real estate investor advocate, especially for our community, because we need someone to teach us how to do it, because they don't teach us in school.
All right, guys, welcome to Financial Freestyle here on Yahoo Finance. It's your boy, Ross Mack. Now, look, guys, whether you're a professional on Wall Street, a retail investor, or someone that's looking to change their overall financial situation, there's always a first step you got to take, and look no further, because I'm speaking to some of the most influential people in finance and learning about their path to economic prosperity. Today's no different. I'm sitting down with my dog, MG the Mortgage Guy, aka Matt Garland. He's an author of House Hackonomics and a seasoned mortgage broker with over 21 years. MG.
My guy.
My dog, man.
Ross
Mack.
You, man. Shawtown in the building.
Yes, sir. I'm in your hood now,
You're in the
baby.
city now. What's good?
Yeah, man. This is one of New York's finest people.
Yes, sir.
And I've been knowing this guy for some years at this point now. And so I want to say thanks for coming on, bro.
No doubt. Thanks for having me, man. I appreciate the love and congratulations, man. Continued success, bro.
Oh, man. Much love. But look, you already know. I know you. Anytime I had questions about the real estate market, when I got two coins to rub together, look, that's what I'm trying to do. I'm always call you. But more importantly, let's let the people know, who is MG?
Who is MG? Again, Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. I've been in the mortgage business 21 years, couple $1 billion under my belt in real estate transactions. I'm an author, co-founder of InvestFest. But overall, I'm just a great guy. Real estate is a passion of mine, real estate financing to be exact. And, I'm a firm believer in education. Absolutely. And that's one of the things that I try to do with my platform is spread the word on how, especially people in our community, right? How do we get into real estate the right way? How do we buy right? But also, how do we maintain that legacy with real estate for the long term? So I'm happy to be here and discuss it, man.
Yeah, no, look, when it comes to, financial literacy, right, there's a lot of people that tried to do it, and then there are a few people that did it the right way. And I think when I look at your platform, you're a person that is genuine about teaching our community the power of real estate. And I think, let's actually talk about that, right?
Okay.
Like, I think a lot of people, when it comes to real estate, there's so many misconceptions, so many myths. And anytime you go live from your car, you were, you know what I'm saying? It's MG, MLS number. I used to know your number by heart at this point.
Yo, it's funny that people come up to me and scream my number at me. Like, it's crazy.
Yeah, but like, let's actually talk about one, right? Why real estate is so important. And two, like, dispel some of the myths when it comes to actually owning real estate.
Okay, so why is this so important, right? Really think about just in the Black and brown community, there was a time, there was laws that were in place to stop us from buying real estate, right? There are people who literally died for you and I and everyone who's going to watch this that looks like us to fight for us to buy real estate. So why is it important? Because our people before us didn't have the same opportunities that we had. And I think sometimes, with technology and how life moves, we kind of take that for granted, right? It's 2025 now, and buying a house just seems so normal. But 50, 60, 70 years ago, that wasn't normal for Black and brown people to be able to buy real estate. So that's, for me, why it's important, right? But then also when you look at the legacy play, most wealth for most millionaires start with real estate.
Yeah, it's like 90%
millionaires start off with real estate.
That's insane.
Right? So if you look at the past couple of years, the amount of equity, the appreciation since the pandemic, what I like to call it, right, 2020, it's been phenomenal. And a lot of our people didn't have the opportunity. They didn't take advantage of those opportunities. But I'm here to tell you, it's still here for you. So it's important for me to be a home ownership advocate, a real estate investor advocate, especially for our community, because we need someone to teach us how to do it, because they don't teach us in school, right? Me personally, I think home ownership 101, you should be doing this at high school, right? Learning about saving your money, learning about your credit, and learning how to buy real estate. But it's not in schools for a reason and a purpose. We won't get into that right now, but this is why I advocate and I use my platform to teach our people how to buy and how to buy right. So that's one of the couple things that what I keep in my mind when I'm out here doing things is just to always keep that in mind. There's people that came before you that didn't have this opportunity, and you need to be the person that leads the way for the new generation.
Well, you brought it up, man. Real estate 101.
Yeah.
If that was in school, what should that course look like?
Real estate 101. First of all, there's 3 things you need for real estate. And I think for any business, right? You need credit, you need capital, and you need capacity, right? So the triple C's is what I like to call it. Credit, obviously, people just think about credit score. And it's not just about your credit score. It's about credit utilization as well. Right. So if you're maxed out on all your credit cards, you're showing that you're not financially disciplined to pay your bills and to manage those bills. You don't never want to keep your credit maxed out. Right. Your credit is maxed out. It's going to keep your credit scores low. So if you have low utilization, right, number one, it's going to keep your credit scores high, but you're also now building that relationship with the bank because they're seeing that you're managing debt in a responsible rate. Right. So credit is number one. Number two is capital. We need money. Now, you asked me about the myths, right? There's a lot of myths on the internet that say that you don't need money to buy real estate. That's cap, right? You need money to buy real estate. Yes, we know you can raise money. You can use OPM, which is other people's money, right? But you still need money, your own money, right? Because there's fees that involve not just down payment. You have closing costs, but also if something breaks, you need money to fix it, right? Man. And what I see, especially a lot of young folks, they try to get into real estate without having no money, and then something goes wrong, and now they're in financial ruin, right? So credit, capital, and then the third, which I think is the most important, is that capacity. Capacity is your knowledge. Capacity is your resources, right? A lot of people want to get into real estate, and they don't have the knowledge. They're not even spending the time to educate themselves. Right, they're relying on the realtor, the loan officer, their mom, their dad to kind of give them baseline information. But they think because they have a credit score, they have some money saved. You know what? I can go buy some real estate because I can get approved, right? And I know I can get approved. But if you don't have that capacity, you don't have that knowledge, you don't know what you're doing, you can lose all your money, right? So as quick as you got a house, got a loan, you can lose everything too if you don't have the capacity. So that's what I would probably structure if I was doing a high school curriculum around that triple C, and then kind of feed off of it from there.
The triple C.
Triple C's, baby.
Credit,
Triple C's.
Capital, capacity.
Yes, sir.
With that credit utilization, right? I love that you said that.
Feed off of it from there.
The triple C.
Triple C's, baby.
Credit,
Triple C's.
Capital, capacity.
Yes, sir.
With that credit utilization, right? I love that you said that because, quite often it's not taught, obviously, right? But you definitely want to keep that utilization under 30%.
Absolutely. Is
that your number two, or you keep it even lower?
30% is the number, right? But 10% is really the goal. Because when you're 10% or less, your credit score is going to be impacted far greater than if you're 30%, right? So if you can maintain 10% utilization on your cards, the better. And also what I would tell people, if you can pay your credit cards on a statement date, not the due date, because the statement date is when the creditor is closing out for your previous month. And then that's what they're reporting to the credit bureaus. Is that statement date balance, right? So if you pay down, like I have alerts in my phone for like all my cards, the statement dates, closing dates, and I have a reminder 48 hours prior to, right? So I know, okay, this January 11th, Amex is due, right? The statement date closes on account 2008, right? So now I'm like, all right, let me see what's going on. Let me stop using this card because I don't need no pending transactions, messing up nothing, right? And let me just pay down this balance to a 10% or lower or pay it off. And I know when it's reported like that, my credit scores are going to increase and skyrocket.
I love it. And so we talk credit. Let's go back to capital, right? I
Okay.
love what you said. Look, it is a myth. It is a myth. Look, you definitely need money to buy it,
100%.
right? Because I think one of the worst things is to be house rich but cash flow poor.
Yes,
Because
sir.
the moment something goes wrong, now you got to go borrow money to handle something that you probably should have already had. But let's actually go into that, because there's also another myth within that capital piece, and that is that you need 20% down payment.
Correct.
Right? What do you think about that? And what are some of the different programs people are able to utilize? What do you tell people when it comes to that?
So if you're buying a primary residence, you don't have to put down 20%, right? And I'm a fan of OPM when it comes to this, other people's money, meaning I'd rather use the bank's money and finance as much as I possibly can on this property, so that way I can use my capital for other things and other investments so I can make money. Now, you only want to do this if you can afford to play this game, right? We're putting less than, 20% down, if you can afford it, right? But some of the programs, FHA, 3.5%, you have knocker loans out there. You can do 100% financing. If you are a veteran, shout out to all our active and retired military too. Salute to y'all, right? You got VA loans, right? You have USDA loans, right? 100% financing. So you have so many different programs out there where you can do 100% financing or as little as 3 to 5% financing. You can buy 1 to 4 family primary residences with these properties. Now, if you can't afford a higher financing mortgage with, let's just say, putting 5% down, but it's more affordable if you put down 20%, then you have to do what you have to do, right? But me personally, I'd rather pay a little bit more in the mortgage payment, because when you look at the numbers, if my payment is going to be $250 higher, wouldn't I rather save that $25,000, $30,000 instead of me putting it into the house? Let me put that into the market. So now I can make money. And if you play it right, even if you're doing long-term investing and just doing stocks and you got the right stocks that have dividends, that dividends can probably pay you enough to pay down on your mortgage too. So if you understand all the tools that are available out there from an investing standpoint, putting down 20% for me, I wouldn't do it. I would reinvest that money, use that profit to pay down my mortgage, and keep repeating that cycle.
I love it. And then lastly, out the 3 C's is capacity.
Yes, sir.
You talked about kind of the knowledge to learn, right? That capacity to continue to learn. So what do you see most people get it wrong?
Everywhere. There's so many different places where people get things wrong. There's 2 areas, I think, in real estate. If you study in these 2 areas, you can. It's real estate financing and it's construction, right? I think those are the 2 most difficult things that people struggle on. Now, financing, learning how to fund your deals, whether you're buying a primary residence or you're buying investment properties, you need to learn what are all the tools. A mortgage to me is a tool. It's a tool to create wealth. It's a good debt. Most people look at debt as bad, but I look at a mortgage debt as a good debt, because it gives you the ability to buy real estate, which can be appreciating assets or cash flowing assets, right? So people are not focusing enough time studying all the different tools that are available out there to help you achieve and meet your real estate goals.
I love it. Look, guys, we got to take a quick break. And when we come back, we're going to have even more with my dog, Matthew Garland. All right, guys, welcome back here to Financial Freestyle. We're here with Matt Garland. We talking all things real estate, right? And we started this conversation talking about why you need to own real estate. And we talked about, 90% of the world's millionaires got their start with real estate. We also talked about, the value of homes increasing a lot, right? A lot of equity being built up. And to the viewers, right? When, if ever, do you think it's a good time to take out equity of your home? And if so, how much? Like, kind of, is there a rule you kind of like a steadfast rule you use and live by?
That's a great question. I mean, look, we have record-setting equity in the trillions right now, tappable equity in the trillions right now. Never been heard of, right? So there's going to be a lot of people, especially this year, where interest rates are slated to get lower, right, by the end of 2025. So do I recommend taking out equity out of your home? Yes, if you have a plan.
Okay.
Right? You need to have a plan. Like, don't just take out equity out of your home and you just out here willy-nilly, right? You out here just freestyling it. You're going to Dubai. You're going on shopping sprees. You're just having a good time. No, I don't recommend it in that case. If you're looking to do a home improvement, right, I recommend it. If you're looking to start a business, again, have a plan because businesses do fail often.
Absolutely.
If you're looking to reinvest into real estate, which I highly recommend because I'm a fan of using equity to buy more equity, right? So yes, I am a fan of taking out equity. Now, whether you do it through a cash out refinance, a home equity line of credit, HELOC, or a home equity loan. I'm a fan of all three, but just make sure you know your numbers and run your numbers, especially if you're looking to use that equity to buy real estate, Ross. What people often do, a mistake I see people make, is let's just say they take out a home equity line of credit for $100,000 and they pull out the entire $100,000. Now you have a payment that's due interest only. Let's just say that payment's $500 just for this conversation. When they go and buy the new investment property, they're not including that $500 payment into their numbers. So they might be negative cash flowing once you include that debt into it. Because you have to, whatever properties you're using this home equity for, you have to include that payment into all your expenses of those new properties as well. Because the goal is to buy that property to pay off that mortgage plus the home equity line of credit and all the necessary expenses that come with owning that real estate, and then also making a net profit for yourself. So if you are going to reinvest using home equity, run the numbers, make sure you understand exactly how to analyze real estate investments and you know exactly what you're doing.
So let's actually, one, define real quick what is equity, right? And then two, like, how do you go about, you talked about the three different ways, but what's that look like? Because it sounds like you're borrowing against yourself. Like,
Absolutely.
What exactly does that look like? Because you got to pay it back, right?
You have to pay it back. It's not free money. Like, you can't go into your house with your debit card and say, hey, house, give me some of my equity.
Yeah.
Right? So you have to get a mortgage. But here's the thing. What's equity? Equity is monopoly money to me. It's unrealized gains.
Okay.
Right? It's just like in the stock market. You look at your brokerage accounts. You're making a lot of money. Right? It looks good. It's green. But if you don't take that money, did you really make it? It's unrealized gains. It's the same thing like with home appreciation. Your home can appreciate 5-10% this year. It could depreciate 10% the next year. So unless you tap into that equity by going to a bank and qualifying to take out either a HELOC, a HE loan, or a cash out refinance on the home, then you will not be able to get any of this equity out of your house. My favorite of the three, especially in the interest rate environment that we're currently in, I would recommend, if you could, do a home equity line of credit.
Okay.
I think that is the best option because you're not paying interest on money that you don't use. So in that same example, if you take out $100K on a line of credit, but you only use $20,000, you're making a payment only on that $20,000,
nice,
not the $400. Versus if you do a home equity loan or a cash out refinance, once you close, all that money is dispersed to you, and you're making a payment right away. You might not even have identified a property. So the home equity line of credit, it gives you a lot of flexibility when it comes to now going to reinvest.
Gotcha. All right. So new administration, right? It's 2025.
2025. Let's go.
Right. What is your view on the
एवरीवन वेलकम वंस अगेन आई एम नॉट ऑन द सिस्टम। ठीक है, मैं सिस्टम पे नहीं हूँ काफ़ी देर से और अभी भी नहीं हूँ। आज का लाइव स्ट्रीम यहीं एंड करते हैं। हेल्थ नहीं है सही बिल्कुल भी, थोड़ा सा इमरजेंसी में हॉस्पिटल भी जाना पड़ रहा है, सो कंटिन्यूसली लाइव स्ट्रीम नहीं कर पा रहा हूँ। एक बार मैं देख लेता हूँ फिर भी। ठीक है, पॉसिबिलिटी क्या रहेगी। नेचुरल गैस देखोगे रेजिस्टेंस पे था, थोड़ा बहुत सेलिंग जरूर आई, फिर ये पता नहीं क्या न्यूज़ आ गई थी, मार्केट वापस ऊपर गया, वहीं पर घूम गया ऑलमोस्ट। ये लेवल अब आप रिमूव कर सकते हो, ज़रूरत नहीं है। क्रूड की तो हालत तो सही बेकार है। रेजिस्टेंस बहुत अच्छा था ये, इसमें एक एसएल जरूर गया है यहाँ पर, फिर इसने कुछ रीटेस्ट वगैरह कुछ किया नहीं। ब्रेकआउट हुआ, वापस कैंडल नीचे आ गई, फिर से ब्रेकआउट हुआ, यहाँ पर भी रीटेस्ट नहीं किया और वो भी उसी लेवल पर रुका हुआ है। न्यूज़ बेस थोड़ा मोमेंटम ज़्यादा है तो थोड़ा ध्यान रखना। अब कोई न्यूज़ आज वैसे है नहीं, सर्विस पीएमआई का डेटा था, दैट इज़ ऑलरेडी आउट। कल देखेंगे अगर टाइम मिलेगा तो, नहीं तो फिर जैसे हेल्थ सही होती है we will do the live stream continue. ओके, बाकी सर्विस पीएमआई का डेटा नेगेटिव था आपका। डॉलर इंडेक्स के लिए पॉजिटिव फॉर गोल्ड एंड सिल्वर। गोल्ड को ऐसे और सिल्वर को एक बार देख लेते हैं, क्या वॉलेटिलिटी हुई है वह। थोड़ी सी न्यूज़ भी आ रही है एक्चुअली यूएस से। यूएस में ना 20 तक थोड़ा सा संभल के ट्रेड करना, बिकॉज वहाँ पर जो न्यू एडमिनिस्ट्रेशन है वो क्या एंड किस तरह के डिसीजन लेता है, इस पे काफ़ी कुछ डिपेंड करेगा मार्केट की वॉलेटिलिटी एंड बाकी चीज़ें। लुक एट द वॉलेटिलिटी पाव। एक बार गिफ्ट निफ्टी को भी देख लेते हैं, लेट्स सी। गिफ्ट निफ्टी भी देखोगे, इंडियन मार्केट जो क्लोज हुआ था, हमारा इंडियन मार्केट उस क्लोजिंग से ऊपर ही चल रहा है अभी, लगभग 100 पॉइंट ऊपर है फिलहाल के लिए गिफ्ट निफ्टी भी। सेल ऑफ नहीं आया तो हो सकता है हल्का सा गैप अप देखने के लिए मिले। बाकी अब तो खैर कोई ट्रेड नहीं है इसमें, देयर इज नो ट्रेड राइट नाउ। लेट्स सी कोई न्यूज़ इन डेवलपमेंट अगर है तो। एक न्यूज़ कनाडा से आ रही है, वहाँ के शायद जो पीएम थे ट्रूडो, जस्टिन ट्रूडो, उन्होंने रिजाइन कर दिया है। ठीक है, वो एक मेजर न्यूज़ है। एंड इसके अलावा देखोगे तो says his tariff policy won't be pared back. और कोई न्यूज़ तो नहीं है मेजर, ट्रम्प की अनाउंसमेंट जिसका थोड़ा बहुत इम्पैक्ट पड़ रहा है। बाकी देखो मार्केट में वॉलेटिलिटी होगी हर एक मार्केट में, चाहे वो क्रूड हो, नेचुरल गैस, गोल्ड, सिल्वर, इक्विटी मार्केट, हर जगह पे आपको वॉलेटिलिटी तो देखने के लिए ज़रूर मिलेगी। रीजन उसका सिंपल सा है, ट्रम्प का टैरिफ किस तरह से वो टैरिफ लगाते हैं, किन कंट्री पर लगाते हैं, क्या क्या सिचुएशन रहती है, ये सारी चीज़ें रहेंगी। इस पर एक आर्टिकल है, वो मैं शेयर कर दे रहा हूँ, वो आप पढ़ना चाहो तो वो आप रीड कर सकते हो। As a new government takes shape in Washington, markets should be prepared for a lot more volatility ahead. Deutsche Bank George writes, looking at numerous large policy shifts on the horizon. Currency market swing this morning as Trump denied report his tariff policy it could be limited. To see energy sector किस तरह से react करता है, because energy sector is very important ट्रम्प की पॉलिसी में। कि ट्रम्प का जो स्टेटमेंट आया था उसी की वजह से थोड़ा सा आप देखोगे जो बेस मेटल थे ऊपर गए थे एंड वॉलेटिलिटी बहुत ज़्यादा थी। इसलिए थोड़ा सा वापस रिट्रीट कर दिया है गोल्ड और सिल्वर ने। देखो जो चाइना में वायरस स्प्रेड हुआ था, इंडिया में भी उसके कुछ केसेस आ चुके हैं ऑलरेडी। देखना पड़ेगा किस तरह से वो भी इम्पैक्ट करता है मार्केट को। इन लोगों ने लाइक नहीं किया, लाइक जरूर करें। ये लेवल को रिमूव कर देना नेचुरल गैस का, ठीक है। इसमें नीचे देखो ये लेवल काफ़ी अच्छा रहेगा, ब्रेकआउट हुआ था, रीटेस्ट पेंडिंग है यहाँ पर 298 टू 300 के लेवल पे, और एक मेजर रेजिस्टेंस ऊपर 338 39। बाकी क्रूड ऑयल पे नीचे एक सपोर्ट बहुत अच्छा है 6280। अननेसेसरी कोई न्यूज़ नहीं आती है तो दैट इज़ गुड। नहीं, वो आपका एजीएस निफ्टी पुल बैक कर गया है ना। इंडियन मार्केट तो क्लोज हो गया था, पुल बैक किया नहीं, बट आपका एजीएस निफ्टी पुल बैक कर चुका है। 100 पॉइंट गिफ्ट निफ्टी ऊपर जा चुका है करंट लेवल पे। आज तो प्रॉफिट बुकिंग थी, काफ़ी अच्छी प्रॉफिट बुकिंग थी हाई लेवल से। एक ही नेगेटिव न्यूज़ थी, इसकी वजह से मार्केट का मूड बिगड़ गया। वो जो केसेस थे एक तो चाइना से आए हुए, उसके वजह से मार्केट थोड़ा कुछ ज़्यादा ही गिर गया। बाकी अभी ये जो टैरिफ वाली न्यूज़ है इसका इम्पैक्ट तो कल होगा. लेट्स सी कल किस तरह से मार्केट रिएक्शन देता है. कहते हैं लास्ट 45 मिनट की कुछ न्यूज़ लेटेस्ट.
News when you want it with Bloomberg News Now. I'm Amy Morris. Canadian Prime Minister Justin Trudeau will resign as leader of Canada's Liberal Party and says he'll also resign as Prime Minister.
I intend to resign as party leader, as Prime Minister, after the party selects its next leader through a robust, nationwide, competitive process.
Trudeau says he will stay on as Prime Minister until his successor is chosen. Canadian Parliament is suspended until March 24th. Michael Barr, the Federal Reserve's Vice Chair for Supervision, plans to step down from that role. He says he'll leave that job February 28th unless a successor is confirmed earlier. He plans to continue to serve as a member of the Fed's Board of Governors. Bloomberg's Michael McKee says that makes this an interesting move.
He's not resigning as governor, and there are no openings on the Fed, at least not until January of 2026. And so the incoming administration cannot name a new person to the job. They could elevate one of the current governors to the job.
Barr's departure further clouds the future of U.S. regulators' landmark proposal to force the country's largest lenders to hold significantly more capital to buffer against losses. President-elect Donald Trump is denying a Washington Post report that his aides are considering narrowing his tariff plan to only apply to limited specific critical imports. Now, this new reported plan would target tariffs to goods from all countries where there are national or economic security concerns. That's a significant narrowing of Trump's original 10 to 20% universal tariff proposal. Bloomberg's Tyler Kendall tells us Trump's aides told the Washington Post the president-elect is considering a more scaled-back policy.
It's really maybe working towards appeasing to some Republicans who had previously expressed concerns with President-elect Trump's tariff plans. Think Midwest Republicans such as Mike Rounds or even Senator John Thune.
But Trump says that's not the plan and that his policy will not be pared back. The uncertainty around Trump's tariff plans has caused some stress in the global trade system. The Bloomberg Dollar Spot Index now down 0.7%. Trump has also asked a New York appeals court to delay his hush money sentencing hearing that's set for January 10th. A spokesman says Trump is trying to have his guilty verdict tossed out as a result of his election victory. Federal Reserve Governor Lisa Cook says policymakers could go a bit slower with interest rate cuts, citing a sturdy labor market and lingering inflation pressures.
Since September, the labor market has been somewhat more resilient, while inflation has been stickier than I assumed at the time. Thus, I think we can afford to proceed more cautiously with further cuts.
Federal Reserve Governor Lisa Cook. And we're going to learn more about that labor market with more U.S. economic data on tap this week. Bloomberg's Vinny Del Giudice with a preview.
The Labor Department issues December's jobs report Friday, and most Wall Street forecasters anticipate moderation after November's hefty gain of 227,000. Bloomberg Economics is an outlier, saying it sees recent trends fueling a much larger increase, topping 250,000. Case in point, weekly jobless claims are an 8-month low. Vinny Del Giudice, Bloomberg Radio.
Disney and Fubo have agreed to combine their online live TV businesses, creating the second biggest digital pay TV provider. Disney says it will fold its Hulu and live TV business into Fubo, creating a new venture that will be 70% owned by Disney and the rest by Fubo. Fubo shares right now 168% higher. And we do check markets for you all day long here at Bloomberg. The S&P 500 up 1.3%, NASDAQ up 1.8%, and the Dow is up 0.8%. The Russell 2000 Index up 0.9%. The 10-year Treasury yield at 4.61%, and the 2-year yield at 4.25%. Today is the first rush hour for New York City's first-in-the-nation congestion pricing program. Drivers now have to pay $9 at peak hours to enter Manhattan south. south of 60th Street. Jana Lieber is CTO of the MTA and says other cities may be interested too.
They all call me and they ask for information because they're all taking a look at it. Cities all over the United States have traffic problems like crazy, and it's crushing their economy and their development pattern and their appeal to employers.
MTA CEO Jana Lieber. Snow continues to pile up in Washington, shutting down federal offices and schools. That winter storm snarling air and road traffic, knocking out power in 6 states. Bloomberg meteorologist Rob Carolyn is keeping track.
The areas that are getting the snow have been so snow-starved the last couple of years that, this is a big deal just because it's snowing. It hasn't done it the last 2 or 3 winters.
Bloomberg meteorologist Rob Carolyn. And that's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
There are 2 kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get